Yo, I figured out that on YouTube, a live stream can only get uploaded to your channel after it's been recorded if it's under 12 hours. And I was live the other day for like 19 hours, and it never got uploaded to my channel, which is kind of an L. So um, I plan on being live for a long time today. So I'm probably just gonna like end one at like 12, like 11 hours in like 50 minutes, and then I might start a new one, or I might just end one at like 11 hours or so, and then take a break and then just start the new one. But we'll see. We'll see what happens. But I'm planning on being live for a lot. Just be backtesting for a lot today, and yeah, we're gonna just get right into it. I have a trading view tab open, and yeah, we'll just vibe. I'll sit here. It's kind of early. It's kind of early. We have like about 6 hours until market opens. So we're just gonna backtest until then, and then once market opens, I'm gonna hop on lot, or we're just gonna we're gonna forward test and just tape read, and that's gonna be my plan with this. Like just tape reading when markets open, and then back testing when opportunity isn't there or I don't want it, like lunch hour in the PM session, and then I might just hop in occasionally and just see what price is doing. Yeah. Okay. Let's get to it. Yes, sir. Dude, I was kind of pissed. Honestly. I had like a 19-hour live stream that just never got uploaded, and I actually wanted to like record some stuff that was in there because I thought it was some stuff that I wanted to have, and yeah, it just can't get uploaded to my channel because it's over 12 hours. So now I know. Well, where were we at? Did we complete this day? But yeah, look at this day. Oh my gosh, my nose is already. We have a market maker sell model here. Absolutely beautiful. Oh yeah, I kind of want to make a slideshow over this. I'm gonna make a slideshow over this. I'm gonna make a video on this. It's a good model. Here, let's go to slides. I don't know what happened. Like this, like all changed. At 10 a.m. we put in a reversal. 220 we put in a low day. Right here at this sell side liquidity pool. Right. All of a sudden that imbalance. Or do we even take that liquidity pool? I don't think we do. We end up putting in equal lows. Oh, is that the actual low? 25. A tick off there. Standard deviation with those bodies. I never really use. I mean, I guess like you always got to use body standard deviations as well, but I don't really. How about let's look at this whole. Oh, oh, that's pretty close right there. And this is after completing a market maker buy model. Who? Should I go over the market maker buy model first? Actually, Loki, I okay. We pretty much come back to equilibrium with that. Silver boy at 75%. No stop on in that fair value gap. This is where we have our terminus gap here. At equilibrium, we have what? A measuring gap here. Do we have breakaway? Lower time frame? Oh, yeah. Nah. From the breakaway gap to the measuring gap. I don't know if I can trust that though. I feel like that's cherry picked. From the breakaway gap to the measuring gap, that's -3. Oh, pretty much that high, but that feels a little bit scripted, you know. Like the main standard deviations I stick to is just last manipulation leg. Pretty much the high there. Then the first retracement, which is like the what we don't really consolidate, or we don't have a stop hunt around 50% of this market maker model. We don't. We don't have a stop hunt. This could be a stop hunt for like more continuation higher. We still have like a daily for value gap. Of course. From this daily range high to low. This BPR here. We came back into this BPR here. Now, but let's look at this market maker sell model here. So, where's market open? Well, we open up here at 9:30. And then we have a Judas swing higher to manipulate to take buy side. Is that at the 75%? Oh no, this is 75% of that dealing range here. Did I do this standard deviation? No. And then boom, change of state delivery. We don't come back up to this. We recommit in what probably a new day opening gap. Then we get displacement. Come back. Institutional order flow entry drill because we have a fair value gap that overlines with the fair value gap here. So this is a balanced price range. So this for value gap is balanced. So we're just gonna come into this and just displace lower. Then we also have this candle here. It acts as a distribution block. I'm from Colorado. The distribution, and then doesn't really look. Maybe we might redistribute off of this wick here, off of this block there, but we originally don't respect the breaker. What about this? I feel like I tested this last time. Yeah, we don't. About 15-minute. Let's look at 15-minute change of state delivery right here. Let's look at 15-minute mean threshold of this guy. I mean, yeah, the wicks are respecting that right there. We have a tiny imbalance right there. Tiny imbalance. We have a big imbalance right there. Look at cause for encroachment of this new day opening gap. Whoo-wee. Whoo. Respected perfectly. Displacement. OTE. Sorry, I don't know what that was. Displacement. Then we have another imbalance here. Oh, that was one that we were talking about. And then look at new day opening gap respected very nicely. Then boom, displacement. Okay, this is a new week opening gap. This green box. We redistribute in that with this. Then we come back all the way to just create equal lows, so then reprice higher. Do I have a ES tab open too? No, I don't. Whew. This is gorgeous. I don't know what else to say. What time does this happen? 10:03. We put in the high of this. Where is London low? Where's London low? London low. London low is right here. Right above. Look at where. Right above new day opening gap. That could be a good target. Bam. Right there. We have liquidity generated right above a new day opening gap in a market maker sell model. Oh, that's like lunch meat right there. Boom, and then come back up into this. Looks like barely tick it. Cause you have this for value gap over there. Then we come back down. We just barely put it in a low. I would assume that ES might have a new day opening gap right there. And then we come off the low, we close, rebalance this, then come back, and then we do like some little whipsaw there. I can't go to 1 minute. That's why I don't like trading views sometimes. Well, I don't. $10.50 macro. We start our shift to sell side delivery here. We reprice up. Hey G, saw you grinding stream for too long. Keep the grind. Love that for real. Hey, appreciate it. Yeah, I was live for 19 hours like 3 days ago. It was day 4 of my series, and it never got uploaded because I'm pretty sure that your streams have to be under 12 hours for YouTube to post them to your channel. And I was a little bit upset because I really wanted to see that posted because I had some stuff in there like I kind of wanted to keep in there. Well, not keep in there, just have on my channel, you know, just for like maybe like later on in my life. But like it just says it's like still uploading, and it's been like that forever. And I looked up like what's the maximum hour for a live stream, and it was like 12 hours. So all right, so here we have Sunday to Friday, the current new week opening gap, and I want to see how we respect this throughout the week. I just want to back test this a little bit because the current new week opening gap, I want to see how we respect that. So today, I'm planning on going live for longer. I mean, well, realistically, it's like 2 a.m. my time. So if I go live for 12 hours, that'll be 2 p.m. and then I'll probably take a little break and be live at like 3 or 4, and go from like 4 to like 8. Okay, so we're now below that current new week opening gap. So we kind of just did damage all throughout that. Oh, this current PA. We'll look at this real quick. But if we look at where we're currently at, I don't even know if I'm really trying to trade this. Why ain't this working? Dang, my nose, bro. My nose. My hose, bro. Wait, low key, like, Forex respects new day opening apps. Oh my gosh. These are like ticks, though. Look at that. Random. Random, 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 random. We have a very small new day opening gap. New week opening gap. Sorry. So we didn't really have a new week opening gap this week. I don't know what the move is right now. I want to backtest for a little bit. Backtest, and then I'll watch some lectures, and then live trade, and then same stuff. Probably backtest, watch some lectures, and then do it tomorrow, and then do it the next day, and then do it the next day, and then do it the next day. I'll be right back. I'm gonna grab a little snack. And at 9:30 we get expansion. Look where we open up at 9:30. Right here was no new week opening gap. Where do we come back down to? And then we like chop around for a whole hour. A whole hour, and then we get initial push up to take buy stops. We don't take this high. We don't even refer to it. It's not like we have a new week. We're kind of respecting that. Fair value gap in, fair value gap out. And we liquidate these lows here. Right, that mitigation. Same thing. Institutional order entry drill. As we're within a breaker here, and we're within a balanced price range. We have fair value gap in, fair value gap out. We have these down close candles here. Boom, respect. In a new day opening gap. Next day. I'm not journaling right now. That might be a bad thing. Whoa, 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 whoa. 25% of that dealing range. Oh no, that's cherry picked. There's no way that's real. New day opening gap, that might be cherry picked. There's no way that's real. Okay, we get volatility before market opens here. It's not even 9. Okay, I think we're in a deep premium here. We might get a stop on it here. Or I would like to see a possible. Alright, it's about to be 9:30 here. We've liquidated lows. We're in a new day opening gap here. Let's just kind of see what happens. Oh, constant encroachment. I don't know what to say if this holds. I mean, it holds temporarily. Then we refer to that one. But look at that delivery right there. Overall, yeah, we do have kind of bearish market structure here. We come back, pull back in balance, and then we have a new day opening. I don't know if y'all can see that. I don't know. There's a bunch of stuff in here, but I mean, I don't know, man. I don't know what to say. We're in this new day opening gap right here, but then we just come up to this imbalance here, into these up close candles, into this new day opening gap. $9.30 we open within a new week opening gap. We expand higher, and then immediately $9.50 macro. We just have a reversal there. There's not really an entry offered either. Like, not really. Here I get in, here I get out. Balance price range. We don't even touch this again. And then we just get boom. How many points is this? I'm curious. What we offered here. Only 112? Well, only. Okay, that's crazy. What was I expect? I was expecting like 1,000. Let's look at this here for this high to this low. Let's get some possible deviations. Oh yeah, yep. Like 1.5. Let's see if this one has a. Negative 2.5 projection. Let me just consolidate for us today. Oh, NFP week. I just want to go to NFP, honestly. Let's just go straight to NFP because I want to see if I want to see how that delivers. We have a little classic buy day there. London putting in the low of the day, London putting in the low of the day. And then we get New York continuation here on this Wednesday. Right within that new week opening gap. Displacement. 10 a.m. Kind of. Displacement higher to upset low resistance liquidity to then come back down to take this and come back higher, reprice this order block to then expand higher to then come back to look how equilibrium access support there. My nose. I apologize if you're watching me just blow my nose all stream. I apologize. Okay, we barely purchased high here. We have accumulation overnight manipulation at 8. We break down imbalance right there. Trade right at 9:30. Big explosive movement here to liquidate sell side right here. Whew. Change state delivery right here. I'm gonna count this as like an order block right there because I want to use this technically is your change state delivery right there of that candle high or that body. But I like to use the big beefy candle when I'm looking for order blocks. I don't know, man. Oh, beauty. Beauty right here. Beauty on display here. We come right up to this up close candle here. Wait. Almost cause culture of that. And then where's low resistance liquidity? Well, if we're looking here, I mean, market opens right here. What are we gonna do? Where is low resistance liquidity? Well, we have this trendline phantom here. We just liquidated buy side here. We've liquidated this buy side. All of this buy side's been technically taken here. We could have SMT, which could help the bias a little bit more. I would assume that we're gonna try to reprice to sell side right there. And then we have this. Is there a fair value gap over here? Yep. Right there. Notice how we left this fair value gap open too, like by a tick. And then we redistribute it. We redistribute within it. We have a fair value gap on this side here. Do we have a new week opening gap there too? No, we don't. We have this new day opening gap right there. Alright, I apologize, y'all. My nose, I can't help it. We accumulate right here. That's kind of a suspect bottom, though. I'm not gonna lie. I wouldn't say, oh, this is the bottom. Then look at new day opening gap right there at 1. New day opening gap right here at 210. Oh, yep. Let's look at the 2-minute here. Can we get 1 minute? Hey, thankfully it doesn't like freak out. Usually. Oh, look at those wicks right there. I don't like this though. I really don't. This delivery is kind of sloppy. Oh, this is Thursday before NFP. Honestly, I feel like it solely depends. Like Thursdays before NFP, I think they could be traded. Like ICT says never trade him, but I think that's just his personal conviction. But also, I'm gonna respect that. I mean, yeah, this happened to be a nice day, but it's not always like that. I was just about to stop it. I mean, even here, I would look for manipulation, but we just straight distribute from there. Come all the way down to take sell side here. We left equal lows. How'd that new day opening gap, new week opening gap work? We break through it, act as resistance. Then we never break through it. We use it as resistance again, and then we finally get broken through it. Oh my gosh, bro. Can you take a look at EU and DXY? Sure, I got you. First, let me take off these. EU. Sorry, there's a bunch of stuff in my chart. I apologize. Oh, EU could be playing out to a script here. I want to see this mitigation get traded into. Oh, yeah. I like EU a lot. We have a. I want to see a big expansion day on EU. My target's this high. I want to see this high today. I would want to see this high at least today on EU. If we don't take that high, then I don't think that we want to seek new highs. But yeah, I want to see this become a breakaway gap. And then I want to see this mitigation get traded into. And that's exactly what we did today. Yeah, I don't think it's unreasonable to see this high. I had this in the market review if you weren't there. I wouldn't expect this to be an order block, but we could come back down. I don't like this as an order block, but we could come back down, find support. But I don't know. I at least want to see this high today. If that doesn't happen, then I'll be a little bit concerned. Because if we just create a consolidation candle, I don't know, we just had an immediate rebalance here. We're not creating a fair value gap here, so we should have explosive movement. If that doesn't happen and we don't want to see these highs within this week, we're definitely just consolidating. And then, like, what's the point of trying to trade a consolidation? I mean, you could be intraday scalper. Here on dollar, I'm bearish. I want to see this sell side liquidity pool. So we could rebalance up to this high here, or this low here. But it looks like we have a little bit of bearish momentum here internal. Yeah, I'm looking for lower prices on DXY. Oh, I should have went to a different tab. I just messed up my backtesting session there. Damn, bro. That's tough. That's tough. Yeah, of course. I mean, obviously, stick. I was trust your own bias. Trust your own bias. Like, I don't trade Forex, so trust your own bias. That's all I can say. Dude, I don't know what happened to Google. It, like, completely messed up my stuff. It usually just automatically signs in. Hey, what's good, Reno? See, like, now it's in light mode. I don't know what's going on here. That's probably in settings. Oh, whatever. I just want to backtest strong liquidity here around market open. All right, it's just not going to What's good? What's good? I would assume this might be FOMC. Yeah, this is FOMC. $230 starts the displacement higher. Here we have a mitigation block. Like right here, this could be a trade for 100 points. There's no doubt is that FOMC. We come back down to that fair value gap right there. Okay, at least it has my thing saved. At equilibrium, we have a stop hunt. So I would definitely like to see this high. New York Open, bullish. I would like to see maybe a new day opening gap. Here we have this mitigation. This should hold if we're bullish. $930 open. Liquidate these lows. We just have low resistance liquidity that rests here. We have a nice imbalance above market price up here. Where's my toolbar? Do I not have a toolbar? Bro, why did it do all this? We've had a SysD here on the 1 minute. We respected this. We now have propulsion. I want to see expansion here. $950 macro open. We offer buy side. I want to see. I think this high is definitely gonna be a draw. So we come up. We fall short of this. Now we're repricing lower here. We have a 15-minute imbalance here. Constant encroachment of that puppy. We don't end up respecting that imbalance. Okay, we could be in a sell program. Oh, it looks like we are in a sell program. Look at that. -2.5. Yeah, of course. It should be in the description. I mean, I'm not gonna lie. I'm not really active in it. I used to be a lot more active, but I'll be straight up. I just ain't active in my own Discord, and the reason is like I don't know. I personally want to have a dis. I would like to have a Discord where like I'm set and I'm able to provide value to that, but we'll see. Honestly, we'll see. We'll see. I personally, I won't delete the server, but I just won't be active in it because I think Discord's kind of like it's cool, but like also unnecessary at the same time. Like I feel like there's better Discord servers out there, and I know that. So like I try to walk around like my Discord server is gonna be like a good, like the best server, because like I know there are better servers. So we tease buy side. Oh, I was actually gonna mark this out. I swear. We originally have this drawn liquidity. Oh, that's a very nice rectangle right there. We originally have this imbalance that we come into, we draw into. That's your first draw liquidity. We fall short of that high. There might be a new day opening gap here, then we come back lower. Let's just test the theory, but I got a strong. I have a feeling that this is probably a new day opening gap or a new week opening gap right here that we just end up repricing, or we have an SMT here. Let's see if any of those are true. At when? Well, let's There's not an SMT with ES or YM, so I feel like there's something like that. I've never seen a free ICT Discord. I would recommend looking at T Trades. I would recommend joining T Trades Discord. I mean, that's the Discord that I don't really use Discord that much. I'll use it occasionally, but I'd recommend T Trades Discord. Just look up T Trades community, or like go to T Trades YouTube, and then you'll be able to find his Discord. Where are we at? We're at March in this contract. The 17th. Or no, we want NQ, not ES. No, it's not. So I don't know. That's kind of like a. I don't know why we put a low in here. But yeah, I can tell why we put a high in there to imbalance with that new day opening gap. Maybe negative 2.5 standard deviation. Yeah. Then we get displacement higher. Back towards the draw liquidity. Right here we have a 5-minute SSD, 5-minute SSD, 5-minute SSD right there. Then we have an order block here. Then we have a propulsion block right here. I'm not even noting this down close candle. And then we have a propulsion that gets respected, and then yeah, we see buy side. 32.5 maps to liquidity. I'll check it out. Yeah, of course. I would say definitely join T-Trade server over my server 100%. 100%. 100%. Like, I'm gonna be straight up. I would not join. I might. Like, I'm not gonna full on delete my server, but I don't really use it, and I feel like it's kind of corny for me to have a Discord server when I like ain't like that, you know. Maybe in the future I would like to have a Discord server, but even then I feel like it's a little cringe because then I'm just trying to sell a course. Because like I don't really want to try to sell a course or sell a Discord, but I tend to just have free stuff and just record my content. Hopefully one day I make it. Hopefully one day I do make it, and like, I gonna plan to charge for all that because it's just gonna be on YouTube because I'm really showing y'all everything that I've gone through pretty much while going on these live streams. It's all on YouTube. Like that's all you need. It's all on YouTube. It's all for free. It's all for free. All of it. You don't need use Discord servers. Like I've been in Discords that I paid for before, and I'll be straight up, they're honestly not worth it. At least the ones that I were in. Like just watch ICT's content. That's what I would suggest. Just listen to his lectures. Maybe you might not like that, but if you're trading ICT concepts, it's literally for free. Okay, we're kind of just consolidating here. So, we could have a volatile New York session. We still have these lows here that exist. I want to see these lows. This is 925. This is 925. Wow. We do have volatile New York session already. Let me take that high. We come all the way back down. We probably form SMT here. No. I don't know. This is suspect. This is not like some conditions I want to be trading in. No, sir. No, thank you. No, thank you. No, thank you. It's only 200 points. I always say that it's only 200 points, but yeah, that is kind of a. I mean, like look at all that consolidation overnight, all that consolidation, all of that. Oh, bro, don't get me wrong, you know, I'm just like I'm not in any way in a position to be able to give advice to other people, 100%. Like this is just me backtesting, you know, myself. Wow. Okay, but look at that. We had we consolidated all overnight, priming up for this big expansion. 400 points in a session. Or in New York. Wow. 3%. That is crazy. Oh, I wish we repriced right to that. I'm surprised we didn't. We almost came down to that high. That could have been real support because it aligns with the fair value gap. But we just have an institutional order flow entry right there. Boom, to buy side. And then we just have delivery higher here. Okay, I think it's time for a. Why is it doing that? I'm trying to find a lecture for us to watch, for me to watch.
pre That's what that is.
Oh, my headphones are almost. I didn't charge them last night. Let's hear ICT. Let's see what you got, brother.
Well, good evening, folks.
Good evening,
Taking a look at
Father.
the E-mini S&P futures contract for June 2023. This is our daily chart here. And I want to cover some of the points I'll be looking for tomorrow in terms of key levels and areas of interest. All right, so here is the premium.
Hold on, I'm trying to pull this up. March. Oh, this is April. It's like April. Daily BISI, and then he's marking constant encroachment of this. Or daily SIBI. And he's marking constant encroachment of that. A wick right there.
Fair value gap, sell side imbalance, buy side inefficiency, or SIBI. And consequent encouragement, premium wick high, midpoint level there. The imbalance here, which is a SIBI, essentially is equilibrium between this high and that low. So we have that noted here, just in the light gray area. Discount, consequent encouragement of this wick, so midpoint of that, that's what's annotated. And the fair value gap over here, because we cut through candles, we're not supply and demand. This level is still going to be useful going forward, just as well as this one is as well. Dropping down into the hourly chart here, you can see the buy side liquidity pool, an interest in that tomorrow. We have a breaker here, we have a low, high, lower low, trading off of that old imbalance on the daily chart, the discount, fair value gap. Breaker, extended through, Then we have
The constant encroachment of that wick lines up with that imbalance low. We have buy side liquidity resting above that. It's consolidating there, so see if it wants to drop lower into that breaker.
have a small little fair value gap in the form of a buy side imbalance, sell side inefficiency. Trade down to consequent encroachment and also the breaker there prior to rallying up, taking out short-term relative equal highs, which is buy side liquidity. Market trades back down in to the high of the fair value gap here and basically just consolidates into the close for today. So these levels, I'll be having an interest in that going forward into tomorrow. In the 15-minute time frame, you can see we had a buy side liquidity pool here, as I mentioned.
Oh, kind of muddy PA. We're consolidating. Why is that though? Why are we consolidating? Are we at equilibrium of a dealing range? I think we are. We're just above it. We're in like equilibrium of 0.5 to 0.75. Overall, let's zoom in. Let's see new day opening gaps. Oh, we're within like 5 different new day opening gaps. That could be why.
Relative equal highs. The market traded above that. And then once more here, we talked about that live on Twitter. I was looking at 4034 buy side.
At 9:30.
And inside of
and
that,
we broke down. We have a BPR
high,
that we respected.
Low, higher high. Down close candle.
Excuse
here.
me. Look at this BPR that
That's
we
your
respected.
breaker. Extend that forward.
Oh.
See in the last hour. We'll take a closer look at that as well. But we'll roll it back into the morning session right after the 9:30 opening. Note this discount
breaker.
wick. Consequent encroachment.
Oh, that's beautiful. Like to the tick right there.
Beautiful delivery there. And again, the
That's what I'm saying. On the
hourly chart doesn't look so much like an imbalance on the 15-minute time frame, but we work top down. And you can see how we touched that bullish breaker here. Again, go back through the video.
Hold on, what breaker? Oh, I see that breaker high right there.
Screenshot your charts from the video playback and transpose that to your own charts. And you'll see what it is that I'm showing you here. It'll be much more meaningful should you do it on your charts, not just looking at mine. Especially by watching tomorrow's live price action. 5-minute chart here. Opening price right here at midnight. That's this level here. So New York midnight opening price. Ran above buy side here, and I mentioned we would be looking for 4034 buy side. And it rallied up into that.
We have volume imbalance right here.
All of this is a Judas swing. We're moving above the New York midnight opening candle, opening price. Rallies up, buy side. Then we're going to be looking for 4018 sell side, which is right below this low here. All of this back and forth price action, finally giving up the ghost and trading back down into old order flow in the form of that discount wick, consequent encroachment. And we're going to dig into a little bit more detail. And again, you can see the breaker extended it through.
Oh, I almost delivered the consecration of that wick. Not quite. We do have a fair value gap with the low right there. Institutional ortho energy drill. And we delivered to that consecration of that wick. And then we come back up. It's that breaker. We change to delivery. And then we're in a buy model there. And we also take a low here. I know I'm not showing this. I'm just doing this myself.
Throughout the day to the last hour trading, which was influential once more there. All right, getting down to the brass tacks. I have a 1-minute chart here.
I definitely cannot get a 1-minute chart.
It's imbalance here. Extend that through again because we're not supply and demand. We cut through candles.
Oh, that's beautiful.
That range.
Is that in Oh, that's outside the 950 macro that we trade into that. $950 macro, we do put a high in though, and then we start delivering sell side. 950 starts the sell side delivery.
I projected forward and showed that on Twitter today as well. We talked about how
Like
4034
950
buy
is a
side
high.
would be in contention, and volume imbalance. I shared this on Twitter as well. Right in here, we were looking for 4034 buy side, so really nice run up into that for a 5 handle run. Then stop dead in its tracks at the macro at 950, which is the high candle here.
That's what I'm saying.
10.
That's what I'm saying,
So that's our
Michael.
first macro after the opening bell at 9:30. Algorithmic delivery takes it right into buy side, and then at that time, we took our attention to 4018 sell side. The market trades back down, works inside that old imbalance. We cut through candles, and there's another volume imbalance right here. Again, draw that out in time. Hits it as resistance now. Trades softer. Another imbalance. I mentioned this real time in Twitter as well. Buys the candles, more or less respecting majority of that range. And then we had this one more little return back up into the original imbalance I mentioned here, inside of that bearish breaker. Okay, so again, all of this may be confusing. If you're just casually watching and you're not really trying to see where these levels are derived from and not transposing them on your own charts, I promise you're wasting your time. You have to do the work of taking the information.
I wish I could see a 1 minute chart. I mean, I can see it. Oh, I can see a 2 minute chart. It's not a 1 minute. Where's she getting that breaker from? Oh, I see. It's the 15-minute break. Okay. Oh, so he's not using this as a 5 minute breaker. He's not using this as a 5 minute breaker. He's just using that as noise. He's using the 15-minute breaker instead. Oh, gotcha. Let's get mean threshold of that. Oh, beautiful. Mean threshold is what it gets delivered to on this candle right here. They break down. We have an order block right here. We reprice to. We come back. Institutional order flow entry drill right here. Displacement, consequent encroachment. Looks like of that wick. Boom, and then we have a current new week opening gap right there. Ah, beautiful. Current new week opening gap. Oh, and then it acts as support later on in the day, and then we deliver right up to a new day opening gap, and then we right back down to a new week opening gap.
Placing on your charts, and then
This high right here is a new day opening gap. We deliver right to that.
Through top down meaning from daily chart to hourly chart to 15-minute time frame to 5 minute to now 1 minute. So the market sells off here, attacks the sell side there for another 5 handle. So we had 5 handle run there and a 5 handle run there. So that's 10 handles I mentioned live on Twitter as it delivered. And then I said, okay, I'm done. I'm going to take my attention away from the charts. Trades back up into the imbalance here. So that would be an optimal trade entry. And also return back into a fair value gap. Market sells off, institutional order flow entry drill inside this area here. Doesn't fill in that gap, in other words. The market aggressively trades lower. We have this wick in here. Okay, so it's a discount wick before trading down to opening range gap low. And I mentioned this on Twitter as well. I showed you the chart, how to derive that information. And the market comes back up, hits that beautifully.
Yeah. Opening range gap below. I'm trying to see if that's like a new. No, it's just.
That's algorithmic price delivery.
Sure is.
Sells off once more and goes down into the opening range gap low. And then ultimately later on, trades down into that old discount wick consequent encouragement, which is right here. And the current new week opening gap high, new week opening gap consequent encouragement, and new week opening gap low, shown here respectively. Here is the opening range gap shown to you at the 9:30 opening price, and with regular trading hours, you'll see that down here. If you have live data, you can toggle this. It'll be ETH, which is electronic trading hours, or regular trading hours, which is the RTH here. When you toggle that, it's going to show you where we closed the previous session, right here, and then we wait for the 9:30 opening. There's your opening range gap.
Oh, we do deliver right to that.
You can see how we performed there. We had initial drop down. Drop was followed by the run up into the buy side I mentioned real time. We hit that right at the candle high at 9:50. That's the algorithmic macro that I teach, which is 10 minutes to 10, and it continues to 10 minutes after 10. Within that 10 minutes prior and 10 minutes after the 10 o'clock hour, there will be a price swing that originates and starts there, and it'll run for liquidity. Right at the candle high at 9:50. That's the algorithmic macro that I teach, which is 10 minutes to 10, and it continues to 10 minutes after 10. Within that 10 minutes prior and 10 minutes after the 10 o'clock hour, there will be a price swing that originates and starts there, and it'll run for liquidity.
There will be a price swing.
We take buy side here, so where's it going to go next? Sell side.
And whoa, we on the same wavelength here.
All there. You're welcome to go back and look at all that. I didn't do too many tweets today, so it'll be easy to track it and see it. And market trades, again, back up into that fair value gap I mentioned here.
Maybe mean threshold that order block too.
Take the tweets also and copy the link from the Twitter. And then right mouse button on a trading view chart, on a 1 minute chart, it'll plot my tweet real time right on the minute candle. You can see what I was talking about at the time in proper context. It's a very useful way of following along the logic, even after the fact. Like if you have to go to school, run a business, or working, or sleeping, you can go back and do all these back testing ideas here.
Even though this was like consolidation, like on the 15-minute, this was good price action.
Okay, so my version of back testing is all of this annotation. It's not pushing a button with a market replay type thing, nothing like that. That's a forward walk test. Before you would do a live, you're trading with real time and also demo. So there's a step between that, and that's not what we're talking about here. This is back testing, my version of it, which is studying the price action, looking at all of the.
That's what we doing.
Thing. My version of it, which is studying the price action.
Back testing is studying.
Looking at all of the. Scenarios and mapping out the idea with all this empty space here and here and over here. You'd be filling that in with my version of it, which is studying the price action, looking at all of the scenarios and mapping out the idea with all this empty space here and here and over here. You'd be filling that in with your own chart, explaining what this return back to this consequent encroachment of that discount wick now acting as what? An inversion level resistance. Beautiful delivery. Now, this is what I tell the skeptics that watch this and they see a rectangle on my chart and they think right away it's supply and demand. It's not. For the folks that say it's support and resistance, it's not. This low, why did price not go just to that level right there and stop and turn on the dime? If it's support broken, turn resistance, why did it go up to the level I teach? Right there. Because the market's built by algorithmic price delivery, not retail logic like support and resistance. Okay. The market then trades into the opening range gap low, beautiful delivery there, and then consolidates going into the lunch hour. Speaking of lunch, here we have it. The market trades again off that consequent encroachment of that wick down into the opening range gap low. If we can notice,
so that's an deviation though. Oh. You've done it again. And the last manipulation move, standard deviation lines up to that high, which is new day opening gap. Oh,
opening range gap low. When the market opens higher than where we closed on the previous session, meaning where we settle and where we open at 9:30 the next day, that is your opening range gap. It may be a gap higher or it may be a gap lower. In this case, we gapped higher. So the opening range gap low is the previous day's settlement price or close. Okay, and then the difference is where we open at 9:30. The gap's higher when they open at 9:30 from the previous day's settlement price. Chances are we're probably going to look to see it trade back down into that range. It can go all the way down to the opening range gap low or beyond it if there's something else that it could reach for a discount. I've shown you this before. We have a low, lower low, higher low. This price run here, take your fib, drop it on the low, up to that high. It projects a swing high of negative 1.5, which comes to the price level of 4027 and 3/4. Extend that to the right. 4027 and 3/4 is the actual high tick of that candle, and that candle in the last hour of trading. Inside of that first fair value gap I mentioned. That's the rules, folks. That's how it's coded. And I know it doesn't sound fun when I keep repeating it, but at some point you're going to have to realize that these things are not random. 1.5, which comes to the price level of 4027 and 3/4. Extend that to the right. 4027 and 3/4 is the actual high tick of that candle, and that candle in the last hour of trading. Inside of that first fair value gap I mentioned. That's the rules, folks.
That's nice.
That's how it's coded. And I know it doesn't sound fun when I keep repeating it, but at some point you're going to have to realize that these things are not random. Prior to that run up in here, we have a shift in market structure after 1 o'clock. Here's 1 o'clock. So now what we're going to do, we're going to run for the stops. Prior to what? During and prior to lunch. So we have all these buy side here, and all the way back up above here. So we're in consolidation right now in the daily chart. That's the reason why we're seeing these types of price action. Fair value gap, high to low, discount, trade down to it. Look at the bodies respecting it. Yes, we have a wick, and we have a wick there that just about closed it in, but the bodies are respecting the high end of that. That's beautiful.
That's also the current new week opening gap constant growth. I don't know why you didn't throw that in there.
Price runs, takes out buy side, digs into the imbalance. Now, using this price run here to measure that projection, from here to here, taking out buy side here, that's suggested that that's a potential run. But if we go back to the old high back here earlier in the day at 4034,
and we hit 25% of that dealing range right here. This is 25%, which also would be like OTE, right? Yeah, that would be OTE right there, optimal trade entry.
Down to that low, but here that's suggested that that's a potential run. But if we go back to the old high back here earlier in the day at 4034, down to that low, it would be better for us to dig up into a premium because we're in consolidation. Buy side, buy side, buy side, and also with the swing high here and the old fair value gap. So there's a lot of confluence pointing to that 4027.75 level, which it delivers perfectly to the tick. 3 candles prior to it giving up the ghost. Also note that that run up here is above the New York midnight opening price. Okay, so you have to know what time it is in New York local time. Right at midnight, New York local time, that price, you want to have that annotated on your chart. Best short positions are going to be above it. Best long positions are going to be below it. That rule will serve you extremely well in the future. And finally, this is the last hour of trading for the New York session, or final hour New York PM session. Here's that 4027.75 level, and the macro that starts at 250 to 310. That means there's going to be a move that begins there. It's up in a premium. It's going to seek what? Discount. Here's your price low in that run. Equilibrium would be right in here. So right below that low would be nice. Interestingly enough, it trades down into that and retraces back up into the bearish breaker. This breaker is the one I showed you at the beginning of the video, and we're extending it obviously across the entirety of the trading day. So we have this break lower, swing lows taken, trades back up into this candle right here. That candle's high is the exact high of that one and that one. That is institutional order flow entry drill. All it has to do is match that price.
This also is 25% of this dealing range right here. 25% of this, or 75%.
So you could be a seller.
There you have your breakaway. There you have your. You don't really have a measuring gap there.
At that candle and that candle. Looking for a price run below that low here.
Old area of distribution. Old area of distribution. Or a new area of distribution.
And that low over here. Relative equal lows here. That's where sell side resides. And again, we have the opening range gap low over here. which is previous settlement price on Friday. And then we have, again, repricing to that inside the last portion of the final hour of PM session trading. Let's go back into the details here. Trading back up into that bearish breaker with also institutional order flow entry drill after hitting the forward 027.7.
That's 25% of the dealing range too. After hitting a new day opening gap, we break down displacement. We have these these down close candles. That's your breaker, or mitigation. Well, technically this is just mitigation, or no, this is breaker because we take buy side there. But this is your breaker here. We come right into that breaker right there. We reprice where to institutional or financial, like you said. Boom, come back down. Volume imbalance. Oh, beauty. That's also is a 2-minute order block right there that we reprice to right here. 2-minute order block. Displacement lower. Constant. Oh my gosh. Dang.
5 level perfectly. That's a nice short here. Volume imbalance. If you missed it, it trades back up into it there. Breaks lower. We have a wick. This is a discount wick that's going to act as an inversion level. So think of like support, broken term, resistance the real way. Then we have SIBI here, sell side imbalance, buy side inefficiency, which is a fair value gap, and I'm classifying it as what it is, a SIBI, S-I-B-I, sell side delivery. What's it inefficient on? Buy side. So we would expect price to deliver up to it. And look at that. Wouldn't you know it? It goes right to the tick price. Don't take my word for it. Measure that. Go in your time frame and measure the low of that candle.
I would, but I don't have a. I can't view 1 minute chart.
Exactly
I could on FX replay, but
inside of a bearish breaker. We have buy side here. We have high, low, higher high. That last down.
Wait, we don't reprice that volume. I was about to say maybe we have that volume balance too.
Close candle. Extend it forward. We have a SIBI and a consequent encroachment on that wick. Boom. Delivery. Perfect. Price breaks lower. Last up closed candle prior to this displacement is a bearish order block. Trades up into that once, twice, gives up the ghost, and again one more time, repricing back down into the opening range gap low for a final hour New York session trading opportunity. Just a beautiful PM session. This one here is like a centerfold. Also notice, again, we're trading above, right here, above that New York midnight opening price. Short at the breaker, short at the breaker, short at the volume imbalance, breaks lower, below this low here. So there's displacement. So now you can use what? You can use the 2022 model, which would be high to low, equilibrium. Here's your fair value gap. Trades up into it there. What's it going to aim for? Sell side, relative equal lows, and or the opening range gap low. And then boom. Just wonderful technicals. Just really, really nice to see algorithmic theory delivering as you see it here. Hopefully you found this insightful, and I'll talk to you next time. Be safe.
Bro, that's crazy.
Well, it's because
You get that for free. Hold up. I'll pull up this chart too. I do want to use this indicator real quick. Wow. Beautiful, 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 beautiful. What next though? What next though? I do want to watch another lecture, but I honestly don't know. I'm gonna take a screenshot of this.
Moving lower now, if it's going to move. Well, it's a good morning. It is a good morning. Hope everybody's doing well. So we are going to be discussing kind of like maybe a preview of what to expect going forward. We're 2 weeks away from the ICT live sessions that will be conducted on my YouTube channel. And I kind of want to build in the proper expectation, also ringing in how you as a viewer or listener or new student would take in this information to build a model, how you should properly build a trading model, and how to avoid the pitfalls that most traders, and like myself when I first started years ago. Good evening, folks. Happy St. Patrick's Day. Hopefully you've remained sober today. Didn't get yourself in kind of trouble yet. I've never been a drinker. I've never drank alcohol, but locally here, everybody's going nuts with it. They're dressed in green and dressed up like leprechauns and wearing kilts and such. It's madness, but I hope you're all doing well. I'm doing well today.
Yeah, this is gonna be good.
The topic of this one here tonight, when being right is no longer enough. Where are we going with this one? Where's this ride taking us? Well, one of the things that I receive a lot from students all around the world and comes up quite frequently is how to know when to take that leap of faith to start trading with live funds or a funded account. And while I don't have a definitive, this is how you know, it's more closely to the title of this Twitter space. When you're able to read price action and you can see it and anticipate it and know what's likely to occur next, and it happens most times, and you're doing it consistently, you're not impulsively going into the charts and trying to pick the next fluctuation just because you're bored. It's when you're no longer influenced about pursuing being right, but that line that divides that, where you no longer are satisfied with being right. So when you're no longer chasing that, I need to be right, I need to be right, it's just happening by default. That is, in my opinion, the clearest indication that you're probably prepared, at least the earliest stages of it. As soon as you start trading with funds or even a funded account, I'm sure you're going to have that magical experience where suddenly it really matters now. It matters if you're right. And then you start that whole process all over again, desensitizing yourself to the pursuit of being right. Now, right is I guess. Wrong is not necessarily bad, meaning that you can get into a trade, you can get into an investment idea, a setup, everything look like it's lining up for you. And as soon as you enter the trade, something just doesn't feel right. You give it a little time, and then finally, you see enough to know that what you're looking at is not a viable setup anymore. And you do what is appropriate. You abort the trade. You turn it off, close it, it's done. Whatever loss, whatever result, you accept it. That's being wrong. But that's not being wrong in a bad way. It's being right about being wrong. And many of you, like me and everyone else that's come up in this industry, in the beginning, when you're trying to do your analysis, you want your analysis to be right. Because you think that right is always profitable. No. Think about how many that's not being wrong in a bad way. It's being right about being wrong. And many of you, like me and everyone else that's come up in this industry, in the beginning, when you're trying to do your analysis, you want your analysis to be right. Because you think that right is always profitable. No. Think about how many times you were right about the direction, but got shaken out, stopped out, right about the trade idea, but didn't push the button. So you can be right and be wrong. So it's a matter of perspective. It's not a pursuit for you or me or anyone else that's in this industry try to tell the future with these candlesticks. It's not our endeavor to be right. Our endeavor is to be consistent, doing the same things that's been measured,
Wow, this is a good I need this, bro. I need this.
it's not a pursuit for you or me or anyone else that's in this industry try to tell the future with these candlesticks. It's not our endeavor to be right. Our endeavor is to be consistent, doing the same things that's been measured, studied, and has shown to provide a probability that usually ends up in what the past has shown, but that's not indicative of the future. That's that gray area, and you have to embrace not being.
Like, we're like 5 minutes in, and this is like already a gem. Already so much.
Things that's been measured, studied, and has shown to provide a probability that usually ends up in what the past has shown, but that's not indicative of the future. That's that gray area, and you have to embrace not being right all the time and being right enough. But there's a time when you get consistent with your outlook on the marketplace, your timing, your selection, bias, all those things they come in alignment. And when you no longer have any real concern, not that you are numb to it, because that's a totally different thing, but you're indifferent to it. Obviously, everyone wants to see the outcome be favorable for them, but there's this state of mind that you're going to reach, and you really won't know what this feels like until you finally get there. and I'll talk about how you get there in a few minutes. But for now, the way I identify it is when you have a trade idea that you've engaged, you're in the trade now, the market's moving around, and you are absolutely disconnected in terms of emotion or needing it to be right. And equally so, you're not worried, you're not concerned if you get stopped out. The second one I'm going to talk about first. The reason why you wouldn't be concerned about being stopped out is because you know, if you've been doing the backtesting, studying, watching real-time price action with me, you can see these things are predictable. They're based on time delivery. And these structures that come into the marketplace that present our opportunities and it may not be an opportunity that you have identified yet. You haven't found your model. That's okay. You'll find it. It'll come to you. But you don't worry about the outcome being unfavorable because you know that one transaction, that one idea that you're placing a laboratory experiment around, which is a speculation that you're looking for a displacement in price from where it is right now and where you believe it's going to go, and limiting how far it can move against you. So that stop out, if it happens, you're not worrying about it. In fact, you're completely indifferent to it. Meaning, if it does stop out, no big deal. If it runs to your target, no big deal. It's just one transaction. It's one thing that you're doing right now. The absolutely up to it. Meaning, if it does stop out, no big deal. If it runs to your target, no big deal. It's just one transaction. It's one thing that you're doing right now that absolutely has no power over removing you from your entire career. Let's flip the script now. As much as we are not concerned about losing, having a bad result, being stopped out, we're not worrying about being right. We're not worrying about it going to our profit target. We're not worrying about doing a full pull. A full pull is whatever size position you build up, you take all of it off at your target, and that's it. It's all or nothing. And while you're learning, it's important not to have that mindset. No matter who tells you otherwise, it's important for you to reward yourself incrementally. Over time, you'll know when the trades are really in your favor to do full pulls, where you don't take any partials, you're just managing the trade with a stop loss. But that takes time. It also takes time getting past the point of needing to be right. Because right doesn't equate to being profitable. It sounds like it's an impossibility because you to reward yourself incrementally. Over time, you'll know when the trades are really in your favor to do full pulls, where you don't take any partials, you're just managing the trade with a stop loss. But that takes time. It also takes time getting past the point of needing to be right. Because right doesn't equate to being profitable. It sounds like it's an impossibility because, if you buy and it goes up, you should have made money, right? But you know that doesn't always work like that. You get shaken out of it, scared, or stop loss hit. But you're right. Remember? It went where you thought it was going to go. And when you're no longer looking at those moves where you were correct and where you thought the market was going to go, you had the draw and liquidity correct, the bias was correct. You knew where it was going to react to. But something didn't line up perfectly, whether you were just a little late getting in or a little too early and getting stopped out and then too afraid to get back in. Whatever the factors are, when you are no longer worried about or concerned about being right about that trade, you have now the mindset it's needed really to do live trading with live funds, whether it be funded or your real money. But no one's going to be able to, and I can't do this for you, but no one is going to be able to tell you the proper timing for you to take that risk on. And it is a risk. But you need to have that desensitized state of mind where you're not
See, that's what I'll go. That's what I'll go live.
holding yourself to a scorecard of how many times I can be right, how many. But you need to have that desensitized state of mind where you're not holding yourself to a scorecard of how many times I can be right, how many times can I avoid being wrong. Holding yourself to a scorecard of how many times I can be right, how many times can I avoid being wrong. And many of you, and I went through this too, you're keeping score on your emotional commitment to a trade. Now think about that. You're measuring your emotional commitment to every trade you're putting on right now when you're new. What separates the trader that thinks like that from someone that's consistently profitable? They're not holding their entire career up by the results of that one transaction. They're not leveraging so much that even if it doesn't pan out, it is insignificant in the grand scheme of things. That one thing, that one transaction, that one idea, that one decision didn't materialize in a manner that was favorable for you. But you're not worried about being right. That state of mind is what I'm getting at with this particular podcast or Twitter space. When being right is no longer enough. See, right now in the beginning, everybody wants to be right. That's your scorecard. How many times can you be right in public? How many times can you be right in your private demo trading or tape reading? And you're building this idea, if you're doing it like this, you're building this idea of reporting to yourself as a scorecard or a report card on the basis of how many times you're right. When you make decisions in the average everyday life, the things that you want to see happen for you sometimes doesn't pan out like that. Something happens, traffic keeps you from getting into work on time. It wasn't your fault. You made the decision, though, to leave when you did. But you didn't know that traffic jam was going to tie you up. And then you may have some kind of repercussion at work. You were heading to work. You had good intentions. You were right about doing that, but you didn't get there on time. So you missed the mark. That's no different with trading. You're going to get up. You're going to start your day. Open your charts up. You're going to have a game plan. You're going to wait for the market to do specific things to line up a setup for you. And you're going to push a button. And once that button is pushed and you're in there, all control has been removed from you. The only thing you can control is the risk and how much time you stay in that trade. Everything else is out of your control. And it's interesting as a psychological experiment that all of you have the opportunity to measure yourself in. When you learn how to do what I'm teaching, it at some point becomes easy to do it in demo. You get confident that you can do it consistently. Sometime in the future, for you, you'll decide when being right is no longer enough. You'll want to trade. You'll want to do a funded account, or you'll want to speculate with your own live funds. And when you push the button then, you don't have that blank void of, if I'm wrong, I don't lose anything. Now you have, I got to be right. Because if I'm not right, I lose money. And now where's your mind focusing? You're worrying about the risk too much. There's a great deal of acceptance that's required for us to do this with real money. And that risk is, unfortunately, something you need to embrace. You can't shy away from it. Because if you are shy to risk, you can't do this in live funds. And a lot of people discover that they can't do it without going through some kind of growing pains. And some of that is very long and arduous. It's just daunting to get through for some of you. But you have to be prepared for that being the case for you. Because you're wrestling with wanting to be right again and not have that feeling of, if I'm wrong, it doesn't hurt. That's the reason why we teach to be completely bored. You shouldn't be excited about it. that goes to your target. Okay. I mean, are you going to work every day thinking, man, look at this. I got here again on time and I get to spend all these hours again for the man. I hope he appreciates me. No, of course not. It's just something that you do. It's a routine. But you need to make your trading just like that. And the only way you can get it like that is by completely desensitizing yourself to the outcome, making it all about, am I following the rule? Am I following the protocol? Am I managing risk impeccably? Are you doing everything to preserve capital first and foremost? Because if you're doing that, and your model is rooted in sound logic and things that I've been teaching and proving that exist in price action live, you have the best opportunity for you to submit to that process. And over time, this is why it's important if you ever make the step or leap of faith in trading with a funded account or live funds in your own brokerage account, you start with a very, very insignificant amount of money. And you go through that whole process again of desensitizing yourself. Don't make it about, I got to make a 5-figure withdrawal. I got to make $1,000 withdrawal. If you start putting time limits on your goals in something like this industry, it makes you impulsive. It ushers in fear of missing out and plain old-fashioned fear. You foster performance anxiety, and you don't realize it's going on, but you're doing it to yourself. So the reason why I teach something like this industry, it makes you impulsive. It ushers in fear of missing out and plain old-fashioned fear. You foster performance anxiety, and you don't realize it's going on, but you're doing it to yourself. So the reason why I teach the way I do is it gives you the best probability of finding yourself in that sweet spot mentally where you don't care what the outcome is going to be. You know what you're doing is rule-based. This is what time the market should be doing this. This is where the market should be gravitating towards, and this is the draw on liquidity. I'm submitting to that idea when I'm looking at the charts, and I'm waiting for something to be a catalyst that I've been studying for months and did backtesting on. I see it, it makes perfect sense to me, and I know where to place my stop. I know when I would move my stop. I know when I'm going to take my first and second, third, if it's possible, partial. I'm also looking for the things that would negate the idea. What kills the trade idea? These are all things that you have to have understood. Just because you have been consistent here and there with demo, don't think that you are prepared to trade with a funded account or live funds. You're not. You have to be completely bored of the outcome. It's the same thing. You're doing the same thing over and over again. There's going to be a state of impatience because you'll get to this consistency stage where you can do demos and you're able to find it and do well with it. Very little drawdown. It goes to your targets and you're done. And you start forming these disciplined ideas about how many times you're going to trade per day or session, and then you're going to stop. No matter how good you feel like you're on the side of the marketplace, no matter how dialed in you feel, it's time to close and get up from the table, take your chips, cash them in, and come back tomorrow. But that's very hard because being right is addictive. Being right is what everybody wants to experience all the time, and they want to feel that consistently too soon. It's something you can't obtain quickly. You have to go through a process of submitting to backtesting, studying old moves, tape reading, then demo trading. And all of that requires a great deal of patience that most of you don't have. I got patience, ICT. I was reading some of the comments before I started this Twitter space, and some of them were saying, I just started trading using what I learned from your 2022 mentorship. I just finished the last videos, and I'm going for my funded account next week. You're not ready. I don't want to take away your passion or your drive, but I do want to be a voice of reason. You are not ready. You're not. So when I talk to you, and I try to give you these discussions, it's meant for you to take them under advisement. So that way it gives you the proper mindset, because without the proper mindset, it doesn't matter what my tools are suggesting in the charts. You'll do something incorrectly with it. And you may not have the discipline or the maturity to identify as your personal weakness and not that these concepts are failing. In the beginning, it's going to be easy for you when you don't do something right. Oh, it's this that happened to me. It's that happened to me. It's because he didn't give me a clear idea how to use this. Well, if that's true, you should not have been taking any trades with it. You have to be completely 100% responsible. That's what a trader that's consistently profitable is. They own everything they do, the bad and the good, and they're not influenced by anything outside of them, whether it be another influencer online, another trader, somebody out there that seems to be doing better than you. And you'll develop these little mental challenges that you can be right more than someone else. And then your trading becomes a pursuit of, again, what? Being right. when being right is not what we're trying to do. It's a derivative of doing the right things, but our reasoning or the catalyst for us getting in the trade is not on the basis of being able to say, I'm right. I'm going to say that again so that way you understand what I'm referring to, because it's easy to hear it and go one ear out the other. When we start trading, even in demo, more so when you're trading with live funds, you are pursuing the pleasure, the stimuli that comes with being right. That feel-good hormone that gets more so when you're trading with live funds. You are pursuing the pleasure, the stimuli that comes with being right. That feel-good hormone that gets released. It reminds you that if this was real, you'd made that much money. And you don't want to go into your development with that mindset, because you're pursuing the end result being on the basis of you being right. And if your focus is always about being right and not the process, what are you really doing? That mindset, because you're pursuing the end result being on the basis of you being right. And if your focus is always about being right and not the process, what are you really doing? You're teaching yourself to adhere to something on the basis of win or fail. And now you've elevated the outcome to a level of critical. It's critical for you to be right, because you won't be prepared mentally to accept the fact that that one didn't work. And every single time I blew an account, it started right then, right at that moment, where I had a trade idea, I put the trade on, it looked good, and then ultimately ran against me on my stop. Okay. When I first was learning, it felt like the weight of the world was coming down on me. It felt like I'm afraid to take the next trade because that one didn't work out for me. And the number one reason why you're fearing to take the next trade after a losing trade is because you're wrestling with the impulsiveness to want to trade with a larger size, and your conscience is telling you, don't do it, and you need to listen to it. Don't. In fact, it's better for you, if you're new, to just completely stop for the day. Give yourself time to process that incorrect trade result, so that way you can desensitize yourself from the pursuit of being right. Because if you're trying to do your trades with the goal in mind that I'm going to be right, it's going to go to my target, it's going to go where I said it was going to go, versus I'm trading this model, I'm trading with this approach, and I'm submitting myself to this very thing here. Nothing else. I'm not bringing anything else into it. I'm not letting anyone else influence my following of this logic. Come hell or high water, whatever the results are, I'm going to log it, and then I'm going to follow that model again when the setup forms it again, whether it be later today or another day. And you will find that you will get to this point where no longer are you pursuing being right, because it's no longer enough. It's not going to be satisfying for you to just be right. You're going to be looking to do what? Be more precise, more accurate, less drawdown, less heat on your trades when you put them on. More confident. That model again when the setup forms it again, whether it be later today or another day. And you will find that you will get to this point where no longer are you pursuing being right, because it's no longer enough. It's not going to be satisfying for you to just be right. You're going to be looking to do what? Be more precise, more accurate, less drawdown, less heat on your trades when you put them on. More confident to hold for not your first normal first scale out profit. Your first profit now would be your typical second partial. That's how you graduate into that point of holding for a full pull. You just can't quit cold turkey and say, okay, I'm not going to do any partial anymore. I'm just going to go straight in and get all my targets. And then what happens is, invariably, you're going to have trades where it's for you. Pat, I watch your streams, and I hear how you wrestle with when you want to put a runner on, and you're met with this. And the way you overcome and get over it and power through it is you don't worry about the result. Okay, when you're live streaming, you're talking about what you endured, and you're amplifying that. And it may be entertaining, it may be for you to discharge it, vent, and you think you're releasing it, but your subconscious is holding on to it. And once that happens and it's anchored to your subconscious, it'll have an impact on your next trade. You'll see the trade, you think, okay, I'm going to hold for that 20 handle run. But what happens is when you get to that first 5 or 10, that little voice inside you says, Remember when we held for this the last time? Do you remember what it felt like when it didn't let us get our full target, but we had 19 handles? We didn't get to 20. Right now you have 10. And you're going to be thinking, like a deer in headlights, what do I do? What do I do? Because if I'm wrong by not getting out right now, I'm going to regret that. It's going to be more remorse. But if I hold and it moves to my profit objective, then I'm right. I'm right. Damn it, I'm right. I did what I was supposed to do. It went to my target. I'm done. I did it. I slayed it. But even if it gets to that target, you're going to be remembering how painful it was to hold on to that. Because back at the first stage of you feeling that internal voice, that conscience talking to you saying, I'm a little uncomfortable right now. I'm afraid to go internally. You know what the easiest solution is right there? It's the easiest thing in the world, but you're not going to want to do it. It's going to feel like the most asinine thing to be doing at that moment. Because everybody that is not profitable, that doesn't show themselves executing trades, but they want to give people advice. Can't call anything live, but they want to give you advice. They'll say, you have to push your edge. You have to stick to convictions. It's your target or nothing. What I'm saying is when you get that point in a trade where you're feeling the weight of it. Oh, do I hold? What do I do? You know, should I move my stop loss? When you start worrying, if you start feeling uncomfortable and it feels like you're juggling. Do I close it? Do I hold it? Do I move my stop? Do I move my stop back? Did I move it too soon? As soon as your mind enters that, at that very moment, you have lost the plot. You must take half the trade off. But Michael, what if your self-doubt isn't a bad thing? It's just the fact that you have grown in your understanding and your experience and you've been here before, and the trader in you is trying to listen to the analyst that's warning you, hey, we're in troubled waters right now. It's just the fact that you have grown in your understanding and your experience and you've been here before, and the trader in you is trying to listen to the analyst that's warning you, hey, we're in troubled waters right now. Yeah, it could go to our target. It could do that. But protocol says this is what we do. Standard operating procedure. SOPs, okay? Standard operating procedure says when the shit starts to get deep, take something off. How much, ICT? Half. You're divorcing the trade, but you're getting something out of it. A runner's still there, but you're getting half off. Now you've banked half. If it comes back against you and stops you out at your trail stop loss, or if you were fickle about doing anything, just keeping your stop at original, it won't take you to a loss. You're not worrying about it. But if you wrestle with that, and you're in that troubled water area where you're thinking about being right, you have lost the plot about the trade. You don't know you won't be able to realign yourself. And anybody that says, well, you can just, take a step out, get a cigarette break, go get a shot of liquid courage, go to the gym, just submit to it, see whatever happens. What's going to happen is you're going to stress. And that stressful endeavor that you're placing yourself through, you're teaching yourself to be fearful. And it's unnecessary. You don't need to do that. The way you master yourself, the way you conquer yourself and wrangle in these concerns about being right, you remove risk, because that's the underlying thing. See, it's not a matter of, can it get to my target? Of course it could. It could go way beyond what you were targeting. And it could come back on your stop. And it could just consolidate where it's at. All those things are possible. But when the mind starts getting bogged down with the concerns of needing to be right, because you will punish yourself mentally if you do anything that leads to either stopped out or not getting to target. Because at that moment, here's what you don't realize, and this is what you need to be writing down in your journal. As soon as you get to that point where you're in troubled waters, and you're now taking more attention to, what do I do? What do I do? If you're asking yourself, what do I do? And it's becoming
Dang, this is such a good video. Such a good talk.
physical, like your breathing increases, the rate of your inhalations. Maybe you're getting heart palpitations, feeling dizzy, feeling anxious, feeling nervous. The answer to that is take half off. And what that does, it allows your mind to reset. You've paid yourself.
be right back.
Who cares if it comes back and stops you out? Who cares if it fails to get to your target? You paid yourself. The analyst is inside of you, maybe picking up on things that you've learned, but you're not registering that because you're not able to see growth like that initially until you go through these experiments of putting to the task, submitting to the process, and then getting out there and seeing how you deal with it. And an analyst inside of you that's seen these things before is trying to tell you, hey, you're not ready for this. It might go there, yes. It might go to your full target, absolutely. But right now, here's the standard operating procedure. As soon as we start getting nervous and we lose sight of the plot, the way we regain that clarity, take half of the position off. Okay, Michael, what happens if I am only holding one contract and there's no way for me to take a partial off? You close the trade. That's it. But what if it turns against you? How are you going to deal with that? You're going to beat yourself up. You know you will. And to sit here and lie and say that you wouldn't, you're fooling. No one. First and foremost, you're not fooling yourself. You have to guard your mind. You have to preserve that clarity. Once you gain it and you desensitize yourself to the outcome, you're not pursuing right. You're pursuing following your model. Those rules, if they're sound in their logic, they will preserve you if you're able to listen to the analyst in you. But if the analyst is trying to warn you, listen, buddy, you got out of the chair and the gambler has slip-sleeved with you. You think you're driving, but you're not. You're riding shotgun with Retail Rick. And he's had a little too much to drink on St. Patty's Day. And it looks like he's aiming for the next fucking tree. So what are you going to do? Ask for the keys. You got to take that wheel back. How does that happen? Take half the trade off. And if you can't take a half, then you close the trade. And then you congratulate yourself. You give yourself positive self-talk that you identified that you were in troubled waters. You lost sight of what you were doing. And now it became an emotional roller coaster, which turns into a psychological arm wrestling match with you being and pursuing right. I was right. And what will happen is when you close the trade or take half off, one of two things are going to happen. It's going to stop you out and you'll feel what? Good. You'll feel good that you did that. But some of you won't feel good about that because you'll be thinking, I should have took everything off and I would have had a bigger profit. What are you doing there? Pursuing being right. Instead of saying, I took half off, it came back and stopped me out on the remaining portion, whether it was at break even or in profit, matters not. You're going to go to the calculator and say, this is what I had on the trade right when I felt like that. I should have did this. That's not how you grow. That's how you.
Wow, looking at the calculator is not how you grow.
You poison your perspective. You create and foster anxiety, performance anxiety specifically, because you're measuring every decision and placing so much emphasis on the outcome and it needing to be right. You don't realize you're putting yourself in this mental prison. You can't work efficiently in these markets where you're constantly placing so many limitations on you, placing all this unnecessary weight on your shoulders that you have to be right all the time. You don't have to be right. You don't have to be right. You have to follow a sound model and stick to that. And as a derivative, a default As a consequence to doing that, you will see results. And those results need to be completely detached from emotion or psychological need, the necessity to be right. And it sounds hard. It sounds almost impossible right now, especially if you're new. But those of you that have gone through these experiences because you've traded with real money or funded account, and you got out there and you realized you knew exactly what you were feeling. It was a reminder that you did this too soon. But hey, we're here now. We are here. We showed up. Now we're going to show out. And unfortunately, you end up losing your funded account, or you blow your account because you'll let that one losing trade do what? Take you completely out of the game. Now you have to do something bigger, much more monumental, because you have to get a feel-good moment. And you'll over-leverage on the next trade, or you won't have a stop loss on because you want to be right. And you lose all clarity, and you think that what you're doing in that next trade is going to pan out. You just have to submit to more drawdown, more time holding on to it. And what is happening is this. You are now holding on to a losing trade that you will not identify as, but you're going to be using the logic of your model, which is hold on to your runner. But because you took your eye off of the process of following that model, you're now applying part of the logic.
3 a.m. I old enough to be trading? Then I wouldn't recommend trading, honestly. I recommend if you're young, I would recommend if you want to trade, I would recommend learning and not even worrying about trying to trade.
Doing that next trade is going to pan out. You just have to submit to more drawdown, more time holding on to it. And what is happening is this. You are now holding on to a losing trade that you will not identify as, but you're going to be using the logic of your model, which is hold on to your runner. But because you took your eye off of the process of following that model, you're now applying part of the logic that you're using in trading, but you're holding on to the losing trade. You're submitting yourself to that trade, even though it's warning you and telling you, the analyst is talking to you, this is wrong. You know it's wrong, but you won't close it because you're not trading for profit now. You're trading for being right. You are arm wrestling the marketplace. That's what you're doing. You want to be smart in the eyes of someone else that you're going to share this with. And you're absolutely undermining yourself. And when you do more damage or blow the account, blow the funded account, your next lost day or whatever it is that takes you out of that, you will be miserable. You'll punish yourself. You'll relive those moments over and over again. And I can relive them all when I was 20, just like it happened yesterday. No one's going to be as hard as you are on yourself. You just aren't making public knowledge of it. Most of everyone that would be paying attention to you. Now, some of you make that mistake and you go on social media, oh, this is hard. I'm always screwing up. You're inviting more people to confirm what you're feeling, which is going to do what? Anchor more weight to that negative result, which is going to do what? Create fear, anxiety, depression, and that's not how you grow. You have to know that what you're doing is not a pursuit of being right. In the moment, the very moment that you now have these impulses inside of you, that you have to prove something to yourself, or worst case, prove something to other people, you're not trading your model. You're not even trading soundly. You're gambling on the chance of you being right. You have to release all that. You have to stop doing that with your trading. You got to stop doing that with your studies. You have to submit to whatever happens. As long as you're using the processes and protocols that you've adopted as your model, you're going to accept whatever the results are, because you have done enough research to know that the things that you're trying to pursue repeat, not just once in a blue moon, but they repeat almost daily, if not every day. Every day, the market's going to run for some hourly old high or an old low. This is the part we start writing down. Notes, folks. Every day, there's an intraday range that has an old 60-minute high or old 60-minute low. And between where the market is at market price, whenever you're sitting down and looking at your charts, you want to identify them because there's liquidity there. This is the surest way for you to know that you can go in there every single day. Every single day, this is forming. There is not a day that this does not form. Okay? This is an everyday bread and butter logic. You mark out your 60-minute highs and lows. You wait for some shift in market structure that would be gravitating towards that old high or old low. Once you have a shift in market structure, using just what I taught in the 2022 model, you wait for a fair value gap. As soon as it trades into it, you engage. Half of the range from wherever you're getting in to that old high or old low, whether you're aiming for a bull move or a bear move, matters not. As soon as it moves half of that range, half your trade comes off, stop the break even, and you submit to whatever happens then. That's it. That's all you have to do. That is a complete model. Don't risk more than 1%. It might be 5 handles, it might be 20 handles, it might be 30 handles. How are you going to know? The range between where you're trying to buy and where that old high or old low is. That fair value gap exists every day. Liquidity above old highs and old lows, below old lows rather. That's there every day. And you're complicating things. You're trying to bring all these things that I've taught, hoping that they're all going to do what? Allow you to accept no losing trades and be right all the time. And being right
That's kind of true. Like, I feel like I do that too. I try to gain understanding in price action and just say I'm trying to read price just because I'm trying to be right all the time. I think that's low-key my struggle, but also I know it's realistic. Just give myself time.
old highs and old lows, below old lows rather. That's there every day. And you're complicating things. You're trying to bring all these things that I've taught, hoping that they're all going to do what? Allow you to accept no losing trades and be right all the time. And being right is a poison to a new developing student. Your goal is consistency. You want to be doing the same things over and over again, using a model that delivers consistently. Doesn't mean it's 100%. It just means over a large sample size. What's that mean? 20 trades. 20 trades, you're at about 70% one side. That's a good measuring stick. But what happens if I'm not 70? You keep working until you are. And once you get to that point and you're 70% strike rate, how could that possibly be, Michael? Come on. That's too high. It's unrealistic. All the books say, I'm telling you, don't read into those books. Those books are written by authors that have sold a book. That's what they're doing. They're selling you a narrative, a plot. They probably don't even trade with what they're writing about. I walk into these live markets, whether I'm sitting on Twitter tweeting out the very candles that we're looking for in the draw and liquidity, bending time and space to precision, and you see your chart printing it later on. That's not hindsight. When I'm on the live sessions, I'm calling the minute candles, explaining what's going to happen, and giving you the narrative. This is what you're supposed to be doing for yourself. You create these little laboratory experiments, and you go in every day. Anytime you get a chance to study, that's what you do. And every time you record what you're feeling, how you felt. And the goal is for you to have indifference. You can't simply just write the word in your journal, I was indifferent to the outcome. You can't fake that part. You need to be observing where you're feeling these anxious moments where you feel like you're in troubled waters. They will materialize in the same places all the time until you cope with that. You replace it with a positive habit. What is that? You can't fake that part. You need to be observing where you're feeling these anxious moments where you feel like you're in troubled waters. They
Damn, bro. Like, I can't believe this is free. I can't believe.
will materialize in the same places all the time until you cope with that. You replace it with a positive habit. What is that? When you feel it, you kill half the trade. If you can't cut it in half, you get it all off, done. And what that allows you to do is you reset mentally and emotionally that now, okay, I've paid myself. I've removed a great deal of the risk. I've profited from it. And now I have a free look. I got a free bus ride to get to my target if it wants to go there. But you don't know, and you're not going to know because you're now recuperating from what you just put yourself through, which was stress. If your trades are stressful, you're trading too big. Your risk is too much. The easy easiest solution to that, drop down in your leverage. I can get out there and I can find these 5-handle runs, 20-handle runs, 15-handle runs, 30-handle runs. And I'm holding on to 5 contracts, 10 contracts because Top Step says I can do 15. So I'm trying to push the envelope. I got things to do, ICT. But it's hard for me to hold a trade. So I get out too early. What am I doing wrong? You're over leveraging. You're trading too big. You haven't given yourself time to grow up into 5 contracts, 10 contracts, let alone 15, what guarantees you're going to blow your account. That's what they want. I want you to trade with 1 contract. Look what I did with the TD Ameritrade account last year. I doubled the account, trading 1 contract with lots of losing trades to showcase my students. I mocked up, drawdown, put myself in situations they asked me to do. This is what I do. This is where I fall victim to. How would I do that? I went in there and actually did it with real money. Took 25,000 to over 50,000, 5.5 weeks, 1 contract. Now, $25,000 a month. That's probably good for most of you, even if you are doing well. And if you could get just 1/4 of that consistently, that can change your entire life. Imagine if your mortgage was paid, half your mortgage was paid, half your mortgage and a car note and insurance. It's a blessing. But much like trying to make those ends meet, some of you want to just be able to quit your job right now and get away from Carl and Bruce. And you're rushing it. And you're thinking that as long as I'm right, I'll get there quicker. And quicker is not the right thing. You got to be on time. It's the same goal you have when you go to work. You want to arrive on time, in one piece, prepared to do your job. You can't rush success. You can't. It doesn't work that way. And placing so much emphasis on arriving sooner than what's realistic. Think about it. When I used to have to go to work in the morning time, I had pretty much a straight shot because I'd get really, really early. Drive a 45-minute drive, 40-minute drive, in 20 minutes speeding, admittedly. But I hated going home because I would be in rush hour traffic. Think about what you do to yourself sitting in traffic. You know damn well there's 150 friggin' cars in front of the one in front of you. You know that. But your limited, myopic perspective is this asshole's holding you up. So what are you doing? You're riding on his bumper or her bumper, looking in the rear mirror. Look at me, bitch. Look at me so I can tell you you're so-and-so. What did you do? You lost the plot. You got emotional. You're demanding something. You can't move that wall of cars. And being angry about it doesn't move them faster for you. But yet here you are in your car, pissed off, cussing at everybody, ready to get out, swing a tire iron, and break somebody's windshield because it's holding you up. You're trying to get somewhere. And these people are doing this intentionally. They're holding you up, and they're thinking about the same thing to the person in front of them. And that's what traders are doing when they get in the marketplace. They want to get somewhere too quick in impossible conditions. You lose sight of what you're doing. You get out there trying to prove to the world that you're better than. Somebody else, and you wreck your ass. Turn your live streams off before they really end and go into a losing trade. You know what it's all about. You know the score. They all have these problems. They're wrestling with it. You're wrestling with it because you're trying to do more than what's required. Follow the model. Follow the rules. Listen to the analyst in you. When it tells you you're in troubled waters, you do not flake out like you're in rush hour traffic, thinking that you're going to be able to bully everyone out of your way. What do you do? Oh, you got all these good advice, ICT. What do I do when I'm stressing out in the car? Listen to ICT. How about that? How about that? Because if you can listen to me, even if you don't like me, complain about me. Oh, bitch, you're a demo baller. We don't see you trading a live account in live. Go ahead, put your attention there. I'm a therapy, okay? Because if you're doing that, you won't get yourself in some kind of road rage event. And you'll probably get home safely. And you won't be worrying about the traffic. You'll be distracted. And that's what the process does for those individuals that when they get in troubled waters and they're in the market and their trade is causing them anxiety, as soon as you take half off or close, if you can't do any partial, half, what you have done is you've distracted yourself. You've removed that need to be right. But I could be making less money because of my target. Yeah, you could. But what are you gaining? Peace of mind. You're engaging with a now resumed approach to holding no hard line. It has to be my way. When you first put the trade on, you may have had a clear vision about what it is you're expecting to see in the chart, how you're going to ride it to that profit objective, but something changed. And you have to be sensitive to that, allowing the analyst to speak to you through your conscience, say, okay, you know this is probably not going to pan out right now, so what we should do is take half of this off, roll the stop to break even if it's not already there, or if you have it in a trail position, don't squeeze it anymore, just leave it there. If it turns on you and stops you there, who cares? I show you that happens with me. I'm doing that to teach you. I'm showing you that. I can get in the trades and do full pulls, and that's all I'm going to do. But I'm a practical teacher. I'm telling you how to grow into that stage. You just can't do it right out of the box. You can't. Your mind won't let you. And the people that are highly opinionated about how this stuff doesn't work, I can't do it, you won't be able to do it, you're going to fail, they're not providing anything as an alternative with consistency. So why the fuck are you listening to them? You already have enough on your plate. You know what you're wrestling with. So turn off all of that static, white noise, and listen to your conscience. Your conscience is going to talk to you. If you've been doing everything I'm telling you to do, it will guide you because of the experience you've placed in its hands. That analyst is going to guide you when it's troubled waters. But you have to let the analyst communicate to the trader in you, the one that's going to make the sound executions on the sound logic that comes from the analyst. The person that you're training with the backtesting, the person that you're training to observe the opportunities in reading old data and watching real-time price action and tape reading, and then the walk forwards, and then finally doing the demo. Demo, that's when the trader arrives. He or she has no function in any of this until you get to demo. So the trader in you should not be talking about, I want to buy here, I want to sell here, I would do that, because that's not the trader talking. That's retail Rick. That's the gambler in you. So you've got three people inside of you right now that's going to be wrestling to be in the driver's seat. The analyst needs to be shotgun all the time. The analyst is right next to you all the time, and you're wanting to hear the logic that part of you, when it's time for your conscience to say, okay, you're in a position that's probably not as good as we thought it was. Do not listen to jokers and clowns out there looking for clout that tell you just got to have conviction for your trade. If you know that you're absolutely 100% uncomfortable and you are not able to focus on the trade, you are absolutely doing things backwards. And these same people, you never see them execute anything, not even that you're absolutely 100% uncomfortable and you are not able to focus on the trade. You are absolutely doing things backwards. And these same people, you never see them execute anything, not even recorded. They don't prove anything. They prove they have an opinion that nobody should listen to. There's this clout police force that's forming, and they're out there trying to keep your attention from learning how to do this. And you're seeing people now bringing real receipts with real money, and now they're uncomfortable because they don't have that. They don't have anybody proving that what they're doing or what they've done is making them any money. So we're getting into the thick of things here now. The rubber's meeting the road, going down to the brass tacks. And those that are submitting themselves properly are getting results. And all the old things that they used to be able to say about what we do here, they're finding that it's being met with a bulletproof vest, and it's wrecking ball proof, atomic bomb proof. You can't beat proof with real money, with real receipts, with real interviews from companies that pay these individuals. I don't own any funded account, so I'm not scripting anything. So they're doing something right. And that's the following of the process and the model. And you hear it in their own testimonies that they struggled, just like you're struggling too, but they kept pressing forward. I'm sure they saw all the things and hear all the things that all of you hear. You're never going to get it. This is becoming retail. This is never going to be retail. Look how many people talk bad about it. That right there is a testimony. As long as we got all these people hating on the idea, it ain't going to be retail. They want you to think that because they're insecure. They want you to feel like this is the worst thing for you to be doing. You should be following their garbage, listening to their bullshit. Don't take partials. Trade animal patterns. Gonna wet my whistle here.
Pause.
You're probably wondering why I'm so low key
Pause.
tonight. Usually I go off the rails a little bit faster. I'm actually under some Benadryl. I had to take Benadryl. I had a little bit of a reaction. My wife made some kind of chicken shit. She was mixing kinds of stuff. That fucking TikTok, I'm telling you. I've wasted so much money at the grocery store because of TikTok. This woman watches TikTok, and every recipe that comes out, my house has got to make it. And she's got to ask me all the time, taste this, taste this. If she put something in there tonight, it caused me almost to not be able to do this. Kept coughing. So I had to take Benadryl. And I'm a little relaxed, almost to the point where I want to take a nap again. But I already took my 2 naps today, so that's our rabbit trail for this one. But you don't want to go into your trading constantly pursuing right. And you know already, most of you, doing that isn't getting you where you want to be. But you're arm wrestling with the results of you trying to do that. You think, well, if I just do a little bit harder, I'll get through that because this is how trading is. No, that's how gambling is. Look at the people. If you had the opportunity, go to a casino.
Hey Alexa, turn off.
When I had my first year anniversary, we went to Atlantic City and we stayed at the Taj Mahal. And I literally only took $100 down to the casino. That's it. Because number one, it was my first time at the casino. I've never gambled like that. And I said, in the event that I would take more money than I should, and if I win, I'm afraid that I'm going to get compulsive about that and say, I'm going to try to do it again and do it with more and more and more. So I purposely left all credit card, all debit card. I don't even use a debit card, but I'm just telling you, there was no means for me to take any money out of my bank accounts. It's just, this is what I brought, and other cash was for, eating and whatever. And I sat at that one-armed bandit slot machine, and every time I would get down to the last $10, I just want to lose it because I don't want to have to do this anymore. And I didn't want to do what? Get up and walk away. The analyst in me was saying, this is a waste of time. You're not going to make any money, and you're already just wanting to leave, but you're not wanting to get up because Retail Rick is pulling the slot machine. But what happens if I get a jackpot? What happens if I win $2,000? The maximum thing I could have won on this was $2,000. And I would make it a little bit up to 75, 65, just under $80, getting back to the $100 that I put in the machine. And then all of a sudden, it would be spent down to the last $10, $12. And I'm like, okay, it won't be much longer now. And then I won't have it. And I ain't got to worry about doing this. I can go watch the shows with my wife or whatever. And I'd win a little bit more, but it would be like to be $50 or $40. And then the gambler in me said, oh, I'm probably real close to one of those big wins. Let me just keep playing. And I sat down there for almost 7 fucking hours with the same $100. Couldn't make it go away, and I couldn't freaking make any money above $100. I never got it over $100. So I'm thinking to myself, this is stupid. Like, what the hell am I doing? So finally, I just did the maximum bets that it would allow me to do, and then boom, it's gone. And I was relieved that $100 was spent like that, because I was like, okay, now I don't have it. I won't be enticed to do what? Do another run of that and get caught up in that whole pursuit of being right. That's how I learned this. The whole discussion tonight was that moment in 2022. I'm sorry, 2002 is when we went to Atlantic City. We got married Valentine's Day of 2001. And then a year later, we were in Atlantic City celebrating it there, which was weird because I've never been to a casino, and that's where she said she wanted to go, so whatever. But this whole idea of removing myself from that, I applied that experience to the trading. When I start feeling like I'm listening to the wrong voice in my conscience that's telling me to be acting on impulsiveness, what if? See, the analyst isn't going to do, okay, what if you make more money than we thought? Or what if this is a trade that we hold on for a longer time? The analyst is never doing that. The analyst is going to speak through your conscience to you and say, this is the rules, bub. This is what you're supposed to be doing. This is all you're supposed to be doing. And when you step out of line, I'm going to remind you, because it's going to feel like uncomfortableness. And that's not just fear of making money or losing money. That sometimes is the analyst that's been increasing in its understanding about what it is that you're doing in the marketplace. Don't cancel that out. Don't arm wrestle that, because it's sometimes the experienced analyst that you trained up to this point in your development, and it's going to be communicating to you through your conscience by saying, this is not what we should be doing. We should be doing this. And then what you're doing sometimes is you're allowing Retail Rick, the gambler in you, and the trader to argue with one another, ignoring the analyst, which is the sound advice that you should be following. So how do you deal with that? Your plan needs to be written out. When I take a trade, I have a notepad next to me. I'm literally writing down target, partial, stop, won't move until it gets to this price. That's it. So if I see something, some little flurry of price action comes in, boom, if it doesn't break the rules that I have written down for my idea, I'm not moving my stop. I'm not panicking. But it might cause a concern for me to feel like the analyst is saying, okay, we now are in troubled waters. What's the process? Half off. Don't move the stop anymore. Or if it's not moved to better to break even, move the better to break even, and then let it go. Submit to whatever happens. And that's how you condition yourself to not just run like a cat with its tail between its legs, fearful, because that's what would be the outcome. You don't want to just run away from any trade. At some point, you have to press into it. But it's easier to press into that trade that's uncertain now when you've taken half off. You've made money. You had a part-time job in that trade, and you made money. There's nothing wrong with that. There's nothing wrong with that. And any fucker out there that tells you there is, they're not showing you anything, but they're telling you this is the advice that you should follow, their shit. And they don't do anything to garner your respect or belief that what they're saying is sound logic. You don't see them signing into an account, going through day by day, this is what I made, this is what I lost. You don't see that. But they're highly opinionated. Who are you listening to? Are you listening to somebody that's going out there live on Twitter or in live streams and calling every fucking candle movement before it happens? Or are you listening to somebody that brings nothing but more confusion? If you're doing that, that's the same thing that you're going to experience in your trades. You're going to wrestle internally. It's going to be like chaff. You won't be able to focus. You'll feel like you have attention deficit disorder when you really don't. You're just placing too much stress because you're over leveraging. You're demanding being right. Easiest solutions. Cut half the trade off. You'll fix the over leveraging right there. You've funded yourself. You paid for that time in the trade. Your stop's better than even. And now you can submit to the outcome. I'm in a trade ICT. I got this shit figured out. I'm here. I got 5 contracts. I'm long S&P. I'm looking for a 20 handle run. Around 12 handles in. Whew, what are we doing here? Anybody got any ideas? What do you think? You think it's going to go up? Let's do a poll. As soon as you feel that, half off. But I got 5 contracts. Take 3 off. Why not 2? Take 3 off. Shut the fuck up. Take 3 off. You've banked 3. Let the 2 run. If it goes to stop, it's okay. If it goes to target, great. Next trade. You got to wrestle yourself into submission to the model. Otherwise, the market and your weaknesses will wrestle you into submission to failure. You won't see it coming. Nobody ever sees it coming until it's done. And you're like, man, I knew at that moment, right? You'll know exactly what it was. And you'll know, and you'll admit to yourself, that was the moment I should have did this or that. Damn it, why did I do that? Now I got to do a funded account reset. Now I got to go put more money in the account. And it will repeat all the time until you do the things I'm telling you to do here. You're trying to graduate to a state of mind that when you go into the marketplace, you are at the state of mind that is when being right is no longer enough. You now are detail oriented. You're principle oriented. You're following logic. You want precision. Right is not enough. Your pursuit now is you want to control risk so impeccably that your winners are going to so far outpace your losing trades, it won't matter. It won't matter. The next trade that you lose on, it won't even have any impact at all on you. None. Zero. People want to talk about it in passing. Oh, yeah, you got to let your profits run, trade your plan your trade. This all sounds great. But how do they engage? Do they trade recklessly? Are you trading recklessly? Are you throwing everything out the window because now you have a funded account or a live account? The things that you were doing in your demo that were consistent, the only thing that's changing when you go into live funds, because it's still live data you're trading off of, the only thing that's changed is now you have potential reward and potential loss. And you have to grow into accepting that. And it's not easy. For some of you, it's going to be next to impossible, but you have to graduate into it slowly. Whatever the least amount of money you can put in on a trade, that lot size, that's what you trade until you're absolutely bored. And then you go up one more contract, trade like that until you're absolutely bored. And you do it again and keep doing it again and again until you can get to the point where, oh, wow, I can be in 5 mini contracts making $250 per handle. All I got to do is get 4 handles and it's $1,000. And you'll see that making $1,000 a day doing that is easy. But it's hard for you right now because you're going to feel what? As soon as you put a trade on with 5 contracts, you're thinking, shit, my ass is puckering. What is going on? I don't know if I'm supposed to hold this or get out. It's moved 2 ticks. Shit, it's moved 2 ticks. What am I going to do? 2 ticks. Am I long or short? What the hell am I doing here? Did I put the stop on right? You're going to be thinking about all kinds of shit. You're going to feel completely like a noob. What's changed? Potential reward and potential profit. is the greed. Potential loss, potential debit to your account. That's your potential wreckage. Now, instead of saying, okay, is price confirming that it's continuously moving in my favor? And is order flow still on my favor, in my own side? That's where your attention is. You're not looking at the profit and loss little button on your screen. How much money went up and down, up and down. You do that, you're done. I just do that to show you eye candy, to hold your attention in the early stages. You don't need to see that once you understand what you're doing, because you can clearly see, okay, it's moving in your favor. Do the math. How many contracts could you have been there? And there it is. In the beginning, new traders, new students, they need to be entertained. There's got to be a hook in their mouth to draw them this direction. And I'm a master at that. Good songs, maybe not every song, because I'm sure some of you would have heard songs that I put in my videos where like, the hell is he thinking about this in there? It's not for you, it's for me. But I know how to draw a crowd. And once that crowd's there, I know how to teach you. But I also am aware that some of you are not teachable and you'll walk away before you should. And some of you, I'm glad you did or do, because you're not prepared and you're just going to be toxic. But knowing what to do, when to react to it. When we react, okay, I saw this, I can't remember the guy's name. He's a YouTuber. He tweeted, your job as a trader is not to predict the future. It's to react to price. What the fuck kind of logic is that? Like, that literally encapsulates retail trading right there. That's it. That's it. That is retail trading in a sentence. What you're saying by saying something like that, or if your thoughts are in alignment with that, what you're essentially saying is, there's no way to know where price is likely to go. So fuck it, let's gamble. That's exactly what you're saying. Your job is not to try to predict price. Your job as a trader is to react to price. Get the fuck out of here. Listen, if you don't know where the draw on liquidity is, where the market's likely to be going up or down to, you're clueless. You have no business, zero business, pushing a button in that regard. You don't have any business doing any kind of trading, because you're literally putting a blindfold on, being spun around 50 times in the dark, stopped. It's okay. Take this tack, walk forward, and pin the donkey, pin the tail on the donkey game. But you're doing it disoriented. And you're reacting. What are you going to react to? When your hand hits the wall, okay, push the thumbtack in. Let's see what happens. Bullshit is what happens. These individuals that hold that logic, that's the reason why they struggle. And they have hit and miss results once in a while. And what keeps them in the game? Risk management. They suck at trading. Their trades are just terrible. The logic to get into trade is lacking. But what keeps them in the game? Money management. But I'm a professional trader. I make my money from trading. Okay. Imagine if you learned how to determine where price is going and you kept everything else the way it is. How much better would you be? I'm interested in seeing that. But you have to know what we're doing is predicting price. We're predicting it. We're time fucking traveling, okay? We're literally moonwalking into the future, gaining insight and coming right back to where we are right then and sitting in front of the charts. What does that mean? It's impossible. Now he's talking on your ass. Okay, well, listen, when you're looking at the charts, you need to be able to see in your mind's eye, can you physically see the price running up to that relative equal high? If you can see it, that's the first step. You have to be able to see that that potentially is in the chart. It could manifest itself. Now, how it finally gravitates to there, is it going one straight shot, or is there two price legs into it, maybe three price legs before it gets there? That's not important. You're submitting to the idea that you are seeing this present price action. It's likely to go up to those relative equal highs where there's buy side liquidity. So you're submitting yourself to what? I'm going to buy program. I'm going to be buying discount or raise. I'm going to be observing price and looking to see if down close candles support price and repel it higher. To the left of all that, if there is a range in price action, I want to see up close candles being traded through. That's institutional order flow, being bullish. You don't need a depth of market. You don't need moving averages. You don't need any of that shit. The chart will tell you everything you need to know. But you're not reacting to any fucking thing except for that internal voice that tells you you're in troubled water. So that's the only time you're getting permission from ICT to react to any fucking thing. You're reacting to your conscience. Your conscience is talking to you saying, hey, this is probably not a good idea now because you're not listening to me. And you and the gambler are arguing with one another. And I'm trying to guide us through this trade. And you are causing a decoupling. And now it's going to be physically felt with fear of missing out on the move, fear of being stopped out, disorientation. There's going to be a day, I promise you this, whether you've ever had an anxiety attack or not, this is going to happen to you. There's going to be a time when you have a funded account or you have real money at risk and you're in a trade. Out of nowhere, your heart's going to start beating a little bit too fast. You're going to start hyperventilating. won't really notice it until it starts. But then you're going to feel anxious. You may feel like you want to throw up, feel like you need to go to the bathroom. You're going to lose control of yourself or pass out. Feel like you can't breathe. Feels like you're not getting air, but you're hyperventilating and breathing too much. Start seeing stars. Feel like you're going to faint. Feels like the whole world is now laying on your back. And you're in a trade while all that's going on. That's an anxiety attack. That's usually when the analyst is saying, listen, it's it. Like, we're doing everything now to get your attention. So what should you be doing? Reacting. You need to react to that. But you need to be predicting the future and price. That's what we do as traders. Anybody, and I've seen this multiple times with other educators and such, anytime someone tells you your job as a trader is not to predict the price, get the fuck away from that person. That person doesn't know shit. They know nothing. They absolutely know nothing. They're leading you down the primrose lane. They're full of shit. They can't do it, and they're just trying to justify their own ignorance, period. That's the way it is. Someone in this industry tells you your job is not to try to predict the price. What the fuck are you doing if you're not doing that? How are you not trying to predict the future? If you're bullish, what does that mean? That means you're a buyer. So you're what? You're predicting that price is going to go fucking up. What kind of shit is that? Your job is not to try to predict the future, but to react to price. No, 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 no. We are predicting where price is going to go. We are anticipating that prices are going to go to a discount when we're bullish. We're knowing exactly where the fuck we're trying to buy. We know exactly where our fucking stop loss is going to be. We know exactly why the fuck we're expecting it to go up. We are not reacting to shit. Period. That's just the fucking way it is. That's the reality. That's trading. That's the real shit. That's in the trenches, real fucking trading. Any fucking body that tells you anything apart from that, you unfollow, you fucking tell them to go fuck themselves and stop spreading misinformation. That's how you handle that shit. Period. That really fucking gets under my fucking skin, man. Like, I don't like that because that's ignorance. That's fucking class A fucking ignorance. Masquerading as fucking wisdom. Get the fuck out of here, man. That's fucking Sesame Street fucking wisdom. React to price.
He's hate on Sesame Street.
Do fucking better. But you have to know when that conscience is talking to you. And if you feel unsettled, you feel uncomfortable while you're in that trade, that's the surest time signal to you that you need to react to that as, I need to bail on half the trade and just kill it. And if you can't, take the whole trade off. I promise you, in the first few times that you do it, it'll feel like, especially if it runs further, it'll feel like that's the worst advice you ever received. But I promise you, it will serve you better than anything else. Because it takes so much more for the human mind to go through that stressful endeavor of holding through that shit. When you're new, you don't have any experience. You have none. You're going through it. So yes, at some point you will have to submit to it. But initially, when you're developing, when you first get that first experience, you do not dig your heels in and say, I'm holding on for dear life. You master yourself. You reward yourself. You've taken the risk up to that moment. You've submitted to the trade idea up to that moment. But something is occurring, and you don't know. I don't know if it's your experience that you've now gained that's trying to communicate to you through your conscience saying, okay, this is no longer a viable setup. You don't know that yet. So the first instances of this occurring in your development, and you're in a live trade where you have real money at risk, you take half the trade off. I promise you that's the best advice that you're going to get regarding that moment. That instance of where you're in there and you feel like you're completely out of control. You can't focus. You can't come to the decision of get in, I'm not getting in, but stay in the trade or get out. If you're in that arm wrestling match ever, and it's a live account trade when there's real money, and you are wrestling with, should I get in? Or I'm sorry, should I get out of the trade or should I hold on to it? If you are completely wrestling with that and you can't even focus on what price is doing right now, you're being distracted by that. So you won't be able to watch the order flow. You won't be able to receive the information that price is going to tell you because you're watching the likelihood of you being right slip out from your hands. And that pursuit of being right overtakes the logic that puts you into the trade or would keep you in the trade. It doesn't feel clear at the time. You feel like you're losing your mind. And if you're in a panic attack or anxiety attack while it's going on, that makes it worse. But I promise you, 10 minutes after you close the trade or take half off, it goes away. You'll see things a little bit clearer. If you're in panic, if you're disoriented in a trade, and you start worrying about whether you should stay in or get out, half the trade comes off. Walk away, minimum 10 minutes. Whatever's going to happen is going to happen. If it comes back and hits your stop, who cares? You're comfortable with that. If it goes to target, who cares? You were expecting that anyway. But 10 minutes. Because what happens is, if you remove yourself from the stimulation that causes the anxious moment and would have thinking, you've now immediately reacted to the emergency that your mind's saying that you're in, when there really isn't. There is no emergency. But you don't realize that at the time. So to master yourself and your emotions and the psychological warfare that you're putting yourself through is you take half the trade off, make sure the stop's at better than break even, and you submit to the rest of the move. Whatever happens, happens. But you must walk away, leave the room where your charts are, minimum 10 minutes. It's going to feel like you want to rush back in there and just peek and see what's going on. Don't. Do something else. Take a walk, go grab something to drink, stretch out. Let 10 minutes pass. All of the adrenaline, the cortisol, all those hormones that your body's releasing, they'll burn off in 10 minutes if you do something other than what you were doing, which is standing still.
Good to see you're still grinding. Haven't been watching because my guys live trades, so I watch them. Hey, good to see you, Ethan. This is early though. What time for you? Right now it's 4. It's 4:19 a.m. my time.
Like a Ferrari in park, but with the acceleration pedal down to the floor. You're tearing the engine up. It's not meant to do that. And the only thing you're going to do is keep that panic attack going until you're probably going to get sick, pass out, or feel like you're dying, and call an ambulance for nothing. And between the time you call the ambulance because you feel like you're dying, you having chest palpitations, tightness in your chest, tingling down your arm. I would always get this tingling in the corner of my left, like the corner of my left side of my mouth. It would start tingling, and it would be like this numbness tingling feeling that goes right up, like you were drawing a smiley face on the right side of my mouth, from the corner up to my left eye corner. It would be like a pathway of numbness right there. And all that was adrenaline. Because I'm not doing anything. I'm sitting there looking at my charts. What if this, and what if that, and what if this, and what if that? And I'm basically scaring myself. And I'm releasing adrenaline, but sitting still, doing nothing to burn it off. Your brain says there's an emergency. Fight or flight. Fight or flight. Let's get it on, or let's get the hell out of here. And what am I doing? Sitting still. Looking at something. I'm constantly telling myself there's an emergency. I need to make a reaction and decision. What are we doing? And I'm doing nothing. I'm what if thinking, what if thinking, and what if thinking. And then finally cortisol. That hormone's released in my bloodstream. And now I start feeling physical symptoms. Chest tightness. I'm breathing faster because my brain's been told there's an emergency right now. And I've released adrenaline. Now my heart race is faster. And cortisol is a stress hormone that once it hits your body, you're completely in a different state of mind. You will start feeling physical symptoms. Palms will be sweaty. You'll start maybe trembling. Dizziness because you've blew off all your CO2. But it feels like you're not getting oxygen, but you're just too low on CO2. You blew it off. The exhaling, too much. You ever see the people breathe into a paper bag? What that does is helps regulate your blood oxygen level with the CO2, so it's balanced. You have to slow your breathing down. Take your attention onto something else. And I mentioned over the summer last year, I said the way you beat a panic attack is have a sleep second hand on your watch. And you feel your pulse, and you walk the sleep second hand, and you count. And what you're doing is you're taking your attention away from the things that you're scaring yourself with. And that's how you do it. You take the trade off halfway, or close it, and you remove your attention from the charts. Physically leave the room for 10 minutes. And in 10 minutes, you'll feel silly. And you'll probably start laughing like, what the hell did I just scare myself with? There's no emergency. There is no emergency. But you can trick yourself into thinking there is. And if your mind's racing like that, can you really follow your model? No. No one can. It's impossible. Zero possibility. And so many times traders fall into this condition multiple times in their career. But the first time it happens, it is scary as shit. Like, you're afraid you're going to pass out. What happens then? Most of my trade just keeps coming back and stops me out. You're stopped out. What the fuck are you worried about? Like, I used to have panic attacks and think to myself, wow, if I'm in a restaurant, say I start choking, and then I get the food caught in my throat, and then finally I end up vomiting in front of everybody. How embarrassing would that be? Well, how about, what if it doesn't happen and I enjoy my meal? What the fuck? That's what the human mind does, though. It reaches for the negative all the time. And people that are toxic, they live themselves outwardly like that. Constantly looking for something to dramatize. Constantly looking for something to criticize. They're miserable people. And the folks that don't do that outwardly tend to do it inwardly. And then they punish themselves with anxious feelings of emotion that are unbridled. And you lose thought, control, mastery of yourself. And now you're not watching the market. You're not even worrying about being stopped out. You're not worried about making the money. You're wondering now, am I dying? Am I having a heart attack? Am I having a stroke? Because you've lost all focus. That's how all these things happen. That's the road and pathway that leads right to that. Some of you may never have that experience. It'll be far and few between. But most of you will have this. If you're trading with real money, it will happen. You will have an anxiety attack. You will feel like you're literally having a heart attack or stroke. And you're doing it to yourself. You're scaring yourself. Cut half the trade off. Stop better than break the even, and let it happen. Whatever's going to happen is happening. But walk away from the charts. The stop's there to do its job. The limit order will be there to get you out. Stop looking at it, and give 10 minutes for your body to regulate all the hormones. For some of you young guys or gals that never had that experience yet, you'll have a panic attack. It's just a high level of stress. You may not ever want to submit to it and call it a panic attack. It's just an anxious moment. But if you have racing thoughts and physical symptoms of wanting to pass out, or stroke, or tingliness up and down your arm, or whatever, that's adrenaline. And you're sitting still. The easiest thing to do is just to take a quick walk, burn it off, exercise, do some kind of physical exertion to burn that stuff off, and constantly tell yourself there is no emergency and everything's fine. And you self-talk yourself down from that. which is the reason why I teach you to self-talk in your journal. Don't invite that negative stuff, because if you bring the negative stuff in there, what you're doing is you're saying, I'm pursuing right. And right is not the goal here. Consistently profitable. And if you're only framing that in the context of right only, you're going to take trades that are going to be outside the parameters that your model is, because you're thinking, this one. Don't invite that negative stuff, because if you bring the negative stuff in there, what you're doing is you're saying, I'm pursuing right. And right is not the goal here. Consistently profitable. And if you're only framing that in the context of right only, you're going to take trades that are going to be outside the parameters that your model is, because you're thinking, this is one of those times where it's going to move and it's outside the kill zone, and I got time. I just think it's going to go up there, and maybe just get in there and push the button. And you know damn well doing it, you're doing everything wrong. So you're not going to be in there low stress. You're going to have a panic attack, worrying about it. And you're not even going to trade it right. You're going to submit to the first 20 seconds of it, and you're going to be counting every minor fluctuation that goes against you, thinking that it's going to be the next tick before it runs 20 handles against you in one straight shot. Boom, you're stopped out. Not just a little bit stopped out. You're way stopped out. That's what your mind does to you. It tricks you. And if you trade like that, it's because you're over leveraging, too much risk, or you're trading outside your model, and you know it. And subconsciously, your analyst in you is saying you're doing things wrong, and retail Rick's driving. You put the analyst in the back seat or left him at home, and you're shotgun with retail Rick, and he's had too much to drink. It's not going to be a good outcome. So your conscious will talk to you. And as you get more experience, as you get better at this, and you have more wisdom because you've been doing it longer, that voice will be a lot more comforting, and it'll guide you. And that's the thing that when you're asking me as students, how do you trust and how do you know that the market was going to reverse like that? How do you know that it's not going to go past that low? It's experience. The analyst is in me saying, these are those instances where it does this. You've seen this before. So here's what we do. This is what we don't do. This is what we expect to see. That is what? Predicting. It's not reacting. It's predicting. The trader anticipates. The analyst predicts. The gambler sits in the back seat and shuts the fuck up. We don't want to listen to the gambler. We're not giving the wheel to the gambler, but they're always going to be chatting. Yeah, but we could have bought more. You should have held longer. This one did better than that one. You bought the wrong pair. Shut the fuck up, Rick. It's hard to filter that out. The part of you that is always going to look for what you didn't do right. Because retail Rick is constantly looking through the lens of right. You should not have that in your trading at all, but you're going to have it as an internal wrestling match always, because you're going to criticize yourself, and there's never going to be a bigger critical person on this planet than you are. Nobody could troll ICT harder than I troll myself. When I don't do what I'm supposed to do, I live that shit for years. Maybe it's not that way for you, but it's human nature for us to be judgmental with ourselves, and sometimes with mental illnesses, it can manifest itself in very toxic ways, either inwardly or outwardly. So it's important that you constantly be reminded that we're not pursuing being right, okay? It really is impactful when you go into your trading day, giving yourself permission to not be perfect. If you're wrong, it doesn't mean that it's a failure. It just means you're wrong. And you can be wrong and make money. That's what a sound model does. How can you be wrong? How can you be wrong and make money? Partials. They work every fucking time. There has never been a partial that was taken in a trade that did not yield a gain or profit. It cannot happen. A partial profit is profitable. and you take that when it offers it to you. Then, if the trade doesn't go to your targets or target final terminus and stops you out of the balance, guess what that means? You were wrong, but you made money. Books don't teach that mindset. Educators don't teach that mindset. They've been doing it since I've been talking about it, but I don't mind being a trailblazer. That's why I'm here after all. Blazing trails for you all to ramble on behind me and then find your own trailblazing. But you have to know what you're doing. You got to know how to predict price. You have to know how to predict the future. I've said it many times, folks. It's in the name of what we're doing. We're trading futures.
Hey, that's good to hear, bro. Glad I could spark something. Honestly, that's like kind of my goal. That's kind of my goal doing these live streams too. It's like I'm just gonna be on live, just backtesting and like studying videos and doing things like that. And the goal is not for me to look good. It's to really inspire people and show people that it takes work, and that like it's not gonna be an easy thing to do. And I just want to inspire, and I mean, hopefully find success on the way to my journey. And I guess we'll see where this takes me. But yeah, that's good to hear, bro.
We're dealing with the future. Everything about what we're doing is predicting the future. But when you don't understand how to predict with a great deal of consistency what the future is likely to do, then I guess it makes sense for someone to have the mindset that your job is not to predict the future, because we don't know how to do that. So therefore, let us relinquish the pursuit of anything like that and just adopt the alternative, which is let's just react. Let's react to it. Like a knee-jerk response when your doctor takes that little rubber triangle hammer and taps you on your kneecap and your leg involuntarily just kicks up. Every time I went and got a physical, I used to always try to force myself, I'm not going to move, I'm not going to move. Boop, and my leg would jump. I'd be mad. I don't want to react to certain things. And unfortunately, because I'm bipolar, many times I'll react to shit that I don't realize I'm reacting to until I'm already revved up. And nobody can talk me out of it. They can't talk me down. It's just got to do its thing. But in trading, it's the only thing in my life that has been a means of talking, engaging, and being able to be the closest thing to normal that I can imagine as someone as a bipolar person. It's very difficult for me to stay balanced for a long period of time. And if I'm watching price action, all of my focus, all of my attention is on these fluctuations inside these candlesticks. And if I'm talking and providing narrative, in my mind, when I'm doing the live stream, like the live sessions, I'm talking to you about it, I'm literally talking out loud the things that I'm thinking. Like that's exactly what it's like in my head. Look at the Twitter spaces. I don't shut the fuck up, except for catching my breath once in a while. That's what it's like in my head. Non-stop, every waking conscious moment, my mind is constantly going. There's never a period of quietness unless I'm meditating. And I'm only able to wrestle with 3 or 4 things then, not 500 of them all at one time. So price allows me that beautiful distraction, and my attention is there. And I'm literally talking to myself internally the very way you hear me talking over the charts when I'm doing the live streams. I'm just saying it vocally. I'm audibly making it come out of my mouth, whereas it's just in my head. I'm saying everything just like that nonstop. I'm looking for this to do this. I want this price to be here. I don't want it to go past this candle here. It can touch that. That is reading the tape. That's why I call it that. You don't need a depth of market. That's not reading the tape. That's looking at a gimmick. I'm looking at price. I'm reading price. I'm reading the minds of everybody out there looking at that same chart. Like Dr. Xavier. He goes in there and puts his little helmet on. He can get out there and get in everybody's head. That's what ICT's doing. When he's watching his 1 minute candles, I'm in all your heads. I'm the ghost in the machine. I'm in there hijacking shit. I'm in there overriding retail logic and being on the other side of what they're trying to do. I know what they're thinking when they're thinking it. I know where they're placing their stops. I know why they're going to move their stops, when they're going to move their stops, what they're hoping to see in terms of where price is going to go. As much as they don't want to say they're trying to predict price, they may not say it in the circles they hang around in, but they're trying to predict price. And I know what they want to see in price. And when I see what I know is likely to happen, and it's wrestling with that logic that they're holding on to, hoping with gimmicks and bullshit, I have a high probability trade. That's the ones I tweet. That's why they work. The things I tweet, those instances are exactly the very moment when retail logic is arm wrestling what I teach you, and it's losing. My shit works. That's why the things I tweet pan out. I don't just go out and tweet whatever comes to mind. I'm waiting for that moment where I have most of the things I like to see in my favor. And then it goes to script. Before I started this Twitter space, I sent a link out. I said, go watch the Wednesday live stream, go to the 3 hour, 5 minute, and 30-second mark. And you'll hear me outline where I was saying, people ask, why don't you explain to us what makes you see a trade, or when a trade isn't good for you? How do you differentiate something that's in the charts? Like, how do you know when a trade's really there? What are you looking for? Well, again, it gets back to experience. You can't Well, think about what you know now. Do that for a second. Think about what you understand about fair value gaps, the 2022 model, how price goes to old lows for liquidity, above old highs for liquidity, and time of day when certain things form. You didn't know that shit months ago. Look how much more you understand now. Now try to think about how you.
Yeah, what do you think? How much do you think? How much do you think you're gonna understand in like 3 years from now, 4 years from now, 5 years, 5 years, years? I'm not saying 5 months. I'm saying 5 years. That's why I really ain't trying to rush this, and I'm giving it time because like 5 years from now, you're gonna be a whole different person, whole different beast.
That didn't know what you know right now, how could you understand yourself explaining your present understanding to how you didn't understand it then? That's the predicament I'm in as a mentor. You need to experience it. You need to see it. And
If it's a hobby, you don't count the days. If it's a hobby, you don't count the days.
knowing yourself, because you're the same person back then and here, right now, which you have more understanding, you know that no amount of talking, no amount of jawboning about what it is and what it isn't, your ignorant self, before you've learned how to do what you know now, would never appreciate anything. Even if you yourself went back from the fucking future, you would be like, what the hell are you talking about? Because you weren't there day after day, week after week, for now, a couple months now, seeing it explained before it happens. You can't take that experience and articulate it. Words aren't going to reach far enough. It's because you have experience. So that's what I mean when I say, when certain questions are asked, how do you this and how do you do that? Experience, 30 years. And you're getting that experience every time that we spend time together. When you're looking at your own chart studying, you're getting that experience. You don't realize it. It feels so infant, no, not infant, but it feels so insignificant right now because it's early in your development. You know, every time a baby tries to start to stand up, it hasn't been able to even stand on its own yet, but it tries to stand up and it falls over. Every little time it does that, it's incremental experience. And finally, one day you come home from work and your kid can walk around. It just happens like that. But it didn't just get up out of the womb and start running around. It's incremental. But you have to have patience. But you're not going to learn it fast. It doesn't happen that way. But the best way of doing it is seeing me explain it real time. And there is no gaming of TradingView when you're calling it real time every minute. Sorry. When you record your trades, entry, placement, management, there is no gaming that. It's what it is. The last 2 days, even though I wasn't with you all, early morning before the morning session because I was running around in the banks and such, I spent time with my older students and I was calling the market with them, and they watched the markets pan out to script there too. I mean, they're used to it. I mean, when I used to teach every single day for them, they would see those types of things on a daily chart, hourly chart, 15-minute chart.
Yeah, from Colorado.
You all have been conditioned to expect that now from these concepts because I've been doing it with you all since last year. In November, all that stuff stops, and you'll have to depend on your own time and energy put into this. But by then, you'll know what you're supposed to be doing. You'll know what to go in and practice your drills with. And I practice still. I know how to do this, but I still practice. I take myself into events like non-farm payroll, and I study. Where do I think that the liquidity is for this? On the CPI number, I told you the boundaries of how far that we're going to reach for liquidity for CPI. And it dropped like immediate right down to the sell side. Went one tick into the level beyond it, lower, and then right on up. Pretty neat. That's the game I like to play with price action. When I know I don't want to trade it, I want to see how will my algorithm reach for price action. Where is it going to reach for? Where's the liquidity at? And when you see it like that, it's a fingerprint. That's all I'm showing you is that these things repeat because it's coded. It's written this way. And you see enough of it now to know that it's beyond coincidence. And it's something that you can do yourself. You can wait for these instances to see price do certain things to tip its hand to you. And you wait, just like smart money does. It waits for the market to tip its hand. It's not waiting for patterns to form. It's not waiting for indicators and averages to cross over. All that stuff is the opposite of what you're supposed to be looking at. You're waiting for a certain time of day of week, economic calendar, operating times, New York session morning, New York session afternoon, London session. And you're waiting for the market to tip its hand on where it wants to go. That's the draw on liquidity. But every single day, folks, listen, every single day, the market gravitates to buy side liquidity or sell side liquidity. And before it gets there, there is a fair value gap. That's always there. It's always there, folks. It's never going to be hidden from you. They're never going to fucking change the algorithm and remove that. It's not going to happen. That's not going to happen. There's always going to be people out there placing stop loss orders to get in or to get out of a trade. That's liquidity. That's necessary. That's fundamental to how markets are booked. You need another counterparty. And thankfully, just like P.T. Barnum said, there's a sucker born every 2 seconds. So it may not be 2 seconds, maybe every minute. But the point is, there's suckers born all the time that want to come in here with their retail bullshit, harmonic patterns, Elliott wave horse shit, yin and yangs on their chart. All that stuff is a reason for them to do what? Push a button. That's it. That's the instigation, the cause for them to do it. And the effect of that result, sometimes is lacking. You have been conditioned to anticipate precision. That's where your pursuit is. You're not trying to be someone that pursues being right. Because at some point, being right is going to no longer be enough. So what do you do to satisfy when you're right more times than you're not? How do you stay satisfied? You pursue excellence. Excellence in execution. Excellence in being right. Because at some point, being right is going to no longer be enough. So what do you do to satisfy? When you're right more times than you're not? How do you stay satisfied? You pursue excellence. Excellence in execution. Excellence in precision. Excellence in managing risk. You refine your craft to be razor sharp, always at the ready, dialed in. That is the pursuit. That is not, I gotta be right. I gotta be right. When you do everything correctly through your model, the output that you get from that will be easily referred to in hindsight as you did that right. Notice the difference there? You're pursuing something else as the goal. But by doing that, you get what it is that you're trying to do initially as a new trader given to you. You get it as the result. But your pursuit is not to be right. Your pursuit is to follow the model, the logic, the plan, price action, studying what it is that you're doing, and waiting for any kind of input through your watching of price or the experience factor that the analyst is going to come welling up inside of you, speaking to you through your conscience, saying, okay, we're in troubled waters. Okay, I'm feeling a little disoriented right now. I feel that this trade is questionable now, so I'm not going to sit here and waste any time, develop a panic attack. I'm not going to waste mental capital because there might be another opportunity. And if you're bogged down with this, you won't be able to see it. So how do you do it? Half trade off. And if I can't do half, kill it. Done. Spend 10 minutes doing something else. How hard is that? It's going to feel impossible when you're in it. But you got to remember this lecture now. This is it. This is the standard operating procedure. This is your SOP when the shit hits the fan and you are now in troubled waters and you have lost the plot about the trade. You don't even know what you're supposed to be doing. Stop loss is a problem. The target's a problem. Holding is a problem. You don't want to get out. You don't know what to do. You're like a sailboat out in the ocean with no rudder. Wherever the wind takes you. And that could be scary. And it's justified for you if you lose sight of what it is you're doing and you're disoriented for you to feel that way. So the way you gain control, remove risk, half position, take it off, and leave the charts. Minimum 10 minutes. And I promise you, you'll either walk back with a fresh perspective and you're not going to be disoriented. And you might see something in the chart that says, you know what? Everything's okay. And if you get another fair value gap or something else that gets you in to add another partial, you can put back on the part that you just took off. Now, see what I just walked you through? I walked you through how to manage yourself psychologically and emotionally in a time when you will experience this with real money. I promise you, you trade long enough, you're going to have this occur in your trades. The problem is, if you have it frequently occurring or manifesting, you are over leveraging. That's the clearest indication that you're using too much size. If it's hard for you to hold a trade and you're questioning whether you should get out, that is always a factor with over leveraging. So dial it back. Go down one size less. And if you still feel that way, go down one size less until you find that sweet spot. In that sweet spot where you put a trade on, you don't care. It might be 2 contracts for ES. It might be just 1. And you can build a career on just that. You don't need to build it bigger than that. But once you understand how to pyramid, you can start with 1 contract. And every time it gives you an opportunity to enter, but not so close to your original entry that it makes it difficult, you can, like for instance, say you want to sell short the ES. You sell short at 4,000, hypothetically. And it drops down, it pulls back into a fair value gap that's still bearish at 39.96. Okay, you can sell short 1 more there. It breaks down, goes into 87, comes back up to 90 into a fair value gap or a bearish breaker. You can add 1 more there. You're still trading 1 contract, but every one of these new pyramid entries is a trade in and of itself. and you gradually build up that way. But you're still a one contract trader. You're just adding more incrementally, one contract at a time. That's called pillaring. We're just adding one to the original position. One, whereas a pyramid is you put your biggest position on first, reduce it. Your next entry would be on that, and then reduce that size, and then take the next trade. That's a pyramid. That's how you see me do 6 contracts, 3 contracts, 1, and I'm at 10 lot. That's like my bread and butter go-to. That's the thing I'm reaching for. That's why 99% of the trade executions you see me doing that. Is it advantageous to do it any other way? It's just something that's just me. I can do less. I can do more. I like to have $500 per point, and 10 contracts on mini will get you there. But you can go in scaling in with 6, 3, and then 1. And every time I'm adding less while there's profit behind that one. So even if it moves against me, it's not a huge compounded loss. And to understand what I'm saying is if you just go look at my examples I have on Twitter and the few I have on my YouTube channel, when I'm showing you pyramided position building, that is based on I already have equity in the trade, and I'm not going to risk that equity to a point where it's going to make me a larger loss if it goes against me once I have my full position at 1. But you'll learn all that stuff. We'll be doing all that stuff in the summertime, teaching you how to build pyramiding and scaling in and stuff like that. But I'm not sure where I got this idea. It kind of like was on a whim tonight to talk about all this, and I hope it was helpful to you. Maybe if not anything else, maybe it was a little bit entertaining. But the things I mentioned in here are real world experiences. I went through it myself, and as a 20-year-old, you tend to think that you know everything when you don't know shit. And I had that moment before, whereas I know. You tend to think that you know everything when you don't. New shit. And I had that moment before, whereas I know a little bit more than the average bear now, but then I really believed I knew everything. I didn't know anything. So when I got these points of panic, because I readily recognized that I was in over my head, I was doing trades that I shouldn't have been taking and building up as big as I was doing it, and I wrestled with the whole time I was in the trade, and I couldn't tell you what the price was, even though I was looking at the chart. That's how disoriented I was. And that can happen to you if you're over leveraging. You lose completely every frame of focus, all sound logic, everything completely. It's like you're drunk. And I've never been drunk in my life. But that's what it felt like. Looking back and thinking about it, I was not in the right state of mind. I had no idea what I was doing. And if anybody was to sit down and grab me by my arm and say, "Hey, Michael, listen, you need to get out of trade," I wouldn't take the advice. Like I was completely underwater, drowning, but foolishly keeping my head under the water myself. And that's what you do when you blow your account. You do that. Or it's gambler's numbness, where you just sit there and you press the button. Remember the analogy I used when I went to my first year wedding anniversary, and I was trying just to lose the $100. I just wanted to lose it, to be done with it. I could have just said, you know what, I lost $80, $90. I'll put the $10 in my pocket and I'll just grab an ice cream or something with my wife, and there it is. That would have been a better decision. But it doesn't feel like a better decision when you're there, because now you're pursuing something, and you don't want your pursuit to be about being right. So hopefully you found something useful in this one tonight. Hopefully I've given you something to work with in terms of managing the psychological demands that we place on ourselves as traders, and when we end up in these deep waters. So I'll talk to you next time. I won't be doing a Twitter Space tomorrow, obviously. I'll be on here tonight. I'm going to enjoy my weekend with my kids and my wife. And I'll be back out again next Monday, Lord willing. Until I talk to you then. Enjoy your weekend.
Just not currently. It'll probably be some time before I actually start trading it again. All right, we're gonna write down. Dang, I got 1, 2, 3, 4, 5, 6. I have like 5 pages of notes just from that one lecture. What happened? Nothing happened. I just have been taking it a little bit more slow, you know. And instead of like, I don't need to be trading right now to be making progress, and I think taking a break now, taking a year, maybe, I wouldn't say a year might be too much, but a year of like just demo trading, backtesting, tape reading, of just doing that, I think that's gonna help my mindset so much, or that's gonna make me so much of a better trader in the future. And that's what I'm submitting to, just personally. Just my personal uh, take. Demo don't have emotions to play though. I would say the fear of being right is what I struggle with. So that's why I listen to this lecture. But even then, it's just distracting myself from the focus of just trying to trade, instead of just trying to read price and become better at reading price. That's just me personally. That's me personally, and everyone's got their own things that they deal with and their own baggage that they carry. And one of the things that I used to carry, or I still carry, is trying to be right. Trying to be right, and being right, as we know, is not mean that you're making money. And the whole goal of trading is to make money, and you can make money by being wrong, and you can be right about being wrong, which is why this lecture was just so good, and there's so much value in it, and I think that it's something that everyone should listen to. And I'll probably try to listen to this lecture like 2 times a year. No, like before I go into live funds, I'm definitely gonna listen to this again. Yeah, that's for sure. I would agree with that. See, I don't know what happened to Google. My whole Google got an update and it literally changed everything. None of my data is saved. all PID paid yourself. Dang, I still got like 3 pages left. Backtesting psychology? Yes, sir. Got like 2 pages left. No way I spelled that right. Wow. All right, we just finished that. We just finished that whole thing. Okay. Let's hop into like a little thing of what we're kind of anticipating. Can I add another indicator? Why did I thought I had that favorited? Can I not? Can you not move it anymore? No. No, dog. What is this? This is not the same. They changed it? Oh, dog. That is not the right indicator. I mean, it's like the same thing. If the look back. Did they change it? No. Did it? Euro. Pulling back to this order block. I don't know. I don't like this. I don't like this. I don't like that displacement that we had. I also don't trade Forex, so it's not really my main concern. My main concern is trying to get this indicator to look on my chart now. Wow, I thought that was a nice indicator. Let me close these charts. Why'd they change it? Oh, it's ICT anchored look back. That's what it is. It's the anchored. Here we go. Did they patch? Did they patch it? Wow, look at 2.5. Where's that from? here we go. Okay, this is much better. That I see to lower these. Alright, so if we anchor this on midnight open, so we have this low right here, which is going to be a probable at some point where we're going to probably draw into. Overall, we're in a deep premium. It's Monday with no red folder news. I'm really not expecting much, so therefore, I'm going to be more looking to backtest today, but there's not really much of significance. If we look at it on the hourly as well, we are in a deep premium because we have all this liquidity that's below us here. So I really think that we could get some form of manipulation higher and then displacement lower. And then this is what it would be like for the whole week. Obviously, we do have draws on liquidity that are lower than market price, but until I get something, or until we get something, displacement, we just have bullish momentum here. So I'm not really anticipating much here. I do want to do standard deviations from this. We're about to be at that negative 0.5, so it's where we could manipulate into that price level right there. 0.5 of this, that could just be a bread and butter target, and maybe we could see something, but I'm not really expecting too much on this. Not really. All right, let's backtest for a minute, and then I'm gonna get some food, and then we're gonna start trading, and then it's gonna be live, and then we'll see. We'll see from there. Yeah. It's been I've already been live for 4 hours. Does not feel like that at all. Got through a two hour psychology talk, and honestly, I think psychology is I value psychology so much in trading because I know that even if you have good technical analysis, if you don't have good psychology, then that technical analysis that you have is useless. This was election year. So we need to replay more. Doesn't have enough data yet. Alright, we'll give it a few more days. So buy program up to here. Where's standard deviation of this? So you have a nice -1 right there from here. -2.5 possible. Oh, sorry. -1.5 possible target there. Okay, so 15 day. Oh, shoot. Where can I move this? Well, we're Thursday. We're Thursday, June 30th. 2016. So we're in 2016. Let me anchor this. June 30th. Now I can drag it. Okay, so important liquidity. We already swept 40-day lows here. We have these 20-day highs up here. That could be a favorable draw on liquidity here. And we also have maybe this imbalance is what I would note here. I would note this imbalance as well. Could be a possible draw on liquidity. I don't think 60-day lows will be a possibility. And then also this imbalance here that we already have repriced to. So maybe this low could be a draw on liquidity. Let's zoom out to the hourly. Let's see where we're at in the hourly. Hourly, I would be looking for this imbalance here maybe. And then that we could possibly draw into. We have just taken recent buy side. So in terms of upside liquidity, we have is this right here. But honestly, I don't really expect that. It is something to note though. It is something that is a possibility. There's too many new day opening gaps here, so I'm just gonna do 12 and then 10. So where's the low resistance liquidity? Kind of have some right there. We have low resistance liquidity on both sides of the chart here, but we have just recently taken buy side. But now we're displacing higher. We could just be rebalancing to equilibrium here. Equilibrium has been met of this dealing range here. So I want to see possible manipulation here. Okay, so we come up 15-minute balance maybe. Let me actually see. We have whipsaw at 9:30. Kind of expected because we have low resistance liquidity on both sides of the range. Alright, and now we have a down close candle there. I would want this to be an order block. Now I'm looking for this low here. Choppy conditions right now. Displacement. We have a fair value gap. Alright, draw on liquidity met. Let's see if we can make it to that imbalance. And then maybe this low. Constant approach for that new day opening gap there. Oh yeah, I would like to see lower prices. Okay, reversing back up to the low resistance liquidity at the highs during the 10 a.m. hour. That's your silver bullet there. You have a 5-minute SysD, 2-minute. Let's look at 2-minute SysD right there. You have mitigation right there. Mitigation we draw into. Now let's see. Do we want that imbalance? I don't think that we will, but let's see. so we don't draw into that imbalance. Dang, there's just so many new day opening gaps here. Wait, that's an hourly imbalance. Yeah. Oh, it's already 2 p.m. Shoot. We had 9:30 opened. So we've already swept the 40-day low. Actually, let's see what yesterday did first and foremost. So we did put in the low day after taking that we did put low day after taking that 40-day liquidity. We mapped down, we retraced all. That was nice 15-minute order block in for about, I didn't even see that, and then just switched to higher, falling short of that imbalance. That down becomes a good draw on liquidity for the next day. So bullish structure. Here we come back down, same thing. We take 40-day low, and then we expand at 9:30 after we're deep within this market maker model. Here we put in a high day. And look at where we expand from. Right from constant encroachment of that new day opening gap. I know it's kind of messy, but kind of are a lot of gaps on this chart. Alright, we're in a deep premium. We have not had a single stop hunt here within this dealing range. So let's grade this to see where 75% is, because I'm low-key kind of expecting a stop hunt and maybe some more consolidation here. I just don't see that we just go straight to this draw on liquidity. We could. Yeah, I would like to see at least this imbalance for something like today. I would like to see this, especially after we've taken buy side liquidity. But I honestly think this could be a big sell day if we have news for it. Okay, Loki, let me remove this. Let me add the news. News by 2 degrees. Go to the indicator. Wait, what is it? Economic calendar. Oh, that ain't nice. That's not nice. Indicators. What do we want? It's news by 2 degrees, right? Alright, whatever. Yeah, I'm definitely looking for this low. I definitely want to see this low. We're in a deep premium. Let's see where we open at 9:30. Okay, we're about to open here, but we have created all of this low resistance liquidity, which I don't like to see, and we have just taken this sell side level. That was a half day. That makes sense. And we repriced to that low before 12 p.m. Alright, we're in a deep premium, but I still want to see lower objectives. Let's drag it over here to the hourly. I don't think this low is a reach, honestly. We're in that 75% doing range. Oh, we missed the 9 a.m. Wow. 9:30. Judas into this fair value gap right there. Notice that 75%. 75% level acting as resistance right there. And new day opening gap. But honestly, I don't really want to use new day opening gap indicator for this because it's low-key not clean. Alright, and then we fail to roll over. We come back higher right into this order block right here. 8:30 opening price as well. And now we've taken sell side. Now we have SysD here. Is that order block? Nope, that order block does not get respected. And then we just see repricing higher at PM. Okay, now we've had a stop hunt in this market maker model here. We come back to 20-day lows here. Let's see where we're opening up for next session. Oh, I went too early again. Now I think we're gonna finish this model. Consolidation that day. Yeah. No, look at this market maker model though. What happened? Well, we had massive repricing, there's no like consolidation around 50%. We have this little consolidation, but anticipate some measure of stop hunt here. We come back down lower into this fair value gap, into this imbalance. We probably have a 4-hour imbalance there. Yep. Do we have a daily imbalance or something? Yeah, barely. Then we took this low here. Come back down. Where's 50% of this? Whew! Look at consequent encroachment of this right there. And then pretty much 75% of that right there. That's gorgeous. Then we come up to take buy side. Nice model there. Order block low? Does that, or order block high, does that get repriced too? Almost. Nice buy model there. Alright, now buy side's taken. Since buy side's taken, I'm just looking for intraday. Okay, notice how we expanded. No, okay. If we had swept this high, I would be looking for these lows here, and possibly maybe something within here. But even then, like it's just bullish momentum. But look at this. We just expanded, come back, order block straight to what time? 10:15. Silver bullet, and then boom, we get higher expansion there. Right to a new day opening gap. Order block right there. Order block. Another order block. 9:30 expansion. Boom. Notice it takes a little bit of time to retrace. We end up putting in a swing high here. There's a swing high we put in right here, and then we get retracement straight to that order block, where we accumulate more orders, more longs there. Here we have what within the 950 macro. 950 macro. We do come back to this 2-minute fair value gap, but we want to offer fair value. I'm looking. I'm at Dow. I was like, what? Then we come back down to a 15-minute. 15-minute order block to accumulate more orders, and then head to buy side. Is that a fair value gap? Fair value gap in, fair value gap out, balanced price range, institutional order flow entry drill. Same thing, another day, another day, maybe mean threshold of this. Nope, not even 75%. Displacement higher. Pin bar right there, maybe 75% of that wick. Ooh, yeah, perfect. Up to where? Buy side projections right here. What does this look like on the 2-minute? Nice 2-minute institutional order block right there. Boom, fair value gap with the propulsion. Whew, how many points is that? Is this in 2015? Probably like 10. 6 points on NQ in 2016. This would probably be like 30 to 40 points today. That's crazy. Like we're spoiled. I think we are spoiled. At least I would say so. Where are we drawing into on the... We have this high right here. Low key, we just taken all time, or we just taken this big buy side liquidity pool. I'm just expecting to see maybe consolidation on a day like this. Let's see. We have just a lot of volatility before New York session even opens. Yeah. Just consolidation. Extreme discount, extreme premium, extreme discount, extreme premium, back in equilibrium. Notice how many times this equilibrium price gets referred to. Nice. We came up, took 60-day highs, went back to 60-day lows. Look at new day opening gap, gets respected, then we come back lower. Look at that new day opening gap respect. When do we 9:30 we displaced right into a new day opening gap, and then we respect it on the 15-minute chart. On the 5-minute chart, it looks like we're displacing lower. We're holding below that, but no, on the higher time frame we are respecting it. We have a 2-minute change of state of delivery right there, and then we have a 2-minute propulsion here. It kind of gets disrespected. Break through that. Again, more volatility in London. How did they get deleted? We displaced lower at 6 a.m. Just consolidation, bro. We just consolidation. Expand off that new day opening gap. It actually has a magnet. 9:30 we expand off of it. When do we expand? 9:30. There might be some SMT with the yes, I'm guessing, in a order block right there and imbalance. All right, now we could see this new day opening gap. Nope, we're keeping bullish momentum. Stop hunt. Bullish shorter flow. Kind of a consolidation week here. You know, just into the end of the week. All right, Monday just opened. Wow, what was Tuesday, bro? We come lower. Well, that's aftermarket. Look at that support and resistance between new day opening gaps. That's all I gotta note. Those are support and resistance factors. All right, now we've broken above that new week opening gap. Bullish sentiment. Yeah, we broke above that new week opening gap, creating now bullish sentiment. I kind of want to just see new how the current new week opening gap, or we break below it, because ICT talks about, okay, if we break below new week opening gap, we can use that as resistance then. So we've broken below it, then we come back up. We used it as support there. What time was that? Was that 9:30? Yeah, so we broke above it, used it as support at 9:30. We're referring to this a lot, meaning we're probably in consolidation. So consolidation. All right, new week opening gaps opened. Monday expansion, kind of. Tuesday dropping lower. We're now below that new week opening gap. Wednesday uses that as resistance. Refers back to it. Wait, was this FOMC? No, it's not really volatility at 2 p.m. NQ went to the 4-hour PGA, then after it cleared sales. NQ? On the 4-hour? This constant encroachment off the new week opening gap right there. I'm looking for these highs for sure. I want us to manipulate them. If we trade into them at 9:30, I think we could break down and seek sell side. But overall, I'm remaining bullish bias until something gets proven otherwise. But until I see someone else, then I still have to be bullish. Oh, that's gonna be like 2015. I'm looking at this low right here, and then maybe this imbalance. That would be it for NQ. If we look at ES though, yeah, ES does look like we might have SMT somewhere. We are above new week opening gap too, so I'm gonna refer to ES's new week opening gap. If we look at ES's new week opening gap, it's bigger than NQ's. Let's look at YM. I'm curious to see what YM's doing right now. YM looks like we're in a buy. Well, it appears to be that we're in a buy program on YM, and that we actually might want to come up to this high. But honestly, YM, I'm just like completely. Actually, wait, what's that doing range I have? Okay, we've expanded through equilibrium. I definitely want to see YM have fast repricing higher to buy side. Yeah, looks like we're repricing this high. I must just sweep that high. Use that as some liquidity. Oh, did I use? Yeah. I moved out of that contract. Let's go. I want to use another contract. Here, we'll use one of these tabs. I have like 4 NQ tabs up here. Let's go like NQU. We'll do NQ M. We'll go 2021. Screw it. I mean, I don't like how I did that because it kind of spoiled it. See, because this tab has the news indicator. Does it work? Oh, it even works. Where is it? Why is it not popping up? Hey, there we go. W. So it seems as though Tuesday, we have 6 a.m. news. That's the thing. Tuesday, there's no red folder news. Alright, it's about to be 9:30. Well, we see 9 a.m. expansion here. I don't like. That's kind of annoying that it shows you right into a new week opening gap, new day opening gap right there. Notice you're at 9 a.m. 9:25. 9:30, we get a down close candle. But we're repricing into a new day opening gap. And we have this nice imbalance above market price here. It could be a good draw on liquidity here. But I'm realistically looking for a new day opening gap right there. A reaccumulation into that fair value gap. I like this imbalance. I think this imbalance might need to get repriced too. So I'm gonna stick to that. I'm gonna submit to that bias for right now. That price will want to go up there. It's 6:30. Okay, we had big 8:30 news. Oh my gosh, perfectly 2 new day opening gap. Honestly, I think I'm expecting repricing higher into that imbalance. I want to see us inverse this. Let's see. No, we don't get that. We just get a stop point here. Where's 50% of this? We respect 50% of that inefficiency. Then we get a change of state delivery off of that. At 9:45, come up, take buy side liquidity. Fair value gap in, not really fair value gap out. Now we seek lower prices here. Alright, I think this could be low a day here. Let's see. We're going to another new day opening gap, new week opening gap. Yeah, so we're just repricing this new week opening gap. So we didn't want to see that imbalance. Is this not an imbalance? Oh, I didn't see that. I just saw that. Is this not an imbalance on a lower time frame? Oh, it is. It's because we have this buy side delivery here, sell side delivery. Okay, we will at some point, but just not right now, I guess. We could have 9:30 expansion up to buy side here. We still haven't hit that. I think we reaccumulate here. We'll probably return to this area. We're about to close. Notice how the market's almost closing. We're not within any new day opening gaps. We've repriced this inefficiency. Market on close is gonna reprice right. Oh my gosh, that's how you know. That's how you know when the end of day macro is gonna work or not. But look at this right here. We expand. 9:30 opens here, then we come back here, then we expand higher. Fair value gap in, fair value gap out. Signature. Displacement. We come back down to this low, to this imbalance, this balance price range here. Displacement higher, imbalance right there. Generate liquidity. Displacement right there. Nice delivery there. That's like an old. I still want to see this now. This now is my draw. Because now we've had a stop hunt here. We've had a actual bullish for rally gap here that's gotten respected. Mitigation. So we're accumulating before market open. We traded this order block here. We swept highs here. Or first we came back. This looks like a bearish signature. We have this low resistance liquidity in the market. We might have SMT. inefficiencies hit. Oh, beautiful. Oh, beautiful delivery right there. It's all within a day, is it? 9:30 open, new week opening gap, come back down, reprice lower, then expand off that new week opening gap to where sell side liquidity that rests there. Oh my gosh! So we come back up, redistribute one more time to a 15-minute. Oh my gosh! Oh my gosh! That is gorgeous right there. All right, let's watch a lecture.
Okay, folks, welcome back. This is going to be a lesson on institutional order flow and secrets of efficient price delivery in Forex. Now, what I'm going to be showing you is the fingerprints of algorithmic signatures, and this is one of those higher order price action lessons that I would only give to a charter member.
Your boy is charter member.
Okay, institutional order flow and secrets of efficient price delivery in Forex. We're going to be introducing the interbank dealing range, external.
Hold up, I'm gonna grab some food. We'll get back. We'll finish this lecture. Wait, it's 6:18. We have like about an hour and 15 minutes till market opens. I think that'll give us enough time for market to open. I'm honestly not too interested in market open too much, honestly. Well, we'll see. We'll see. Actually, if NQ draws up into that buy side liquidity pool right around market open, that could be a nice. We could see a nice short to all that low resistance liquidity, all those stack lows. I'll be right back, and we'll come back, and then we'll be on, and then I'll be live all day.
and internal range liquidity, weekly power of 3, hierarchy and institutional order flow, how IPTA, the interbank price delivery algorithm, delivers efficient price, and a weekly low delivery. So when you look at price action, and I school all my students with the thought process of removing this insatiable need to have indicators on your chart. I'm going to show you why indicators are not required by actually putting on an indicator. So I'm saying this up front, okay, because there's people making YouTube videos about me saying that I use indicators despite me saying I don't believe that anyone should be using indicators. So there's a context, okay, that you have to have. And I'm only going to be showing this in contrast. So you'll see that the visibility that my concepts and processes allow me to see everything before your indicators will show you overbought, oversold, and things of that nature. All right, so this is kind of advanced. So if you're new to my work, it's probably going to go over your head in certain parts. For some of you that have been familiar with my YouTube channel for years, you're going to see some things that my mentorship group is very familiar with, and you're going to see things that you've not been exposed to anywhere else. This is the actual market. This is how the markets book. This is how the price is created and presented on your charts. It's not patterns, okay? It's efficient delivery. And I'll explain that when we get into the chart, so let's do that now. All right, folks, we are looking at the euro dollar. This is a 15-minute time frame, and the data that I'm displaying is from the feed that's offered on TradingView for Forex.com. So that way, if you want to compare and contrast your own charts and look at what I'm showing you here, that way everything will be on the up and up. All right, so I want you to look at this segment of price action, and right away I already know and anticipate, and it's unreasonable for you to understand where I'm going to draw your attention to, but I'm going to hopefully pull back the veil a little bit and show you how these algorithms operate and where they reach for their data, okay, which is what I teach as a PD array. Critical highs and lows, areas of inefficiency where price
So they reach for their data.
Great and really unreasonable for you to understand where I'm going to draw your attention to, but I'm going to hopefully pull back the veil a little bit and show you how these algorithms operate and where they reach for their data, okay, which is what I teach as a PD array. Critical highs and lows, areas of inefficiency where price needs to most likely go back to and rebalance, and I'll explain what that is when we get into the video. But looking at this price action, there are specific things that are important, and it's not obvious to traders unless they're schooled to look for it. And no one out there has ever revealed this before. No one has ever explained how these things occur. You always have these little pieces of things, and it feels like you've always been in search of that next thing. If I could just figure out that one thing that unlocks everything. And while this lesson isn't necessarily going to do that, it's going to show you, again, I have a very deep cookie jar, okay? The lessons that I have taught publicly and even in my private mentorship, they're not done. They're nowhere near done. And there's so much more depth to it. So I'm going to kind of bring you into this, and even my charter members have not been exposed to this. So I want you to, number one, appreciate the fact that my willingness to do this is very charitable. Okay, so I don't need to do this. I do this simply because I enjoy it, and it's also kind of like a way for me to snub my nose at the folks that think they know everything because they got a couple videos on the sly. So we're looking at the euro dollar to the 15-minute time frame, and I want to take your attention to this area right over here. Now, everyone knows because of this YouTube channel, I've made it very public, and everyone has it in their analysis, and that's great because that was the reason why I shared it. I want everyone to learn from it and grow from it. But these relative equal highs, above that, there's going to be buy-side liquidity, and below this area here would be sell-side liquidity. But if you're looking at your chart and say this is the chart that you have at the time, and say this is mark to market right now, real time, wherever you are in the world, this is what your chart looks like. What do you use to glean any kind of information? Well, I'm going to introduce the interbank dealing range, and what that is a specific range. Okay, you've probably seen even my videos in the past as well, where I'll take a Fibonacci and I'll lay it over top of a particular price leg, or a particular swing low to a swing high, or a swing high to a swing low. And perhaps you looked at that and thought, why is he picking that swing and not this swing? And I've had trolls in the past, say, he doesn't know what he's doing. It's just he's cherry picking. I'm going to show you one of the things that I do, and it's based on how the algorithm refers to old data. Your indicators don't calculate on the basis of this. Your school of thought and retail things that I even studied too, folks. Okay, I started in 1992. And I was actually introduced to technical analysis back when I was 16, which was years before 1992. And my uncle actually was trying to teach me technical analysis back in 1988. And being a young man, I really wasn't all that interested, but I was being exposed to it at that point, overbought, oversold trend lines and that such. So, but in 1992, I formally sat down and began my learning November 5th, 1992, on a Thursday night at 9 p.m. So that's one of those moments in my career I can look back and say, oh, that started then. That was like my birthday as ICT. None of the books I purchased, none of the courses I purchased, none of the seminars I attended, all those things never really got to the heart of what makes price move, why is it doing what it's doing, and this is one of those lessons to show you just how much is actually going on behind the scenes that you're never really exposed to. I want you to take a look at this area here where the buy side liquidity is. Do you see how we ran above that with this price run? And now also, can you see how this swing low here that starts this price run was taken out with this movement here? So we have two reference points. One, this is a run on external range liquidity. That's over here. And this low here is a run on internal range liquidity. Now, while I'm not going to go into great detail about what exactly is internal range and external range liquidity, it's important for you just to understand that I'm calling reference points to this low and these highs. And we have cleared the board, if you will, on both sides. Sell stops below this low have been taken out, and buy stops above these highs over here have been taken out with this price run. So that means we have a specific price range. And I'm going to show you that now. We have this new low and this high. What that is the interbank dealing range high and low. What it specifically draws attention to is the most recent run on liquidity above the marketplace, which is buy side liquidity, and below the marketplace, which is sell side liquidity. So once you have arrived at a particular swing, that has done both, ran buy side and sell side. Now in this instance, you can see how price has ran buy side above these relative equal highs over here. It ran all that buy side liquidity out first, then it ran for this area here, which below that low would be sell side liquidity. So in this instance, the macro was run buy side first, then attack sell side, where it could have started running sell side first and then running buy side. But you would use whatever those key highs and lows are that runs both sides of the marketplace. So again, it's not important for you to understand this at all at this point. Just know that that's the framework I'm using. I teach internal range and external range liquidity and dealing ranges, but it's beyond the scope and time because it takes multiple lessons. But I'm introducing it publicly here because I just want to show you. I just really want to show you something that transcends everything else. Okay, and you'll see the logic, and you'll also start to see some of the things I've made available for free on this YouTube channel, how they plug into this narrative, and it becomes like Swiss timepiece. It's perfection. Because if these markets are in fact rigged, if they're controlled, there's going to be signatures that prove that they are, and they're going to be precise, and they're going to be predictable. They won't have any area of randomness, if you will. Okay, so this area here and this area here, I have introduced that. So both buy side and sell side liquidity has been purged. Now this low and this high, that's your range. Okay, so if we scrub over, you can see how we started to run higher. And once you have that dealing range, okay, the interbank dealing range means that there's going to be a lot of interest in seeing price return back inside this range to a particular price level. Now, as retail traders, we're indoctrinated to think in terms of buying when the markets are oversold and selling short the markets when they're overbought. And right away, you look for things, and you probably, some of you that are really hawk-eyed, you've probably already seen this, thinking, oh, you say he's using indicators the whole time. He's a liar. He's a liar. He's trading divergence on %R. I'll bring this up in a second, but we look at price action. In my group, in my community, I convey the importance of just reading price action because it'll give you overbought, oversold by understanding the ranges that you're trading in. A lot of folks don't realize when you're looking at overbought, oversold indicator or momentum indicators, the mathematics behind that, they're just looking at a predetermined range of bars. Okay, and then wherever the high is high and wherever the low is, then it plots that and it gives you what we understand in the retail universe is overbought, oversold. But you don't need that. Okay, so the line that you see here, this orange line, I'm going to outline what that is. If you take the high here that ran the buy side liquidity and then this low here taken out there, that low, between this low and this high, if you find the exact midpoint, and the way you can do that is use a Fibonacci to get a 50% level. That's really the importance of a Fibonacci to me, the 50 level. Because at this level, if price goes above it while inside this range between this high and this low, we are at a short-term overbought scenario. Now, by itself, it doesn't mean anything. If we can draw some kind of parallel to something in this price leg when we are above that midpoint or equilibrium, then it's more salient. It's meaningful. It's something that we can take action on. Okay, just because we went above that doesn't necessarily mean that there's a setup that I, as ICT, would take. Now, it means that we can anticipate some measure of a decline, but that might not necessarily equate to a short. Okay, and I'll explain as we go along. But as we go further into price action, we start a new week here. So this is all price action from last week, and Monday's trading starts here, and then we go deeper above this high and deeper in reference to this high to low. See how much higher we are up here? We aren't going back to this high. All we're trying to do is look for periods where it trades above this orange line, the darker one. Actually, I can take this line off. As a matter of fact, I already talked about the liquidity pool, so let's take that off. And that'll probably make it a little bit easier for you to follow along. So this was the initial run above the midpoint. Okay, and anytime we get above the midpoint of a particular range, the algorithm sees that as a premium. Okay, and what does that mean? It means that it's too expensive, okay, or approaching expensive. Now, much like in the same idea that overbought and oversold, overbought conditions can stay overbought and the market can still go higher. So don't misunderstand what I'm saying here in saying that whenever we're above the midpoint, that's an easy slam dunk overbought or shorting scenario. You have to reference things inside this price leg. Okay, so inside this price leg, there are specific things that we look for that if they line up with time and price, not price and time, time and price, then you'll see a high probability scenario. Fold. You also bring in day of the week. So day of the week is, as I taught even on this YouTube channel, and back in 2010, I shared it publicly on Baby Pips, where the algorithm, when we are bearish. Now, if this is the first time you've watched a video by me, I promise you if you go through other videos, you'll hear me discuss this in great detail. It's not being form-fitted, it's not cherry-picked. And also if you watch the video, I think it was 5 or 6 days ago from last week, where I even tell you there's a particular price level, 117.40 was my short-term target on euro dollar. And if you go and watch that video, if I'm not mistaken, I think it's like a 15 or 20 minute video, so it's not hard to find, but go back, and if I try not to forget, I'll add the link to the video where you can actually hear me talk about 1740 as my short-term target. So, and price is up here. So while that's a target, we have to have something to provide the catalyst to send price to that particular price level. So we transition from last week into new trading week here, and Monday's price action trades up to this level, and we consolidate, and then Tuesday, which is what I teach, if we are bearish on foreign currency, and I have been bearish, and I mentioned this publicly in the YouTube videos that I've been putting out. Last week, I said that I have a modest bullish stance on dollar and foreign currency lower. And I gave you a particular price level last week. Okay, so I forecasted a very price level that you see highlighted here on this chart, 117.40. And I'll even show you why I used that level. Okay, I'm going to pull back the curtain and show you everything. But I'm on record days in advance telling you that that's where I think it's going to go. Now, I'm going to pull together the things that I have taught somewhere in these library of YouTube videos I have. I don't know exactly where I have everything because I've done a lot of videos, and off the top of my head I just don't know where I have them, but it's taught. But I teach that when we're bearish, there's a 70% likelihood that the high of the week will form on Tuesday. If it doesn't form on Tuesday, it will occur on Wednesday. But if it does form on Tuesday, you'll still get a very strong sell on Wednesday as well. So your focus should be, where is price drawing to? Where's the next draw on liquidity? Okay, if we're bearish, and this was the range that we've outlined here, and this is what I'm teaching you how I interpreted price action going into this week for euro dollar, then if we're bearish, we anticipate a run below this low. It's going to leave that dealing range because it's already done its work here on buy side. And if you subscribe to the same view I was holding for weeks now, that there's a modest, not extremely strong, but a modest bullish stance to dollar. If dollar goes up, there's a more likelihood that the foreign currency markets will drop. Okay, that's the normal ebb and flow. So if we look at the relationship of that range from high to low and now incorporate days of the week, here we have Tuesday. Tuesday, we started Monday late and crossed over into Tuesday. And then as the market makes its run above this level right in here, okay, this level here is an hourly candle signature, and it's a rejection block. You're teaching mentorship, Michael. No, I'm demonstrating my creations. I have the right to do so, and it still won't help you. You have to have me teaching you using it ahead and then showing you how it plugs in play. Mentorship videos is not the same thing as you have my entire mentorship. I'm not even anywhere near done. But because you may have this in your notes or you see it in other people's charts, they don't know everything about these things. It's just a new thing. It's a new pattern. It's a new harmonic animal. It's a new gimmick. Okay, but nobody else but me knows this stuff, and it's important you understand that. But if we take a look at how price runs above, and I'll show you exactly what this is and what makes that a rejection block as we zoom out, and I'll show you why the 1740 level is important too. But we are now looking at two things. We're trading at a particular price level, which is a 60-minute rejection block, and day of the week is Tuesday, while price is expected to go lower in foreign currency and dollar higher. Okay, well, if we scrub on over here, price goes up on Tuesday, trades the rejection block, and look how far we are above that orange line. Again, that's equilibrium. So anything above this line is a premium. So that's where your high probability shorts are going to occur. But you have to have it in reference to a specific price range. This is the interbank price range right here. This is the dealing range in which the algorithm is going to work within. It doesn't need to go up above this high here because it's already done so. So the last time it ran liquidity in this range was taking out sell side. So what it'll do is it'll create short-term highs to do what? Every time it creates a short-term high and starts to trade down, traders will go short and they'll put
generated
what above this level? New buy stops to protect their shorts. So willing buyers have orders resting above this high and the market trades above that. What's actually happening? They're accumulating
short positions.
Short positions. Who is? The interbank traders. You don't see them. They're not on CNBC. They don't write books. Okay, but that's what's occurring. Above this high, they're shorting. They're selling to those buy stops being activated. These individuals that were selling short, they're now neutralized. They're no longer in the market. But their order was counterparty to interbank traders that now hold a short position. Same thing. The market drops down. The algorithm delivers a small little decline. What starts to build above here? More buy side liquidity, buy stops. Because now this one failed, but this one really is the high in the marketplace. So they can go short. The market trades down a little bit, gives them that little cookie, or they chase it down here and they put their stop loss above here. What kind of stop? Buy stop. The market runs above that on Tuesday, takes that buy side liquidity out, and interbank traders sell short to those buy stops. So now they have built in a bank of selling in here and in here. Now this is when it gets interesting because now this is the day of the week I teach and have taught publicly that the high of the week when we're bearish will form 70% of the time on Tuesday. What's the high of the week so far? Tuesday. So the market trades lower. Now it leaves all of this price action right here by breaking down. So this high, this low, and this high here on Tuesday. I taught you how to look at market structure and how to validate those breaks in market structure so you can trade with them. When the market trades below here, when we start seeing it go back above this midpoint or equilibrium, this is the Wednesday selling opportunity. Remember, the weekly profile is likely to trade lower. Okay, so weekly power 3 is we open, make the high of the week on Tuesday, and then start trading lower into Wednesday, Thursday, or Friday to attack a low, to make the low of the week. The low of the week, I even told you last week, was 117.40. That's my target. I'm looking for Euro to go to 117.40. Putting all this together, when we broke down on Tuesday, look at this area here. Doesn't look like a bear flag. It goes down a little bit, gets everyone thinking it's going to go lower, and then rams it right back up into the breaker. Trades on Wednesday, again, London session. Then it cascades lower. Then every rally from that point on, it's only going to rally to a point of inefficiency. Now, what does that mean? Let me take this level off because now we've already used it and it's accomplished the method already, so we don't need to reference it anymore. And I'm going to zoom in. Now on Wednesday, when the market starts to really start to take off and go lower, every time the market creates a little small gap in price. Now think for a moment, okay? The ideal scenario is dollar's bullish, foreign currency's bearish. We have now made a high or potential high of the week on Tuesday, and Wednesday it's selling off. So we can trust that this is likely to draw down to our objective, which is 117.40. I promise I'm going to show you why 17.40, but for now, just follow along. Every time that the market gets ahead of itself and trades quick with large ranges, or in this case on my chart, I have a down candle as a black candle. If it creates a little pocket where one particular candle, okay, only has the black range on one candle, that one singular area, okay, that is a fair value gap. That's my creation. That's mine. That little area in price action, if you just understand that little piece of the puzzle within a narrative, you don't ever need a job again. You do not need to work for your money. You have to have a bias. Are you bullish or you're bearish? Okay, if you're bullish, how high is it going to go up? What's it reaching for? It may not get right to that level, but if as long as it's drawing towards that level, and wherever the market is, there's range of potential pips that could be harvested in there. Again, your setups are not always about getting to the target. It's as long as it's moving in that direction, you can bank something along the way, and it can fail to hit your targets, but you still profited. So it's about making money when you're wrong. If you're bearish, same thing. You're looking for where's the market likely to draw to. I told you all last week, 117.40 on euro dollar. So now we start a new trading week. Do we throw away everything I've always said about the weekly range? No. If I'm telling you that I'm modestly bullish on dollar and I'm bearish on euro and I think it's going to go to 117.40, without really saying it, what does that really say? That I should be looking at reasons for the euro dollar to go lower. Okay, so if you've studied this YouTube channel, that means what makes the market go lower and what does it usually look like? Okay, we've got to start a new week. It trades up, makes a high of the week on Tuesday. Okay, if you missed the high of the week on Tuesday forming, Wednesday's your next opportunity. That's what you're seeing here. This is Wednesday's trading. Now watch what happens. This strong break here below these lows, that one singular candle right there creates a fair value gap. What is that? Let's use the blocks here. This low of this up close candle here and the high of this down close candle right there, that's a fair value gap. The market trades right back up and rebalances all the down candle, the black candle. Okay, I'm gonna take this box off because it's gonna get in my way and it's gonna drive me nuts. It's probably driving you nuts too, but. And in fact, let's zoom in too because I really want you to see what I'm showing you here. So all of this black candle from the low and the high of this candle here. This is the area that IPTA needs to rebalance. Okay, so if you want to know how efficient price action is, the market trades up into it, trades all of this down movement. In other words, think of it like a paint roller. Okay, you get ready to paint your wall in your home. You get your paint roller, you put it in the pan, collect a lot of paint on it, then you apply the roller to your wall, and you stroke up or you stroke down, depending on whatever direction you go with first, and it'll roll out evenly, real thick, ample delivery of paint. And if you keep rolling enough, eventually you'll start seeing little pockets. Well, imagine that paint roller here starting, and it's starting to go down. Okay, and then this is one of those little pockets. So if you see that, what are you going to do with the paint roller? You're going to leave it like that? No, you're going to roll back up to fill in that little area. That's what's going on. Every price range in Forex and any other market for real needs to be efficiently traded to. Okay, and if you ever studied auction theory, this is every price range in Forex and any other market for real needs to be efficiently traded to. Okay, and if you ever studied auction theory, this is the real version of that, because auction theory is just part of it. When markets deliver on the downside, to efficiently deliver that price between the high of this candle and the low of this candle, there's an imbalance from the previous candle's low and the next candle's high. It only went down between this candle's low and this candle's high. It went down. Notice that? That's what I'm highlighting here. So going in the future, at some point, the market's going to go back up and offer buy-side delivery. So this is sell-side delivery, where the market's going down. For that range between this candle's low and this candle's high to be efficiently delivered, the algorithm has to go up between this candle's high and this candle's low, and it does so there. Once that occurs, this becomes a balanced price range. What does that mean? It's balanced. It's not imbalanced. It doesn't need to go any higher than that. It can, as you can see a little bit here, but that's the hierarchy of order flow. You have to understand how, if a market has delivered an up candle, at some point in the future, it needs to come back down through that same range to offer sell side and vice versa. So this in itself could be a target, or in this case, it could be an entry strategy. So you could go short here and anticipate price going lower. Very, very similar thing happening here. We have a low and a high, and the market goes right back up into and delivers all this downside. It gives it buy side again, and it rebalances. And then what happens in price? It trades lower until we get to what? FOMC. So we have FOMC nonsense at 2 o'clock in the afternoon. It goes back and forth, whips around. That's normal because it's clearing both sides of the marketplace. It's clearing the stops above this short-term high, and it's clearing the stops below this short-term low. So everything has been cleared. So now no one on the short term is holding a position. They would have to have their stop way back here. And then the market starts to do what? It creates its downdraft again, because what is in play? Lower currencies, higher dollar. So we see it again. We have a low and a high right in here. There's an imbalance. That's a fair value gap. So sell side delivery has been offered. So in this candle, it goes right back up inside the pocket of this high and this low. That right there is another shorting opportunity. You can get short there. You can place a stop loss above here and walk away. The market trades back up, trades deeper into this area, not by much above that, but you can see all the way to the point of this candle here. Let me add it so you can appreciate it. But this is where, if you take the trades using this, you can suffer some time delay and a little bit of drawdown. Like, for instance, say you sold short here, you'd have a little bit of drawdown in this candle, this candle, this candle, this candle. Might got excited a little bit there, thinking it's going to finally break, but it goes all the way up to this level here, doesn't completely fill it in yet, and then finally gives up the ghost and trades lower. See that? So all of this area here doesn't quite get filled, but then it breaks this low. When it does that, that's indicating that this right here is a really strong indication that we're going lower, and it's probably not going to come back up to this price level. We're going to probably see much more pronounced delivery on the downside. And scrunch this up. Market creates another run below this low here. So we have this low and this high. So what's actually happening here? Same thing. Price is going back up into this candle. Now here's a real gem, okay? This low and this high. Price has went down, gone up, and then down to this price point right there. You see that? So all of this is a balanced price range. The market has been delivered on the downside, and then it's delivered on the upside, and it's down again. So when the market trades back up here, it's not, listen folks, this is really important. It is not support broken term resistance. That's what's going on here. That's not what happens. If you're looking for key support resistance levels, if you have this signature here where it breaks through it, then comes back, that point where it does that, then yes, your support resistance theories will work there. But whenever it doesn't have this, and you're trying to find a old low and you're looking for it to be broken and you're looking for resistance, it's not going to work unless it has this. Okay, it's not going to happen. So in other words, what do I mean by that? If it starts to go a little bit lower, stops it here, and it starts another little candle here and goes a little bit lower and go lower, I would go back in the 90s and I would say, okay, this is a support broken term resistance, and I would try to sell short. And either it never went back up there, or if it did, it went right on back up inside the range, and I would lose. And I would walk away thinking this support resistance stuff doesn't work. For support resistance to work, it needs to have this little signature right there. Okay, it's an overshoot through that old low after it has shown a balanced price range. And again, a balanced price range is where price delivers on the downside and the upside. So what do I mean by that? The market has offered time and delivery on the downside. So anyone that wants to sell with that movement, they had an opportunity to do so. But what about the buyers? They didn't really get a real good chance to buy at their price levels. So the market goes up and allows that to take effect. Okay, but what's going on there? As this market's been going higher, anyone that wants to sell below these lows on a break, they haven't had the opportunity to do so because the market keeps going up. Well, they've been now given that opportunity here. See? That delivery of price is balanced back and forth. It's not buying and selling pressure, folks. It's not. It's absolutely not. All of this is a narrative within the context of the market trading to that 117.40 level that I told you last week about on YouTube. It's public. I can't edit the video once it goes on your server. So right here, we have an opportunity to sell off, and now the market starts to cascade again lower. Here you have a bear flag. Ooh, look at that. Classic chart pattern. And right into what price level is that? 117.40. Now, to get 117.40, it's got to go a little bit below that, right? What's the low? 117.37.
Good morning.
There's your spread. So what happened after it traded there? Did it rocket through that? Did it dilly-dally around? Off to the races. Now, you knew about this level last week. You knew about the weekly high and the lows forming on Tuesday 70% of the time. If it's bearish, it's going to create the high of the week on Tuesday. If you look at this chart here and really take in what I've just outlined, it's really hard to argue against these markets being manipulated 100%, controlled, absolutely, predictable, certainly. Rejection block. Let's go to the hourly chart. Highest up close. That's what I'm highlighting there. It trades to that and then rejects. Breaks this swing low. This is a breaker. Okay, right in here. And it's also your point of reference for market structure being broken. Bam. And then the narrative starts. It goes right to the level I told you it was going to go to. Now, why 117.40? Let's go back over here. All the way back here. See all these lows? What's resting below that? Let me go back a little bit. See? These lows, these lows, these lows, these lows. All of them have been reference points for trailed stop losses. What kind of stops? Sell stops. Right in here, you see a series of down close candles. That starts your bullish order block. There's a small little price action segment right in here that's a gap. That's that fair value gap. You're trying to tell me? No, I'm telling you. I told you last week, 117.40. That's the basis. So if we go to a 4-hour chart, what's this candle here? That's the last down close candle before this move up. This last down close candle's high comes in at 117.41 and 3 pipettes. So if it's going to reach down in here, I'm going to round it to the nearest round pen level, 117.40. We have liquidity below here, and here, and then bam, we tag through it, and there's your run. There, predictable. I'm on record even with my mentorship group that I was looking for that run. We were looking for that last week as well. So, but you have to have the market provide all those things with time first. That's day of week, time of day, and within a narrative, which is what? Bearish foreign currency, bullish dollar. And the market will give you what you're looking for. But you can't just simply say every up close candle for a down move, every down close candle for an up move, and that's all you got to do. No, there's internal range liquidity and there's external range liquidity that helps you frame a narrative. And that's what mentorship is with me. It's me guiding you through almost 3 decades of experience and things that I haven't even put out in video or lessons yet. Because they have to be introduced gradually. Not because I'm dangling a carrot, not because I'm teasing, not because I'm making it impossible for anyone to ever learn it. There's so many things. There's so many things that you need to know because these algorithms, they're highly, highly technical. And there's many macros that they go into, and you have to know specific things to see what they will do at certain conditions in the marketplace. I'm not sure what you took from this, but it is absolutely what I teach. And I'm going to go back into that 15-minute time frame, and we'll scrub up here a little bit like that. Add the annotations back. Okay, and now I'm going to pull up the overbought oversold indicator. Now, when I was trading back in the 90s, Larry Williams was my hero, and in fact, he really still is. He was my original mentor, even though I was really introduced to trading by my uncle. Didn't really learn anything really from him, obviously, not to be disrespectful, but he put it in my ear, but I really wasn't interested back when I was 16. But in 1992, the first mentor I had was Ken Roberts, and I lost money. So I have to give credit, because that course that I purchased put me on the mailing list for Larry Williams material. And then that was my real mentor, because the things I learned from Larry actually made money, and it went into my account, whereas the first trade I took with the things I learned from Ken Roberts, 50% of my money was taken in the first trade overnight with an orange juice option. So you all heard the story before. Anyway, I like the idea of a percent R still. If I had to talk about a overbought oversold indicator, if I was going to do that, this would be the one I would use, because it makes sense to me. But if you look at the percent R, we're overbought because we're above the midpoint of this area here. This should be an overbought reading in the percent R. It is. This should be an overbought. It is. This should be overbought. It is. This should be overbought. It is. I don't need an indicator to tell me we're overbought, because I'm looking at the range that matters most. And then clearly, within that context and a narrative that I'm bearish euro, bullish dollar, I have a target. Where's it going to draw to? 117.40. You knew it last week. On Thursday's video of last week, I talked about it. I said that's beyond the scope of this discussion, because I was teaching you this price run here and down into the market maker sell model. But that's not a short-term trade. That's a day trade. A short-term trade, we have to use this high and this low, because now we have a new dealing range. So the market trades up into that range here, not taking the high out. It's just moving into a deeper premium. And then what happens? The algorithm on Tuesday sets the high of the week. Bam. It seeks the low of the week that I gave you last week. That was my target. We've been looking for that. Okay, it traded to it. Now, what can happen from here? Well, let's take this off real quick. It could very easily trade on higher and take these highs out, and maybe even go up above this. It could do that. I don't care. When I say I'm looking for the weekly high and the low, sometimes it is the actual highest high and the lowest low of the week. But look at the reaction. If you're short, okay, say you're short here, do you feel comfortable riding it all the way back that far? If you do, God bless you. That's real conviction. I'm not interested in something like that. So if I'm trying to get short here or up in here, I'm aiming for this. And once it hits that, I'm done. Why? Why not hold for more, ICT? I thought you were a real guru. Well, this is the target I'm looking for. And this is likely to occur once it gets to that level. That's why I want 117.40. Because I don't want to ride this out. Because the more it keeps going higher, the more likely it is to trade against the liquidity above here, and now these equal highs. And then if it goes above here, then that unwinds the whole narrative that I used to build the context around that 117.40 level. So let's get this off, because this is blasphemy. And looking at, again, price action like this, naked, it feels like it's noise, it's chaos. But everything in here has a reason for it occurring, and I teach this. This is not a new introduction. The only thing new I gave was defining the interbank dealing range and what makes it such. And in summary, you want to look at where the most recent dealing range has traded. Did it take out buy side liquidity? Did it take out sell side liquidity? You need to find those two most recent demarkers. And once you know that, that's your current dealing range on an interbank level for any time frame. Any time frame. Okay? Using a 15-minute time frame, that's like my bellwether. I can find a lot of setups with a 15-minute chart. And if you use an hourly chart, you'll come up with a different dealing range. So don't think, well, what happens if I look at the 4-hour chart? Then that doesn't look like it does this and that. You trade the time frame that you're looking at. This is the time frame I used. The narrative is already in motion. Modest higher prices in dollar, lower foreign currency prices, and this is their dealing range. Okay, so you use last week's information to tell you what this week's going to do. And this weekly profile, I even shared that publicly. Bearish week, okay, Tuesday's high of the week, 70% of the time. And you can get a really good sell signal on Wednesday. There you go. Folks, listen. I hate to sound like I'm twisting everyone's arm, okay, but I get a plethora of emails from people that say the markets are not manipulated, you're talking lies, there is no algorithm, there's this and this. Listen, I'm only going to provide the evidence. You wrestle with that, because you're not going to convince me, because this is what I use to call the markets. This is what I do to engage price. This is how I call the targets. Find the logic of anything I'm showing you here and anywhere else. It doesn't exist. It does not exist, because this is self-reliant. It stands on its own. I don't need to defend it. That's why I tell everybody, go through my videos and then wrestle with it, because you're either going to walk away thinking this is too much work. Okay, great. You didn't debunk it. Or you're going to say, oh my goodness, this is exactly what's going on. Hello, conversion. And that's all it takes. Just stick your foot in this web, and you'll never get out of it alive. Period. Once you see it, you cannot unsee it. And every week, every day, and it won't stop. Until next time, wish good luck and good trading.
Every week, every day, and it won't stop. Yeah, it won't stop. Alright, I'm going to write these notes, and then we're going to do some analysis, and then we're going to wait for market open, and then we're going to see what market open wants to do, and then, yeah, we don't have any red folder news at all on a Monday, which is kind of concerning. and all-time highs, like usual. All right. Nice cheeky little lecture before market opens. We got 30 minutes. We'll see. I don't know what that will give time for. All right, let's get into bias for today. I'm gonna record an Instagram video. Don't let me forget. It's July 7th. Yeah, I'm looking for this low here, this 40-day low. That's what I'm looking for. I think this will be an AMD here. Accumulation, manipulation, distribution. We'll see. I've seen that happen before, but the only reason why I wouldn't, if we create it, if so, I'm pretty confident that we're gonna take this high at least at some point today. But if we take this high and we create a fair value gap, I'm looking for expansion. But if we come up and we sweep that high, then I'm looking for displacement lower. But we also have SMT right now, I think. Yeah, we have SMT right now. ES is taking this high. ES has a nice new week opening gap, and regardless, has stack lows here. So the only reason, or a reason why we wouldn't need to take these lows here on NQ or ES is because ES is new day opening gap, new week opening gap right there. So I'll be looking at that. And I feel like we're just in a deep premium in my opinion. So we look at this. If we use the IPTA range on the 4-hour, I'll just delete that, all that. If we go to midnight open, and if we drop this on 4-hour, we're in a 4-hour deep premium. Like, we're opening up at the high end of this range. I do want to look at this IPTA data for the daily. I would have liked to see a high form here, honestly. This just seems bullish, and I think we could get bullish continuation for another 20 days. And then maybe something, maybe we could get a possible quarterly shift. Let's look at, I'm going to pull up the seasonal tendency. Seasonal tendency for Y or YM is what I have, which will be pretty much DXY, or which should be ES. I want to look for ES seasonal tendency real quick. There's got to be one on Twitter. Let's pull up Twitter. I haven't looked at Twitter in a minute. It probably won't line me. That's not my account I use. Good morning, good morning, good morning. I'm trying to look for a.
Yeah, well, it's like a seasonal tendency for snow that we refer to as a seasonal few months. I take your attention into
Alright, that's what I was looking for. So we see here around July we'll put in a high. Around July, August we'll put in a high. I think that'll happen. I think that'll manifest this year.
I defer all that I want
July,
versus
August, put in a
what is
high.
this algorithm telling me? What's price action showing me in the chart?
July,
and a lot of people
August.
kind of,
That'll
look for shorts.
that'll
The
line
older
up
timer guys
nicely
are
with
saying
this.
the market's going to consolidate.
With this right
and I said,
here.
okay, well, if the older crowd's
Oh,
saying we're going to
perfect.
consolidate and the
I
retail
don't
saying we're going to crash,
see.
I'm going to trust everything that's saying it's going to go higher.
So I'm expecting to see consolidation. And we have an election year, so I don't want to predict long-term bias. But all I can do is just anticipate something to happen that can help me further assist my intraday trading. Because I intraday trade, so I'm mainly looking for intraday action. We do have this high here that we don't have a fair value gap aligned with that, so we wouldn't want to really refer to that. Maybe this high, but I would more look for these three down close candles there. Overall, all this just to arrive at, hey, I honestly I wouldn't be surprised if we expand at 9:30, create a fair value gap, and then just kind of like chill for the rest of the day. Let's see. If we do sweep this high, I'm looking to see this as a AMD, and then we're heading to this low, but we don't really have anywhere we would need to reprice to. We do have this hourly imbalance here, though. No imbalance here on NASDAQ. Ooh, we do have this down close candle. We have just taken buy side. I couldn't see the 15-minute just stopping on dime. I do like that hourly imbalance though, but we just have bullish momentum right now, so I couldn't really see us reversing here. I couldn't on ES. I cannot picture. I cannot frame a reversal, and we're very well below true day open. So I think we could see expansion at 9:30, possible reversal PM session to maybe take these lows. That's what I'm looking for. Dang, we low-key only have like 20 minutes till market open. I thought I was gonna have like a whole hour. Hold up. I just Here's my daily bias today. Ooh, I look like an egg, bro. Here's my daily bias. Overall, we are in a... How do I undo that? Oh, I just can't mess up. I just can't mess up. Here's my daily bias. Overall, we are in a deep premium. We're above true day open, and we're about to take these highs here. If we take these highs and if we sweep them and cause displacement lower, I would look for these lows right here. Overall, if we look at ES, we have a lot of bullish momentum right now, and I don't really want to fade this. I'm expecting more continuation, but if we want to, I could see this fair value gap get traded to in line with this order block on ES. On NQ, same thing, this fair value gap, but I'm honestly expecting expansion. I gotta restart that. That was not good. Here's my daily bias on NQ. Overall, we are above true day open. We're in a premium. We are about to take these highs around market open. If we want to sweep these and then displace lower, I could see these lows get taken. But overall, I have a kind of... Dang it, bro. I should just went with that one. The real struggles of trying to post these. Here's my daily bias on NQ. Overall, we're above true day open, so we are in a premium. We're about to draw into these highs. These are all-time highs on NQ. I'm going to continue to be bullish today unless we sweep these highs and then get displacement lower. Overall, my eyes are on these lows here. We also have a nice hourly imbalance on ES and this order block right here. Sorry, that's a mitigation block. But let's see what's happened. I messed up for 1 second. Now I got to So all right. Here's my daily bias. Overall, we are in a deep premium. We're above true day open, and we're about to take these highs here. Once we take these highs, if we get displacement lower, I'm going to be looking for sell side objectives here. We have a mitigation on ES, and we also have this hourly imbalance. We have no red folder news, so I'm honestly not anticipating that to happen. I think it's more likely that we just keep on expanding higher and building a premium. But let's see what ends up happening. There we go. We got it. All right. We'll pay attention to this market open, and then we'll backtest a little bit, like actual backtest, and then I'll watch some lectures. That's what I'm doing, and then I'll probably do that until around like 1ish, and then I'm gonna end stream so it can upload because I want it to upload to my channel, and then after that, I'll probably go live later today as well. We'll see. I do mess with these streams. I'm gonna do these every single day, low key. At least during the week. I don't know. I think 11-hour a day. I think that's what I'm gonna do. I want to do that, like 11.5-hour streams, and then maybe possible stream in the PM session. There might be a day or two when I don't go that crazy, but we'll see. Overall, that's kind of what I'm looking forward to doing. And then maybe on Saturdays I could try to do like a 20-hour stream. I don't know. We'll see though. Like I also have a personal life, so not really. Let's be honest. Overall, I'm looking at these highs though. I want to see what we're gonna do here. Overall, if we look at ES though, ES is kind of giving us hints that we might want to be expanding for the rest of the day. How many hours do you sleep? I mean, it depends. Like last night, I got like 5 hours of sleep. I'm gonna be honest. Like recently, I don't know. I just haven't been able to sleep, bro. This has all been thinking about, and that's not necessarily the healthiest, but I don't really care. I'm like 19. I'm able to handle it. It kind of depends though. I recently it's been less than I would in the past. But like when I sleep, I go to sleep, I'm knocked out, and then I wake up. It's like such deep sleep. Yeah, I mean it also depends because like there's sometimes that like I'll like accidentally fall asleep like midday, so like there's kind of cons to it because then sometimes I'll fall asleep. But, like I don't do this to claim that I'm like, oh I'm him, bro. I'm trying to work so hard. I'm just generally doing this just to vibe, just to chill. And I generally want to succeed, and I'm just gonna keep on doing these streams. I mess with them, and like I really don't care if there's 0 people in the stream. I'm chill with that. Is today a bank holiday in the U.S.? It is not. We have no red folder news though, so whenever I don't, I don't know what happened to my computer. I used to. Oh, I can just add a shortcut. I had shortcuts for everything, you know. Let me change this to your just USD. Yeah, we don't have any red folder news, so no red folder news on a Monday. Um, Probably gonna be low probability, honestly. Honestly, so I'm not really expecting much. So to expect these lows, I'm really not expecting that. I don't think that's a good draw on liquidity. But it's just a possibility that I have in my head that like, hey, we have these stacked lows to where if something does happen, we could take these lows. But I don't really expect it. I expect these to be a target like later in the week or possibly next week, but not this week or maybe even 2 weeks from now. But I don't really see these lows as being a target because we do have SMC, I think. Did ES leave equal lows? ES left equal lows. Yeah, and we drew back down to this order block there, then started a buy program. So I'm looking at this hourly mitigation block right here, with that fair value gap. That could be an institutional or financial drill. We also have that high that we could reprice to, but overall, I'm not really looking for much, and I'm paying attention to this new week opening gap that we have right here on NQ. Why does it just say new day opening gap? Oh, do I have new week opening gap turned off? That's why. Oh, my indicator settings are not. Yeah, we just have a small new week opening gap. All right, buy side's taken around 9:30. Okay, that's a signature to pay attention for. If we take this right at 9:30, we could possibly have displacement lower. I'd be looking for a change in state of delivery here at market open, and then this could possibly be the breaker, but be a 15-minute breaker here. But I don't know that we do have low resistance equity signatures. It all depends. It all depends on what happens here. What's YM doing right now? I'm curious. YM I'm actually bullish on though, so I don't know if I would like that at all. But also YM. Oh, YM's about to YM's reaching for these highs. I was talking about that this morning. I want to see YM take these highs. I want to see. I also was talking about Euro, how. Yeah, I want to see Euro displays higher. I want to see Euro take this high now. If we don't take this high today on Euro, I would stay away from this forever, honestly. GU approaching highs. So we had immediate rebounds on Euro, so we definitely should be snapping up to these highs for the next week. So let's look at DXY. DXY should be snapping down to this weekly levels order block for value gap with the low. That's what I'm looking for. So with all that narrative in play, I don't expect us to head to these. Well, I don't think it's the highest probability, but it can be. It can happen. I mean, just because DXY and Euro are doing things doesn't mean that we can't get a sell model here. We have a BPR right here on the 5-minute, something to be aware of, and like a 15-minute order block here. Well, technically propulsion block. Let's look at the hourly. We do have an hourly imbalance here, so that's something to note. Overall, we are in a premium, so I wouldn't really want to long anything, especially after we just taken buy side liquidity. Well, I'm expecting to see a slow day. I messed with this chart layout. I got the 15-minute chart up here and the hourly chart over here on my top screens, and we're drawing into buy side right now. But I really am kind of anticipating continuation here, but I guess we'll see what price wants to do. In terms of upside, we have zero imbalance created here, zero. We have a 15-minute order block right here, so this is a key level. Honestly, this is a key level for me, and a 15-minute fair value gap that possibly could form here within the next 6 minutes, and then that's right when the market's going to open. So let's see. I'm looking at this level. If this level fails, if this level doesn't respond with buying, then I'm looking for the low resistance liquidity. Here, let me expecting bullish price action today. If this order block fails, then I will be looking for lower liquidity to be the target. Overall, we are in a deep premium. And I wouldn't love to take a long Monday with no red folder news too. Okay, that's just a little snippet here, and then I'm gonna make sure I have this. Let's look at my old tape reads. We want a higher to form that SMT. Overall, where's the... I don't know. I want to see displacement here. Alright, this will be telling if we don't create a 15-minute fair value gap here. I mean, even if we do, it's a pretty small fair value gap. But I don't really see straight up move, straight down move. I don't think that this will happen, but it could. And if it does, I'll be anticipating it. Equal highs for the draw. Very lethargic. Alright. We didn't create a fair value gap there. I'm looking for lows. Possibly. I mean that's like too early, but we could just be repricing. If we don't cause expansion, if we break through this order block, I think that's a telling signature. No fair value gap created there after taking buy side. So we're not comfortable in new highs. And we're in a D premium, so what's the more favorable outcome? Probably these lows, but what could cause short-term resistance to that idea? It's a good dollar. Okay, dollar is consolidating. Dollar is breaking out of that consolidation. I want YM to be bullish though. I do. Look where we expanded from, that 75%. Oh, I wish they still had time frames up here. Well, they have them down here. I wish like when you zoomed in, like they would show time frames down here. All right, market just opened. Yeah, we probably want these lows. Yeah, I'm expecting these lows. I am noting this balance price range though. ES is coming up and taking highs. Yeah, you're right. That is a 1 hour fair value gap too. Overall, I think it's just low probability. I'm favoring more. What we could do is we could, I don't know. We'll just see. We could come back up and then do one of these, but I don't like that. Immediate rebalance right there. I think the best time to get engaged here is if we create a 15-minute fair value gap. Because this could just flip higher. So we came out, we took buy side now too. So we've taken sell side, now we've taken buy side. We could flip back lower and seek sell side, but we'll see. We did just draw into that 1 hour fair value gap. And consequent encroachment of that wick. So and that 5-minute order block. Oh, look at that 15-minute order block price right there. Yeah, I think this is bullish. We'll see. Overall, I think it's lower probability because I'm able to argue both sides. I'm able to see both buy side and sell side draws. YM hit that. YM's finally out of that dealing range. Wow, YM's ripping. I want to see some. Look at that wick. I want to wait for that 950 macro. I want to see what the 950 macro does. For sure. Because this could just be a whipsaw wick here, where we take both sides of the range. Okay, okay. That's a bearish signature right there. Fair value gap in, fair value gap out. Alright, we're not reacting off of that bounce price range. I think we want these lows. for sure. If we come up, this is a breakaway gap. I like we should not come up to this fair value gap. Job not finished. I'll sleep when the job finished. We could be forming that balance price range on the hourly too. This is not. Oh wait. No, this is not gonna be the low. We're just gonna repricing higher, up to that discount wick. See if that wick acts as a PD ray. Overall, do we have anything on the left side? We have that balance price range. We could still hold the body, but I just think it's more likely that we draw to these lows. Especially after a sweep on buy side and we have these lows resting. I want to wait for the 950 macro. But we could be at sell side within that macro. Like we could have already taken the draw liquidity within that macro. Okay, we have this breaker right here. This order block. What would that be? Mitigation? Order block? I don't know. I would like to see a responsiveness off of that level regardless. Ideally, if this gets traded back into, we could consolidate. I don't think that this should get traded back into if we want to reach that low. So I wouldn't want to see this get traded into. I mean, I guess it could. And this could be your institutional order flow entry drill, but I would like to see a responsiveness off these levels first. But I think this is a protected high. We do have a little SMT there as I marked. ES is now trading into its balance price range. So we could have seized displacement here. Sorry, no emotions. I need to chill. It's not emotions. I'm just hyping up the crowd. I'm just hyping up the crowd if anyone's watching. Gotta engage the viewers. I know how it be. Bear flag forming here. I don't know. We could fade this, come back up, take buy side one more time, and then engage during the 950. I just want to wait for this 950 macro. I want to see a few more candles to really look to engage. That's just what I like to do. I like to wait for the 950 macro, and unless if it's like a super clear Judas swing, that's what I'm gonna do. I'm just gonna avoid trading this right here because this is less likely to engage liquidity than this macro, because that's what the macro is designed to do, is to engage liquidity. So during this 20-minute window, it's more probabilistic probabilities over a period of time that we're going to engage liquidity than it is between 9:30. I mean, yeah, it can happen if it's clear, but right now it's just not clear in my opinion. I mean, it'll probably be clear in hindsight, but that's 2020. Like right now, we're consolidating. We're creating a bear flag. Like realistically, if this was like a clear Judas swing, we would be boom boom. Like we would have already been at sell side right now. We should be respecting this here, but we're not. So therefore, we wait. So therefore, we don't do anything, and we wait for more information to be on the chart because it's a Monday with no red folder news. And if we look at this, oh, okay. I didn't even see that on the 5-minute. For the 5-minute chart, we are still kind of holding this balanced price range. So therefore, it's just low probability. We're just consolidating here, creating a bear flag, whatever you want to call it. We're trading back up to this fair value gap. Like I said, I don't really love that. And I don't really love this. So I kind of want to see what happens overall. If we look at like what's more probabilistic, we just took buy side here. I want to grade this possible dealing range here, this implied dealing range from this low to this high, just so we can get a sense to like where we're at within it. So we actually are right at equilibrium. So right at equilibrium, what do we expect to see? Some form of consolidation, some form of stop hunt here. I want this to be a stop hunt. I want this to be a soup. I want this to be a stop hunt right there. But it's not looking like it might be one. Yeah, I don't. This fair value gap is like the last line of defense, and I would anticipate this to probably hold, honestly. But I want to see snappier action. Alright, we're trading within that fair value gap. Into 25% of this implied dealing range is where low risk entries usually form. I would avoid to trade this no matter what. No matter what, I would avoid to trade this. Oh, I would not. It's just something to study and just look for, to see what can happen, just to deepen my conviction with what I look for. We shouldn't it's the possible institutional or full entry drill because we do have a balanced price range. This should form a swing high. I would want it to. And let's see if we do or not. Notice we're also at that 25% of that implied dealing range here, from this high down to this low here. It's crazy. I've already been live for 6 hours. It does not feel like that, bro. I like doing these streams a lot. Alright, swing high formed. See, I want to see expansion. This should hold. If this high gets violated, then intermediate term high, yes. Intermediate term high. Look at ES. Look at ES. Something to avoid. Okay, we just violated that intermediate term high. It's not one-sided. ES just took that high, so we do have SMT. This is going to be all hindsight morning. I mean, this is just 50-50. Consolidation right now, so no trade to really take. I mean, the only thing that... I mean, I guess we could get displacement now, because now we have an SMT between ES and NQ. I can see that forming. Overall, I don't really care to trade it, but we have taken this intermediate term high, which could be the potential soup here within this BPR. I mean, we still could displace lower, but overall, kind of look at the resistance that we're holding within each and every one of these candles. Just resistance, resistance, resistance. And look at all these lows here. Nothing is popping out at you in the charts. It's like paint, you know? Wowzers. Yeah, we probably want to attack new highs. I think this high is more favorable. Order block there. Night 50 macro just opened. Look at that 5-minute BPR held up price right there. And, yeah, and the 1 hour fair value gap. The 1 hour Biffy. Bam. Literally no wick on that candle. we could form a swing high here. I'm curious to see how this candle closes. If this candle closes like that with a big wick on it, actually, I wouldn't even like this because if you're looking for a short down to sell side, like that's just so unfavorable. The fact that we just had this just shows the intention of the market right now. This just shows the intention. Like we're failing to react to these PD rays. This PD ray failed. This fair value got failed. That failed. BPR failed. This failed. Inversion failed. Now, what are we probably likely in a buy program? Well, you've already referred to buy side here, so this is just a market structure shift in my opinion. Like hot take, this is just a market structure shift. This is not buy side liquidity sweep, I don't think. So I'm gonna grade this to see the quadrants. Overall, nothing favorable. Nothing favorable. Nothing to trade. Nothing to trade at all. Because you do have that narrative of the, if you look at the hourly momentum, this hourly momentum on a candlestick, if we just think in terms of probabilities, no like nothing else in just terms of probabilities. Okay, we first came up, we took buy side, then we came all the way back down to take sell side, and now we have this big wick on the hourly candle. So if we're just looking in odds and in favor of where now we're likely to head, it's more likely that we're going to expand and continue after we've already manipulated here than to manipulate, come back up to then just chop around to then come back down to manipulate to then. That just doesn't make sense that we would come all the way back to this lows. That's not logical. I mean, if we're being realistic, we're probably just going to expand to new highs. Where can we do that within 50% of this? But who knows? The market's going to do what it wants to do. And especially on a Monday with no red folder news, when I don't have a valid bias, when I see signatures I don't like to see, I'm going to tend to stay away from it. I mean, even if I'm looking to tape read, I'm still going to stay away from it. Okay, look at that. Look at that. The bodies. Does the macro work? Yeah, macro works for everything. I mean, there's certain macros for ES. There's certain macros for Forex compared to indices. All right, this should hold 75%. All right, if we close below this, that's just like seek and destroy, and then yeah, wow, like. Look at YM. I don't know if I want to. Order block. Yeah, I guess we just still want to go back to the order block. Okay. If this order block does not hold, I'm just going to close the charts. This order block should hold. We're back down into 5 minute. Dang, I've been zoomed in as hell. I don't know why I am so zoomed in on it. Nah, for me, this is what I call a no trade day. not a losing day, because I avoid days like this purposely. So I avoid losers. Like even this, bro. Look at the 5-minute wick we created. This is whipsaw, but overall, I'm anticipating to see new highs. I'm anticipating to see new highs. What's the mean threshold of this? 4-minute looks decent. 4-minute looks decent. That's about it. I guess we did come back to that 5-minute order block, but I'm kind of just ignoring this wick because it's a stop hunt. Roll one, smoke one. If we violate that order block, I'm going to close the chart. Because we probably want to see new lows or just consolidate. And we could reclaim it, but I doubt it. I mean, 950. We look at the 950 candle up to buy side. We could have reclaimed that. Hopefully, that's just a reclaimed order block. This is, yo, low key, bro. 953 opened with 830 opening price. It's a 10 a.m. candle. that new 1 hour candle just opened, and we already have covered as much range as the previous. I'm not gonna comment. We're just gonna look. $9.53 candle with 8:30 opening price right there at 10 a.m. All I can say is I don't think there's any way to avoid or to really trade these types of days by just other than just avoiding them. And that's definitely what I want to do. Is have enough intelligence to say, hey, we're just going to avoid these. Or maybe we could try to trade them and then maybe looking for 5 different things. Yeah, hindsight came back up to mean threshold of that, but there's still potential range here. And now I think these lows are probably the draw liquidity. But I would want to see a 15-minute for value gap, but by the time we create that, we probably wouldn't be able to retrace into it. And I just don't like it. All right, let's just close this. Let's pack it up. I really don't think it. I do probably anticipate these lows. Maybe at 1050 macro. Maybe at 1050 macro. Woo-hoo! Look at that. Beautiful. Ain't she? I keep on saying I'm gonna close my charts, but then I open them. Let's just go to a. We purged buy side here. I've had displacement lower. Do we have like a daily imbalance here? No, daily consolidation here. We do have a fair value gap here on the daily chart, resting right below this low. So I'm anticipating that to be a draw on liquidity soon. Overall though, if you look at price, we're now within an hourly imbalance, 15-minute imbalance. I don't know what's up with this indicator. Ah, here we go. Haha, look where 930 is. Right within the new day opening gap. New day opening gap causes expansion. And then what is this? 940, more expansion after a breaker or after a mitigation. Notice how we never manipulated. We never manipulated below midnight open. But yeah, below resistance equity signatures there. Woo! Look right where that puppy delivers. Right where she delivers. That is beautiful. How many points is this? Probably like 10? Ooh, 20 points back in the day. Times that by 5. That's at least 100. That's probably what it'll be. New day opening gap expansion. Okay, I can't access the data on the 15-minute. Alright, here we go. 7-minute. I honestly just want to play this. Okay. Let's wait for 8:30 open. 8:30 opening. We're up into the current new day opening gap. Okay, we displaced through it. We now come back down in this fair value gap. I think we could see these highs. All right, displacement. See, that's the 930 signature I'm looking for. This is okay. This is the signature I was looking for today. Whenever we draw up in the buy side, like right at market open, it should be quick and snappy. We should have expansion. I mean, this isn't really low resistance liquidity. This is just this is low resistance liquidity. Oh, look at that beautiful imbalance break, new day opening gap. You're not actually trading today? I mean, I don't think anyone's actually making money trading this. Maybe off of this, because we've been volume balance. So I just now see it. Maybe off of this. That's the only thing I see. But even then, like, the probabilities within here, they probably don't repeat over time. Look at that new day opening a gap right there with the imbalance with the breaker. Oh, after taking buy side liquidity. And look at that. Classic Judas. Alright, do we support this as an order block, or are we just repricing this new day opening gap? Okay, it looks like we might want to attack these highs. Oh my, oh my god. Oh my gosh, perfect delivery. Look at this. Perfect delivery here. You have your change in state delivery off that new day opening gap here. Sentiment is bullish here. Let's see, where do we reprice to? What PD array do we have here? 1 hour, probably better 4 hour, probably maybe a daily. Yeah, so we have a daily order block here. Daily order block right there. Daily order block, maybe mean threshold too. Maybe 25%. I kind of doubt it, but kind of at that level around that area. 1 hour order block range. We have these three down close candle range right there, as well as we have that new day opening gap. Boom, that's the signature. Then once we change state delivery on the 2 minute, once we have a fair value gap, once we already have that bias, we're looking, and then we trade above, fall short of this new day opening gap, come right to the tick. Wait, we come right to the tick of this one too. Wow. I mean, it would have been beautiful to see this as well. Because this new day opening gap is this fair value gap. Wow. I would technically change the deliveries here. I don't know why I'm marking this one. I should be marking all three. I guess whenever I backtest order blocks, that's a bad thing. I feel like backtesting order blocks is easy to be very subjective, especially when you're backtesting. It's very easy to do that, at least in my opinion. Like, there's sometimes I'll backtest them and then like I won't even realize it, but I'm just like cherry picking order blocks that like in real time data I would be using different ones. Beautiful. Well, I'll be right back in a minute. I'll pull up the charts. I'm gonna grab some grub. I like barely had. Let's see. Do we want to be trading this? I don't think so. So, therefore, there's nothing to really trade in my opinion. But if you want, if you personally want to trade, go for it. Go for it. Go for it. What is price done? What is price done while I was gone? What did I miss out on? What did I miss out on? Curious. What? I missed out on a lot. I'm gonna watch another lecture. Screw it. Lecture every hour of the day. Yeah, I don't really care for this. Alright, he's on ES. January 4th. Let's see. I've definitely seen this lecture before. So we come back. Kind of like the same type of price action. We whipsaw into maybe a daily level. I don't want that. Into a daily order block level. It looks like. $15-minute. We don't reprice that imbalance. New week opening gap, new day opening gap. We usually come up, take buy side, reprice lower to low resistance liquidity down to this low. Then at 10 actually, at 10 a.m. we do that. I'm gonna keep Nasdaq open here with a 5-minute chart. A 5-minute, we then change our state of delivery here, offer buy program here, imbalance. I'm curious to see. I'm curious to watch this again. I haven't seen it in a minute. Really? Why do you just call it a fair value gap though? Because like that's what we did respect. Okay. volume imbalances. Can be just with can be like a fair value gap with the wicks. I'm gonna screenshot or I'm gonna annotate that on my chart. Am I in the right? January 4th. Oh, it's a fair value gap. Lower. Oh, what? Wow. Hold up. I look, he was locking there. So we on Thursday? I think he's going over Tuesday. Oh my gosh, my desk.
So I've already posted a real quick vignette prior to this video, and I shared it on Twitter earlier as well. But this is going to be more or less me breaking it down. So that way, if you want to know how to do this, it's not a enticement for you to trade on non-farm payroll weeks, Wednesday, Thursday, and Friday. It's to just draw your attention to the fact that this is why I teach my students this. I mean, look at the price action here. I mean, just look at it. We had FOMC today at 2 o'clock. So all this back and forth movement, it never even touched the volume imbalance. But that's fine. It doesn't need to do that to be profitable. This is the level I'm looking for. So you could make the argument that, hey, look, you have this here, it traded up in that. Yeah, sure, it's fine. But I'm looking for a higher time frame PD array to reach to. So while it did take out relative equal highs here, as we'll see in the lower time frames, and you probably already watched in that little short video, it's not enough for me to feel satisfied in that. I'm always in a pursuit of precision. I'm always looking for elements of algorithmic price delivery that will be a step beyond the average retail analysis concepts. So we're going to look at this low here on the 3rd, and we're going to dive into this here, that fractal, that low inside this price action is going to give me insight about this low here, why I trusted going long there, and a run for the relative equal highs, and potentially run up into this area here. So if you are a Forex trader or a non-US trader, and you see this market here and you think to yourself, well, I can't trade that market because it's a American futures contract. You can trade the US 100. Okay, so Forex traders that have like MT4, which I don't use MT4, but I know a lot of you guys all around the world that are outside the US, and some of you that are in the US are trading in offshore brokers that, in my opinion, you shouldn't be doing that, but to each their own. You are invited to go in and look at it, and we'll look at it briefly towards the end of the video as well. But for now, just know that the concepts I'm teaching you here are salient to those markets. So, for instance, if you're not a US citizen and you want to trade these types of markets, while you may not be able to engage the actual futures contract because you're outside the States, you can trade for NASDAQ futures. Like when we're looking at this symbol here, this symbol on TradingView would be NQH2023. That's for the futures contract in the US market. If you're outside the US and you're using an MT4 broker that has access to US 100, it's equivalent. It's not going to mark to market perfectly as you would see this, but you'll see later on it's close enough to operate in. You're going to be trading the ES in the US markets, obviously. American traders, we use the ESH2023 right now as the front month. It's March delivery. H in the name of the symbol on TradingView is correlated to the month of March. That's the delivery contract. When that expires, we'll be going to June, and that symbol is M. Okay, so if you're going to be using a MT4 or outside the US broker, and you're trading like in a Forex type broker, and you want to do ES for S&P, the equivalent would be US 500. Okay, and while we're not going to look at that tonight, just know that you can go through and compare and contrast that on TradingView. Yes, you're going to need a real-time data. It's not terribly expensive, but you can procure that on TradingView, and I don't get a kickback for that. There's no relationship business-wise. There's no affiliate thing for me to get paid for recommending it. Okay, I'm just telling you what I use. It's inexpensive, and it's a very easy platform to work with, so I've had no complaints with it. So here we have the, if I'm not mistaken also, the US 100 and US 500 CFDs, while the US traders are not really particularly allowed to trade those, the futures contract is where we're supposed to be trading it. Those are real-time. But the futures market pricing, like for ES and or NQ, you have to pay for real-time exchange data. Okay, so it's not a lot of money. I think it's $5 per month, and it's really, in my opinion, it's rather inexpensive. But we're going to take a deep dive into this low here and focus on these relative equal highs and that volume imbalance. That we have a framework here on the hourly chart. So let's drop down to 15. Okay, so you can see that low here and these relative equal highs, and then we have that one here that fell short, and we're going to
This is Wednesday the 4th. Oh, so I'm like behind. Wednesday the 4th. And then I think it's Thursday NFP. Okay, yeah, this is where we're at. Wait, he's talking about FOMC? Yeah. Got you. New day opening gaps right there. New day opening gap at the high. Boom, reprice, new day opening gap. Just new day opening gap. Just new day opening gap. Just new day opening gap. You know the drill. You know the drill.
Again, focus on this area in here. Already you can start to see there is a imbalance there. But we're going to fine tune that little area into the 5-minute chart. Okay, so relative equal highs. And don't just use my charts or my analysis in lecture. You want to actually go into your charts, look at it yourself, find it on your charts. So 8 o'clock in the morning on January. And again, always, you're going to get sick and tired of me saying this, but your trading view chart should always set to New York time. Okay, so that way you'll be able to find everything I'm referring to in my charts. So this low here is January 4th, Wednesday, 2023, on a 5-minute chart. If you scrub back over to the 3rd, Tuesday, January 2nd, January 3rd rather, you'll see that we have this down close candle, and we have this movement here in price. Okay, so that's a buy side imbalance, sell side inefficiency. But this low, this high of this candle here, this down close candle, prior to this move up, that's what I'm anchoring on for the price level of 10864.75. Okay, so if we look at that in relationship to the low, it pretty much nails that right there. That's not enough. That's where I was looking and had my initial interest in it. Now we're going to drop down to a 1-minute chart. And while we're talking, I want you to remember that I'm not limited to just the model that was taught on 2022 mentorship on this YouTube channel. So while it may be a little bit frustrating for some of you because I'm showing you things that are within the grasp of a student that studies the things that's on this channel, I'm not a one-trick pony. I'm not a one-model trader. I have lots of trading models, and these concepts are authored by me. So when I coded these things are at my disposal. I can reach and use them when and how I want to use them. So you as a student of the market and looking for utilization of these concepts, you're going to try to gravitate to what makes most sense to you, okay? And when we're watching price in a few minutes, when we get into the actual replay of the real-time data, the video I showed, the little tiny little vignette where I sped it up to like 2 minutes and some seconds or so, the little vignette that I had that sped up was like an hour and 20 minutes or so, compressed down inside of 2 minutes. Okay, so very, very quick replay of all of the actual executions, the annotations, and then now when I get done doing all this preamble here,
why is he trading before FOMC?
44 minutes or thereabouts. Okay, so it's still a little bit lengthy, but it's about halfway or so. Okay, so it allows us to get through it without having to be every single second, which is going to be monotonous to do that. But if you're going to be with me in the live sessions, it's going to be very close to that, but longer. Okay, so as every individual 1 minute candle, as you see here, paints, the candle has to close, and then another one begins. Okay, so it's real easy to get tricked into thinking, oh, this is real easy to hold on to because it's a 1 minute chart and it's going to be fast market. It's still time. Okay, so time has to be paid, okay, with patience. And if you don't have that, or if you just think that you're going to watch the videos, and I'm seeing a lot of frustrations in the comments, which I also disabled, but forgot to turn it off before the small little vignette. The only reason why I put the vignette up is because I forgot to put my watermark on the video, and I shared it on Twitter, and a lot of folks like to go on Instagram, Facebook, and even re-upload the video on YouTube, and I have it taken down because I don't want you to upload my videos, okay? You don't have my permission to do that. So they pretend to be the person that took the trade if I don't have a watermark on it. So that's the reason I put watermarks on. So anyway, I'll give you all that with no extra charge, but I'd like to explain why I do things and why I don't do things. So we're gonna go back inside that old low on the third. We're scrolling back, and you're gonna see there is that buy side imbalance, sell side inefficiency, that single candle right here. I'll move it out of the way.
Tuesday, January 3rd. I feel like we have different data. There's no way. At 134? No, there's no way.
Okay, so you can see, and that down closed candle, which was on the 5-minute chart, you can see that is what it's anchored on. So as I mentioned before, and you're going to see a lot of things not actually be in my chart because I'm working with 1 and 5-minute charts real time, showing you that there's an algorithm. Yes, you can read it. Yes, I'm getting a feel for where the market's going, but I'm not trying to absolutely mark up everything because, as a reminder, I only have the time to see, identify, calculate, process, envision what it is the algorithm is going to do next, all at the same time that 1-minute candle and 5-minute candle is painting. Okay, so in real time when we do our live sessions beginning February 7th, I don't have the luxury of always typing things out, and I won't have to because you'll be sitting there with me and I'll be able to talk about it audibly. Okay, so there will be witnesses here. They'll be able to say, yeah, I was here, I saw that. And not that I need that, okay, but the public, likes to see those types of things when they come to a venue or an educator, after the fact. It just seems, if you look at the examples, it looks too good to be true. And I appreciate those compliments, and I take that as a compliment when I see people doubting it. But I don't want you to think that I'm going to be doing this for you when we're doing live sessions, because it's not going to be like that at all. It's going to be me pointing where the market's likely to go. And then I'll comment on what I see in price, but I will not be pushing the button in front of you. Okay, so when we do the live walk through, well, not live walk through, but the replay of me actually executing, I'll kind of comment pretty much like you'll expect to see me do when we're doing live streams. Okay, so hopefully it'll make a little bit better sense as to what you should be expecting when you start in February. So we have our buy side imbalance, sell side efficiency. Okay, yes, we went down, but we left a small portion open, so that means it's always a candidate to come back and revisit that area. If it overshoots it, that's fine. The order block on the 5-minute chart is always a possibility. Okay, so we traded down into a completely closed and hit the order block, and then we had consolidation, and then we entered into the 10:30 to 11 o'clock time window, and we dropped down initially right at the 9:30 opening. Where are we at here? 9:30. Right there. So 9:30, we had sell stops below here. It tagged those, came back up for the buy side, buy stops here, and then notice they left these relative equal highs open. Now, the reason why I'm keeping all these notes here is because I want you to see that this is the actual chart that was annotated real time while I was executing and managing the trade. So while it is a little too busy here, I'll clean it up when we get to the need for doing so. But right now, it needs to be there for context. So we left buy side liquidity, that's buy stops, above these relative equal highs. Now, traders are taught that this is resistance. So therefore, lower prices should be expected. And we did. We had lower prices, but down to a level of a discount. And my expectation, much like I was sharing with the ES, there's a daily volume imbalance up here in that shaded area. So I thought that was a draw on liquidity. So that means what? Even though we had movement lower at 9:30, going into the 10 o'clock hour, it's going down to go up. And because it's FOMC and it's also the non-farm payroll week conditions, and when I say week, not W-E-A-K, W-E-E-K, the week, Monday through Friday, because it's non-farm payroll week, that tendency to be sloppy in price delivery, it's not as precise. Targets won't really get filled perfectly, or maybe not even get touched at all. I'm going to show you how the US 100 for non-US traders actually went to its daily volume imbalance. So it'll be hopefully an encouragement for you to study real time using the US 100. So you don't necessarily have to have real-time data. And I'm taking the liberty based on what I believe. I don't know. I'm almost certain that US 100, US 500, US 30, which is for Dow. I don't trade Dow futures, but I use it for analysis, and you'll see me doing that in more examples as we go forward. And
also, bro's using NASDAQ. Oh my gosh, that makes so much more sense. We also had SMT at the high, then we had, okay. Okay, okay, okay. I see now. I see now. Okay. So here's the volume imbalance. Hey, I appreciate it. Appreciate it. Yeah, that's the whole point of me like backtesting every day as well. Is to build conviction with that, you know? Alright, here we go. So that's the imbalance he's talking about. Yeah, for sure. I'm a big guy. I'm a big journaling guy. All right, so price draws down into that, which is not on ES. It's a new day opening gap. Thank you. It's not. We left these highs. I can't get I can't get a 1 minute chart. I wish I could. We have a order block right there. Come back down. Oh, look at that repricing right there. Right to the current new day opening gap. Oh my gosh. And then displacement higher. Then we have another order block that doesn't get traded to. But this is FOMC to keep in mind. And then even on FOMC, look at where we repriced to. Boom, right there. We come back up. Almost touch that. Then we come back down to this one. Then we come back up. Then we come back down to the new day opening gap again. And then we head higher. Well, it's about. Well, I'm backtesting ICT concepts, you know? Like the system works, but it's all about the trader. Hey, appreciate it. Appreciate it.
In the live stream, so you'll see how I pull up those charts and kind of show you real-time SMT diversions and relative strength analysis, and not the RSI indicator either. Okay, so when we're looking at a market that's likely to go up, and my belief was we were likely to go up into that volume imbalance, as I mentioned yesterday, that was a potential draw if we continue to go higher. If we see the market drop like this into a deep discount, it's likely to go higher and attack number one, the buy side here. And if it's going to go above here, it might just go all the way up into that daily volume imbalance, that shaded area up here. Okay, so with that in mind, let's look at how the market dove into that 1 minute fair value gap in the form of a buy side imbalance, also efficiency. And if these terms are confusing to you, I promise the more time you spend with me and see opportunities repeating with the use of them, it will become secondhand nature to you to understand what it is I'm referring to. Like anything else, a new language is difficult, but you'll see by repetition over and over and over again, these things are going to be easy to pick up. Don't quit. Okay, I promise it's worth it.
I gotta be right back.
stick with it. So we trade down into the order block, we trade down into the BSE buy-side imbalance of efficiency, which is a form of fair value gap. It rallies up, consolidates, and then we dive one more time below short-term low, and then we run above the short-term high. Okay, so that is what? That's a shift in market structure while it's in discount. Okay, it left this fair value gap right there. Okay, so this fair value gap, let me take it off so that we can see it. That one candle right here, that's your fair value gap. So inside the back. And the way I did that is click on it, highlight it, hit the delete key, it takes it off. And then when you went back, just hold down Control and Tab Z. Okay, so it'll undo that in case you want to know. And then the market ran away above this fair value gap. And I mentioned that I wanted to see price stay above that, and it would not go back below that. It's not needed to. Okay, and I'll get into that in the live walkthrough of the trade execution and management. But I want to cover why I chose the NASDAQ today versus the ES. So if you probably noticed this down here, okay, it's a real secret indicator. Only the best hedge fund traders, market makers, the elites, the folks that pull the strings that make the markets go up and down, they have this indicator down here on their charts. I know it's hard to believe, right? It's hard to believe. I'm just being facetious. If you look at this, and we're going to add the use of the ES. Okay, so all I did was compare. And if you're using TradingView, up in the upper left-hand corner up here, you're going to see like a little plus symbol. If you click on that, that's your compare.
So we have SMT at the highs, then we get displacement lower, pullback, imbalance. That's a balanced price range right there. Pullback, imbalance, balanced price range. And boom, market actually opens, then we come up, and then we actually take this high again, and then boom, push down to that PD rate, and we come up. And we have SMT right here between those lows. Consolidate, accumulate.
Here, utility. You just type in ESH2023, and it'll plot over, well, you got to click new pane, P-A-N-E, and it'll plot it below the instrument you have open. Since we're talking about NASDAQ, which is NQH2023 for the symbol in TradingView, you would be plotting it down here. Now, for non-US students, you can be utilizing the US 100 up here, and then hitting the compare feature up here has like a little plus symbol on TradingView up in this area. Look up on when you're doing your own, pause the video if you want to go check and see what I'm talking about. And then you would do, to get the overlay like this down here for ES non-US market, the CFD for US 500. And then it's going to plot it as a line chart, and you click over here, that little gear, and where it says inputs, style, you're going to be doing candlesticks. Okay, and address them as you see here. It's going to come up as a default on line. You don't want that. You want the candlesticks. Okay, so you can compare and contrast for S&T divergence. Now, with a vertical line, everything during with this low, they match. All right, we drop a vertical line on the chart here. Let me pick that up and darken that for you. Okay, so this is our reference point. So wherever I drag this, it should have matching highs and matching lows. Okay, now watch what happens when I drag to the right, going forward in time. Okay, right there, we have this high higher than that high, slightly higher than that high. See that? ES is not showing the strength to the upside that NASDAQ is here. So keep marching forward, going forward, and right there, we can see that this high and this high, NASDAQ is lower, but ES is higher. Doesn't mean anything yet. Watch what happens. We have now this short-term high that's been taken out by this high. This high is this high here for NQ. Okay, so NASDAQ's high is here on the 1 minute chart, and ES's 1 minute chart high is here. Over here, look what we have. We have relative equal highs. See that? But we have a stronger higher punch through by NQ. So NASDAQ was higher here. After, here's the key point, a short-term high was taken, and then a fair value gap was left. Okay, after digging into this 1 minute buy-side imbalance of efficiency, or gap, okay, and we expect the market to turn here. So we have relative strength analysis on our side that NQ, or NASDAQ futures, was the better buy. And again, why? The short-term high here is much more prominent of a break here than it is here. These are relatively flat. This, I'm looking for the relative strength leader, one that wants to break out higher, faster, stronger, okay? And while they both pretty much moved in sympathy with one another, the more sharper technical picture was seen in NASDAQ. Notice that there is a small little gap here, very small. Let me zoom in here without messing up into the relationship between the two. There's a small little gap right there, but look how sloppy it is. See how it completely goes down below it? We don't have that here on NASDAQ. Okay, we don't see that. Why didn't we see it? Because it's stronger on NASDAQ. NASDAQ had much more relative strength comparatively to that of the ES, E-mini S&P. So I'm going to trust this one because visually I can see that fair value gap. It's much more prominent here versus the very lethargic looking fair value gap down here. This one's much more energetic. It's much more obvious. and it is also with a market that's moving more explosive to the upside. Okay, so I want to be in this market buying this fair value gap right there and trusting that it will not completely close in. Why? Because we want this to act as what? A breakaway gap. Why should it be a breakaway gap? Because we've already traded down into this 1 minute fair value gap in the form of a buy side imbalance, sell side inefficiency. Real quick for your notes, if you see a candle that's moving like this one way and it's going up like this, so from low to high, it's up close candle, it's one single pass like that, and it creates a fair value gap. That fair value gap is labeled a buy side imbalance, sell side inefficiency, BISI. Okay, BISI. If the candle opens and trades down and creates a fair value gap, sell side BISIs are bought for longs, targeted from longs. Talk a little bit more as we go throughout this. I'm going to take this ES off now. Okay, so we've accomplished gap here, and in leaving this range right there, you'll see that that's drawn, and I talk about how it's not going to go back below that. The algorithm will not reprice back below that. Why? Because this, in this area here, it becomes a balanced price range. One single pass, and the fair value gap. So it's going to work in this one, and then accumulate new long positions. I even talk about how this area here with this fair value gap, I'm going to draw it again, like this. I even stated that you would see this form support. I typed it out and you'll see it again as I did it. And the only thing I was incorrect about, and this is typical of FOMC and also non-farm payroll weeks, where my precision is just a little bit skewed. This low right there, I looked at it as a potential to create an institutional order flow entry trail, which is just a small little movement into a fair value gap that doesn't completely close it in, and you can buy it. High frequency trading algorithms use that as a entry model, and it's too broad of a topic to try to cover inside of this. I'll mention it in passing when we're watching real-time data in the live sessions throughout this year. Just know that it is a partial entry into a fair value gap that will not even go halfway. Okay, it's just like small little entry into it and then picks up orders and runs. Okay, so that's basically all it is. So it's an entry into a fair value gap, but not even the halfway movement of it. And you see the market does in fact create support here. It rallies. I anchor to this down close candle. It's open price. Draw it out in time. Anticipate a order block forming. Find some support. Creates a small little gap in here. This is a measuring gap. So we had a breakaway gap down here, and this is a measuring gap. So from this long to this point here, that's essentially half of the move. And then we have buy side up here. So we can target.
I do want to look at this on TradingView, actually. I do. Or on FX Replay, my bad. Not TradingView. Alright, so here we put that low, and this is kind of the market maker model. We come back down all the way to this low. We have this fair value gap that supports price here. Okay, here, where's my triangle? That imbalance, as we know, we have 5 minutes change to delivery on this candle right here. If we look at our implied dealing range, let's get it. Wow, this is like textbook market maker model. Textbook at 25%, like we say, we have our breakaway gap right there. And then we have a balanced price range right there. Come back down. We reaccumulate within that placement. And then we have a measuring gap. Look at what price does at 75%. Explodes to buy side. Where's this high? That's close from the measuring to the breakaway. And then we know this level right here is that new day opening gap. It gets used again right here. Wow, that's nice.
The bulk of our exits just above this high here, because we have a confirmation that this isn't getting filled in. And you've already seen several examples of me doing this. This is how you determine and classify real time a measuring gap. Okay, and measuring gap is classic technical analysis, but every time I've ever looked at books and courses and educators, they never really taught how to utilize it. They can talk about it after the fact. They can see it in hindsight and show it to you in books and sell courses and things like that. But nobody I've ever seen ever be able to identify them real time.
Actually, I would more classify this. This is the measuring. Let's see. Yeah.
And understand when they're going to stay open, when they're likely to be filled, those types of things. And especially with electronic markets like this or 24-hour markets, where we don't have gaps in the same sense that we did when we had open outcry. And I've talked about this a lot when I was doing Twitter spaces, those little podcasts. That idea of gaps or inefficiencies in price where there actually is no trading at all, that's a real liquidity void. Things like this get called a liquidity void. And that's unfortunate because it's not a liquidity void. This is a buy side imbalance, sell side inefficiency. It's buy side imbalance. That means it's moved too aggressively one side to the buy side, and it's inefficiently delivered for sell side. So what is it? Buy side imbalance, sell side inefficiency, which makes it a BISI. I made these names up for that very reason. The algorithm creates these little areas here, and we want to see this type of thing stay open. Okay, other educators out there, Mr. Chris Laurie, he has a group of people, and he's always talked about these things as a liquidity void, and they tend to fill in. Sometimes they do, sometimes they don't. My logic tells you when they don't and what you do with that information. Okay, I did not learn liquidity void from Mr. Chris Laurie. I just used that term when I was on Baby Pips. People that were familiar with him, they said, "Oh yeah, that's a liquidity void. Chris Laurie teaches it." I said, "Okay, well I'll just go with that." So that saves me the time of having to teach something about that particular thing. I'm just going to go into more detail about where they form and how to utilize them. But anyway, obviously we're in PhD level, technical science now here on this channel, and you're seeing a lot more precision, a lot more understanding, and reasons why things are the way they are. So we can hone in on opportunities that the algorithm will present to smart money. Who is smart money? People like me and you while you're learning. Once you understand these concepts, you'll be able to go out there without me talking about it, without me hand-holding. You'll be able to see it, you'll anticipate, you'll know exactly what the market's likely to do more times than not. That's all you need. That's your little edge. And you wait for specific times of the day, and you wait for all of the signatures that you look for to justify your trade. And how do you know what they are? You're watching real-time data with me this year. So you're going to start seeing setups that form repetitively, and you'll be able to see them so many times, real time, whether you're there with me when it's being done or after the fact and you're watching the recordings. The recordings will be long because it's the entire session, unless I cut it short because something reached a target or whatever. But they can go up to 2 hours. And that's why I'm only going to do 2 of them a week. And if I get a good move, it may just be one for that week. So I'm kind of like tossing that in there and preparing you for it. Oh, you're already pulling back. I have to manage my own personal life too. So my objective is for you to find one good setup a week. And one good setup, you can see there's a plethora of setups. I've already shown the equivalent of like 40,000 in just the last 5 trading days. So, and they're not little micro movements. They're not the 5 handles I'm teaching you to strive for as a low-hanging fruit objective to grow into. If you get 5 handles consistently, you can find that. That's 20 ticks. If you can find that consistently, you'll have no trouble finding the setups like I'm showing you here. You just got to find a place where they all nest together, which is a market maker buy model in this example here. So market continues up. I mentioned that this would be an area where the next draw liquidity would be, which is a rejection block. And then I mentioned I'd take 3 above here. I do. And then above here, I took 3 more. And then I left 2 on, wanting to see it trade up into that daily volume bounce, that shaded area up here. And I took 1 off when I felt it was not likely to go up there entirely. It almost stopped me out here. And finally, I looked at this as the last line in the sand. If it crosses that, I'm going to let it take my stop. And it gave up the ghost and come up and stop me out. And ever since then, it hadn't done anything higher. Okay, then we have the FOMC noise. I say that facetiously. And then we break down. I'm not going to cover any of this here because it's not going to be pertinent to what we're trying to do because you shouldn't be trading FOMC. Okay, it's like a non-farm payroll event. It's a carnival ride. Yes, I can, but because I can doesn't mean you should. Okay, so I'm trying to be a responsible mentor, not someone that's just trying to promise you you're going to know everything. Okay, I'm teaching you how to find one good setup per week that has a lot of probabilities and statistical edge behind it, and the logic, not just me. A lot of my detractors and people that don't like me or a competitor, therefore, will come forward and say, I'm cherry picking. And I'm sorry if this is beyond the scope of what you can do and sell to your students or whatever. But I'm trying to be in my own lane here. I'm trying to educate all of you. You don't have to subscribe to what I'm teaching. You can think that everything I'm showing you here is all contrived, okay, a figment of my own imagination. But the problem you're going to have is you're going to see it in the charts live, and I'm not leaning on any other logic. So that's what's going to be fascinating for me. How many of you I can convert in understanding that these markets are absolutely controlled to the smallest degree, okay? And once you see months of it over and over and over again, you'll be convinced. Okay, I'm convinced that you will be convinced. Let's put it that way. So that's the overall markup and just the short and skinny of it. Now I'm going to go into the actual replay and management of the trade and how I did everything and why I did it when it happened. Okay, and let's do that now. All right, so with everything I just outlined, all the logic as to why I'm anticipating it, I'm going long here. You can see the actual orders. And don't be discouraged by the 2100. That's actually 2.1% risk. Okay, it's based on a $100,000 paper trading account. And there's some of you like to choke on the fact that it's paper trading. But if you can't appreciate the fact that the precision elements are there with real-time data, because you can't do anything like with market replay on TradingView, you can only trade or execute with live data. So live data is the only way you're going to be able to do it. So you can't be faking it. You can't game it like MT4 and fake it like frauds do. So buy sell liquidity, that's where my initial draw on the market is. So this is a market maker buy model, and you can learn more about that in my Scout Sniper series, which is free on this YouTube channel as well. So there's the order block. I'm waiting for price to move away from that. I want to see it expand above these relative equal highs here. That's buy side liquidity. So my eye should be, well, your eye should be trained over time, and now my stop is to break even. Because if it goes back below after running those relative equal highs where the buy side liquidity is written, that would not be a good thing. So I want to make sure I'm controlling risk. So I want to see this fair value gap, that pink area, act as support. Okay, so what specific level? The high of it. I want to see it expand above it. And as it's starting to go up, I'm watching how price is gravitating towards that rejection block. Okay, and I like the expansion that we're seeing here. And I'm not thinking that we're going to collapse and go the other direction based on all the things I've already outlined. And there is a daily volume imbalance that's already shaded on my chart. You can't see it yet, but I'll scrub the video down on the axis, on the price axis, and you'll start seeing it in a moment. But I just moved the stop up, and I'm going to look to buy or pyramid more of this position as it drops back down into that fair value gap. When this candle closes, I'm anticipating a fair value gap to form. There you go. So now I have a gap there. So I like that gap being there above the shaded area that's pink. So I don't believe that that's going to have to be traded back down through. So that pink area becomes an area of a balanced price range. That's not classic support and resistance. That's not supply and demand. That's not Elliott wave. That's not thing harmonic. Okay, it's algorithmic. And I understand that some of you feel that this is complicated. I've actually had some people already put comments in the videos and say, "That's it's too complicated. I can't do this." Okay, I understand. But I'm not here teaching the people that's going to tap out. I'm here teaching the folks that are really wanting to learn how these markets book price. And it was complicated for me as well. So I'm basically stating that the algorithm is not going to reprice below that, and it's going to be attacking the liquidity at 11,050 buy side. So that's basically above the buy side liquidity pool that's being highlighted in the upper left-hand corner. So I'm moving the stop up. I can trust that the stop will not be hit because the pink area is a protected area. The algorithm does not need to go back down there. And the reasons why is because it's already repriced and it's aggressively going to attack what? Those buy stops above those equal highs at 11,048. So 11,050, that's where I'm anticipating the next draw on liquidity. But there are two targets before we get there, and I'll obviously mention them as we go. Now that right there is a classic bull flag. I don't want to get wrapped up in thinking it's going to break down, but it comes down into this little area in here, back into that fair value gap that I like. Okay, I like that gap that's not being shaded yet. I like that right there. So I'm telling you with this annotation that watch the support form here. Where at? Right at the top of that fair value gap.
Okay. This is better than real life. This is better than watching the charts.
More. So the 6th position contract long I have, and now I'm going to draw out that fair value gap here. I want to be in more of the position. I like the fact that we dug down into it 2 times. We went down into that blue shaded fair value gap twice. So I'm putting 2 in there, whereas I normally would have done like 3 or something to that effect. I just want to make sure I'm building more position, and I'm basically saying that naked charts are superior to indicator drivel. Unless you have a time-based chart, you're not going to see these elements. And watch how price shows how it wants to rally. You see people out there, they have range bars, or they have Heikenhashi or Renko bars. That stuff's nonsense. It's absolutely garbage. There's nothing behind that at all. The algorithms have no respect of any of that stuff. And without a time-based chart, you cannot see the fair value gaps, the imbalances, the volume imbalances, the BISI, the CIVI, all these elements that the algorithm actually refers to. So when I coded these things in price action, I'm looking for price to return back to them with the logic that they will perform as they're coded. So the algorithm actually refers to. So when I coded these things in price action, I'm looking for price to return back to them with the logic that they will perform as they're coded. So if the repeating phenomenon is identified by you, you're going to see there's certain setups that are going to be very easy for you to trust. Not all of them are going to be setups that you're going to say, oh, I would definitely take a trade based on that, because I have lots of students and I'm expecting large ranges to just now come in. So in other words, I'm expecting price to begin to start moving higher. As long as we're not digging into that pink shaded area, it can dip down into it, but not by much. And I'll explain that as we go. So I'm looking for the beginning of green candles moving up. Notice also that we went from large green candles and now we're in small little range candles. Okay, so the next expectation would be what? Big candles. So if we're bullish, we don't think that that pink area is going to go and break and allow price to go down, then the next series of big candles should be in what direction? Up. Okay, so when I'm annotating my chart, I'm typing out, large range candles are coming or big green candles are coming. I'm studying, and I just went in and bought more. Some positions at 10 contracts. I'm saying this is the final partial entry, but I want to illustrate further if the opportunity presents itself. So 10 contracts is about as much as I wanted to do with this position because it's a big position. Like I'm looking for like 600 ticks. And it's a pretty significant run in price. I've already highlighted the next buy stop or buy side liquidity right above that 11,018 and a quarter. Now right here, this is again the rejection block. So I'm anticipating price reaching up into that. So I'm building all of the framework as you would do in your own analysis, or in hindsight, when you do your back testing, when you do all your charts, you want to be annotating them just like I'm doing here, looking at the logical levels. And I taught what the PD arrays are, and you learn more about them in the core content lessons. Now that's a classic bull flag, and retail traders may in fact want to try to go long in here. That right there would cause them to go long because it's a breakout, and they would put their stop loss right below the swing low, just to the left of my most recent partial entry long. And watch what the algorithm does here. It's designed to do this very thing here. When bull flags are correct, and it's anticipating a higher run in price, it will always likely do this very thing right there. Boom, stops are engaged. So now I'm typing out that it will sharply reverse higher here based on what I've just explained to you there. So now retail traders don't trust that bull flag because they got stopped out. They will not re-enter. They'll be too fearful to get back in, and that's why it's coded that way. Now, again, while I don't have that pink range on the chart again, just know that it can dip down just a little bit below that bottom of that highest blue rectangle. It can do that just by a little shallow little dip below that, and that's all that would be reasonable. And then higher prices would be delivered. So I'm watching price, I'm thinking to myself, okay, while I do believe that that range that was shaded and painted, I no longer have on the chart because I want to keep your attention on the very salient moments as price is being delivered. I'm thinking to myself, it might offer an institutional order flow entry drill. So it may need to go just a little bit lower, a couple ticks lower. I'm extending the fair value gap. And I'm just, again, reminding you that's where I'm thinking it's going to go. These are all done through TradingView live. There's none of this annotations after the fact. It's all happening real time. And you can see one of the other signatures of why I don't like trading post New York session on Wednesday is because it's like this. Okay, it's not as precise. Like I usually get in on the low candles and get on the high candles, and it's just real muddy during this particular time of the month. And I'm anticipating a likelihood of institutional order flow. So if it trades down and just touches just below that line there, I would go in with another partial and pyramid more and trust the fact that it would not collapse going lower. Okay, so that looks nice right there. You want to see that type of delivery. Again, find that in support and resistance. The classic support and resistance taught from like John Murphy's book, Technical Analysis of the Financial Markets. It's not there, folks. It's not. And for people that trade bull flags, they're getting stopped out here. They're gone. And when a retail trader gets stopped out, it's not likely that they will re-enter. And I'm got my finger on the trigger to buy one more in the event that it drops down and offers me an institutional order flow entry drill. And all that is me dropping a long if it drops below that little trend line I have there. And I'm highlighting that big up close candle. If it dips down below that, I'm thinking that it's just one last little attempt to trick traders going short before it rips higher. So I'm just sitting there waiting. In the event that it offers it to me, I'll take and add one more contract long. You can see that upper left-hand corner, I have my mouse sitting right over top of the buy button, but we're done. Now I'm drawing your attention on the level that was just outside the view of your viewership on this video. That I'm not sure what color that is, but and we're looking at the down close candle that's to the left of where price is now. I like that as an order block, and I just put my limit order up there just at the bottom of that daily volume imbalance. So I just extended it out for a bullish order block. Now I was actually trying to anchor to the high of that candle, but because I'm again monitoring a 1 minute candle, I know the likelihood of it touching the open is there. That's fine, but I would have anchored it if I had cared enough to do it. I would have put it right on the high, and you can see it would have hit it perfectly. This is beautiful delivery now, so I want to see it run up above that 10,987 level. My old eyes are failing me here. It's hard for me to focus in on even with my glasses. 30 years looking at charts, man. It really takes a toll. Between that and light sensitivity from a motorcycle accident in 2009, it's not fun. All right, now watch that order block because it can always be reclaimed.
That level's
now,
nice.
reclaimed order block is where it acts as support. It runs away and it comes back down and trades into it again. It's completely normal. It's not something that is abnormal. It's not something to be afraid of. Remember, the logic was that it will not go below that original shaded area that's no longer shaded now. But in your charts, you should have it in there. And this is going to be the number one complaint, that I don't have enough annotations in my chart when I'm doing a live session. I have to read price the way I'm used to reading it. And having annotations, number one, it takes the focus off of watching price when I'm annotating. So if I'm watching what I'm typing, I'm trying to spell it correctly so that way I'm articulating the information correctly on a 1 and 5 minute chart. And the question is going to be okay, well, if that's the issue, then why don't you just trade with a higher time frame chart? Well, you're all complaining that my videos are too long. So now what's the complaint going to be when I have to do the entire thing in front of you for up to 2 hours?
Was there a reason other than that?
It's not going to be the same learning experience.
For this, I don't know. This was day before FOMC. This was FOMC day, so this was pre-FOMC. And honestly, like, I wouldn't look to trade this, but we have clean highs, and then there was a 5 minute. There's a 5 minute imbalance. Over here, there's a 5 minute imbalance right there. And then there was divergence here at these lows, but he never talked about that. We had SMT there. And then market structure shift, pullback, imbalance with clean highs here. And then displacement, and then you have an inversion right here. We have market structure shift, pullback, imbalance with SMT there. After repricing here, he's got to know something else, bro. Like, I don't know that. I feel like that's, and it's in a deep discount as well. I want to look at like I had NQ up, but I also want to look at this real quick because if we pull up new day opening gap right now, yeah, look at where we repriced to perfectly today. Yeah. That happened. I was like, damn. I looked back at my chart. I was like, damn. So yeah, if we look at, let me pull up the 7-minute chart. It tends to show all the new week opening gaps. We fall short of a new week opening gap. So like we almost touched one, and then. So honestly, kind of surprised. Then we expand right from this new day opening gap right here, and we come back. The current new day opening gap is this. Literally tick, like that. I don't think that's really random, honestly. Like that, right there, that signature right there at that gap here, in that inversion. Bam! Like we're going up to buy side, right here, and then we come back. This is FOMC. We reprice. We break, or this is the current new week opening gap. Notice how the bodies stay inside of this. We respect it. And then we break down. We come back up, we reprice the high end during FOMC. We come back down where? Right there to that level. And then we have a new day opening gap here. Buy side offered. Then we come back lower to this new day opening gap. And then we close within that range. After this, how we didn't drop lower, it's because the balanced price range. You have sell side delivery, then buy side delivery. This all becomes balanced. I'm gonna look at this wick right here. I don't know if that's of significance. And also, we're around equilibrium. Notice that of this dealing range. I'm gonna remove this real quick. It's kind of too much. This blue line is true day open. This is 8:30 open. So we're in a deep discount here. And notice that equilibrium creates a consolidation. And then at 75% of that dealing range from this high down to here, we have expansion to take buy side. So that's your silver bullet. Right now, it looks like we're attacking highs. Very muddy. I mean, look what happens right when we hit this new day opening gap within the 1050 macro. We get change state delivery. We get fair value gap right here, right there. Like that, it's all hindsight. Right there, boom. I mean, I wouldn't really look to trade this, but maybe since AM session was so muddy, 1050 macro can offer something. But I wasn't really expecting that.
So it gets back to who really wants to learn here. The people that come into my comment sections or talk about me in other circles about how it's long-winded. I don't get to the point. The point is you want to learn how to make money. Okay, that's why you're trying to do this, whether you're learning it from me or someone else. You want to learn how to make money. This is not a hobby. It's not a game. Okay, it's not a video game. You're in here trying to make money and enough to sustain a secondary income and maybe even replace it. So I'm looking for a price to want to reach up into that rejection block, which is where I have annotated 2 contracts will come off above the rejection block. So I'm anticipating it's going to spike up in here. And I'm going to be a little overzealous here and type out the very instructions that I'm selling 2 contracts. So here I'm reinforcing the idea that it will drive above here and give it time, folks. I had a fellow reach out to me on an email and say, all this stuff is added after the fact. That's the reason why you speed up the videos. So here's what I'm doing. I'm typing it out so that way you know that when it goes up there and I hit the arrow, when I hit the sell button that's toggled for 2 contracts and the arrow appears, you'll understand that wasn't something added after the fact. I'm showing you here because I know the videos get sped up and it's hard to see when things happen. So I wanted to put sold 2 contracts as stated I would. I was ahead of time. Now because I did it, I'm thinking to myself, now I gotta wait here longer because had I not typed out sold 2 contracts as stated I would, it would have already ran.
109.30.50 is a stop loss. Yeah, he gave it room to. I think he might have just moved it just above his average.
And up there and allowed me to get it off. So I'm just internal dialogue. That's all I'm sharing with you here, and I make light of it and type that out to let you know. I had to type it out, which made it probably jinx it. I had to sit in this a little bit longer before it gives me an opportunity to sell 2 of the 10 contracts. So all this here is preamble to a nice run up into 2 more liquidity pools, the one I'm waiting for, and then that spike wick high at 11,018 and a quarter. And again, this is sped up a little bit. So it's a sloppy day, and sloppy days are, they're very hard to work with, and I don't like to engage them. We'll be doing some of them where I anticipate this likely very thing happening, so that way you know what it feels like to be in there watching it. Don't turn them off. Okay, you want to know what this feels like and how to engage them. Okay, you all think all these setups that I show, you're going to walk out there and do the same thing and know exactly how to do it because you watch some videos like ICT Netflix. That doesn't work. Okay, you have to be out here in the trenches doing this. And again, this is sped up still. It's literally a little bit more than halfway the speed. If you look at the second count in the lower right-hand corner, it's ticking along. Okay, it's going more than about 50% of the normal speed. So it's going faster than you would be if we were watching it real time. So while this was a recording of real time, it's still long. It's still drawn out. Okay, and this is where you forge patience, and patience is required to do this profitably and with longevity. So there's no shortcuts. You have to watch price action just like this. And I'm referring to how you shouldn't be thinking it's going to reverse, because it's not. It's going to pop higher and allow me to take 2 contracts off. And I want to delete that sold 2 contracts as stated. I would, because it's starting to irritate me, because there's too many things on my chart and I don't trade like this. But for you to learn it, it's edifying for you to have it on the chart. So it's ready to pop up here. And I'm thinking to myself, this is a really drawn out process. A lot of time just for that small little range still not be delivered yet. And I apologize because I heard the first portion of this video when I was cropping the 2 segments together, and the acoustics of my new trading office is not that great. Okay, so the audio will improve as we go through the process of producing this bounce. So it's going to sound like acoustics isn't microphone. Just trade leaves it open. That's a measuring gap, and I can trust that we're going to go up to 11,050, 11,060. I'm just being facetious. I had to pre-type the told you so laugh out loud, which in my mind I'm thinking this is the reason why I got to wait for it, because I typed it out. Had I not typed it out, it would have already went up here. There we go. So 2 contracts have been taken off as a partial stop. Distance, don't look at that. And he used to do things like this with the pause a little bit, and then they're no longer sailing throughout the trade management. Okay, you expand and make a big candle or a series of big candles going up. The first contract I'll press, I'm going to try to take 3 of them off above that next level of 11,018 and a quarter. But notice what I do. I don't go and click 3 at one time. I want to try to gravitate towards that 11,048 level. Remember, there's buy side liquidity. Now, there's me taking one off there. I'm watching. I want to see the expansion. There's another one coming off. I want to see if I can get a little bit more movement on this candle, knowing that it's going to go to 11,048. And there's the third one. Okay, so now I have 5 contracts still. And here is the 2 partials. And it's now below where I think that is a measuring gap. So there's no need for it to trade back down here. If it does, I want to be out anyway. So I've locked in 37.95 on the balance of the trade, with the expectation that we're going to gravitate towards this area here, which I'm going to make more prominent so you can understand that I'm going to take 3 contracts above this level. So you know what I'm going to be doing before I do it. I have 5 contracts still, and I'm going to do the same thing I just did, okay, which is running down equity. That's the principle. That's what I named it. The principle is that when we dig into the pools of liquidity, we don't just indiscriminate like you've seen me do in other examples. That's the easy way, because I'm recording something and I'm busy. I'm doing other things. I was doing mentorship lessons, and I still wanted to share examples. What you're seeing here is exactly how I trade. I'm peeling them off as the candlesticks are forming and expanding more and more and more. I'm not just dumping all the, if I want to take 3 off, I'm not just doing, okay, let me just take 3 off immediately. I'm going to try to squeeze as much juice as a lemon as I can. And sometimes it's really nice, and other times it doesn't allow me to get all of them off. It will come back in reverse, and I have to either exit the trade or maybe even retrace more, and allows me to add more. I'm not wanting to add anything here, but reminding you all here as viewers that there's actual buy stops resting above those relative equal highs, and they're going to be targeted by the algorithm. And I'll remind you all that the 3 contracts will be peeled off the same way I just did it when we went above 11,018. Do this with market replay 1, candles high and 1 off. Comes all the way down, takes partial profit for earlier because I made that, and they might want, but they did aggressively. I do it, but I'm like, nah, let me just just 40 tick trades. Balance is my trade terminus, or unfortunately, as most of you already know, it's not a spoiler, I get stopped out. I want to be honest with you, but to teach you why, and I know some of you are looking at this saying, man, what's wrong with this? I want to trade like this. I don't like trading like this, because the moves I usually trade in are much cleaner. They're much more faster, running to my target. I don't have all this. I mean, think about it. This is a 1-minute chart, and these candles are, really lethargic. So I'm hoping at the time of this right here that it springs up there. I'm going to collapse and do this and move them off. Don't stop losses. This is how you manage positions. Okay, there's people that come over taking the sting. If I got stopped out on the full 2 remaining contracts, then I could collapse it there and just commit to the full run. No, you ever seen them show you examples where they have a stop loss and then they open the idea what price is going to retrace? And it's not to brag, but you probably media trade log of history of trades is not proof. That's not proof. Whether it's a managed, and I'm using a median that I can't fake. Not that it's here. That's the series I introduced, order block theory series. So it came real close. That's the series I introduced the YouTube buy model. And again, you can find out more information about that on my Scout Sniper series in my YouTube channel.
He talks about that
I don't
on
recall how
Scout
many videos
Sniper.
are in that series, but that's the series I introduced order block theory initially. And if I'm not mistaken, I do believe that's also the teaching series that I did bring in the market maker buy and sell model. So it came real close to my stop loss. And when Forex, that would have stopped me out. That's the difference in the markets. These are a lot more forgiving and more precise than Forex. And I have no interest in returning back to Forex in my own trading. So I don't have, I mean, I'll do analysis for you all this year, but I'm not personally going to be trading Forex anymore. And you're probably wondering why? Why are you doing that? With the central bank digital currencies that are going to come online this year, that's going to have a major impact on crypto and also Forex. And it may create huge risk. So I'm not opening myself up to that. I'd rather be in a market I cut my teeth on, which is this market right here. In the early 90s, I was a bond and S&P trader. So many of the people that are pretending to be educators today, or quote-unquote profitable traders, they were in elementary school or not even born when I was trading S&P.
Which model are you watching now? I'm just watching the
Right
2023
here, I have the
mentorship.
opportunity to peel
I've
that
already
last
watched
one
it
off and be
before,
done with it
but
when it runs
obviously
just
going
above that
back over it
relative
with
high.
the
I
new
have a trend line there. I don't
understanding,
extend
it's
over,
definitely
but
good. Study 8
that
to
was my
9, bonds, opening
little chance
range,
to
core
do.
concept
I'm
on
looking
10,
at that as
apply
the
it to
last line of defense.
indices.
It needs to run here and go into my target, or if it runs above that
Yeah, I've watched
north equal high
2022.
to the left and fails, then I'm done, which is in fact what you'll see happen.
I've watched 2022,
But you want to get your
2023
position
core
funded.
content.
That means take partials
Core
along the
content.
way and then move your stop to a point of there's no real consequence to you being stopped out. You don't care. I have no emotional
But honestly, I
attachment
feel like I kind
to
of
the
rushed
results at this
watching it
point now.
all.
If it now right there,
Not
that right
rushed,
there should have
but
been
like I've
me
taken
killing you all.
notes.
And if there was a funded, real live traded.
The 2023, he goes over silver bullet. That's pretty much what he introduces, the silver bullet. So 10 a.m. to 11 a.m. and then 2 to 3 p.m. For indices. And then 3 to 4 is the London silver bullet. Why not focus on just one model? For me, I'm just trying to find my model. And with doing that, takes... I'm giving it, like... I guess that's true. For me, I focus on AM session. So I focus on the Judah swing at 9:30, and then I focus on the 10 a.m. silver bullet. That's kind of my model, my approach, but I'm still trying to figure that out.
I would have done that because I've been impatient because we're looking at the time going into noon, and at lunch hour is usually when we have a retracement. And you'll see that occur here and take my stop. Having your trade managed with a trailing stop loss, knowing where to place your stop loss, and here's my stop. I'm just saying it was a nice trade. Over 500 ticks for those who like to count that kind of stat. Okay, and now you're going to see it in close to real time. I'm showing the executions again, so that way nothing's changed. Everything as I was flashing them earlier during the live portion, price booking, and me managing the trade, everything here showing you from the lowest point. All of this is exactly how you would see it on TradingView if you did it yourself. No trickery, no fraud, no making up, no MT4, rented MT4 servers. I don't do those things. Okay, people that can't trade like me or that precise, they like to make up all kinds of nonsense and stories to justify why some people should collectively come against me with hate or cancel ICT. Well, if I'm going to do what I'm doing here and what I've done already for the community, which in my opinion is more than anybody else, I could be making millions of dollars teaching, and I'm choosing not to do that. And I'm going to invest my time in all of you for free. Take advantage of it because I'm not going to be doing it again. So many people ask me to talk about real-time data, show it live, do this, call this. I'm going to do it for the entire year, and there's still going to be people doubting. So for an FOMC day, I call this satisfactory. All right, so in summary, I promised I would show you in relationship to the US 100 CFD non-US trader, if you're using MT4 broker type thing, and you can't trade the futures contract in the US. Okay, I'll show you the relationship of how it performed. It actually did better than the actual futures contract did in respect to that daily volume balance. But this trade was a paper trade.
Have you tried? I use inverse. I use inverse for ViGap for the logic, but I don't really trade inversion. But let's look at the current price action that we're in. Let's look at this. I mean, it depends. I don't have like a certain set. That was kind of that. All right, I wanna go in the charts, go into my charts for a minute, and then we might watch another lecture in a minute. But the one with the market structure one. Yeah, I would agree. All right, let's look at this. So basically, AM price. Where do we open? We open right here. We initially drop lower. We push lower. We engage sell stops. Push higher, buy stops. Push lower again, more sell stops, and then we displace higher, and then we take this pool of liquidity. Well, you notice here, what have we overall done? We've taken this big pool of liquidity here. So overall, here we have taken buy side more than we have taken sell side. Like we saw the sell side liquidity draws here. But like this is really just consolidation, really fickle price action. I really don't think that there's much of a trade at all here. If we're looking at this in hindsight, at 9:53, we have this 9:53 candle here. And at 10 a.m. we bring displacement, and we come back up to this BPR. So I mean, I guess this technically is a silver bullet. But overall, I really don't think there's anything here at all. Nothing at all. And we come back down straight to this volume imbalance right here. Then notice this on the 1 minute chart. The new week opening gap right here. New week opening gap, repricing higher. We get change state delivery here. With a fair value gap. I think this is the only thing that's of significance. We don't trade into this fair value gap. Kind of just get displacement. How long have you been trading? I couldn't even tell you. I think a year and a half. Around that time. So within 2 years. Well, I would say I've been trading ICT for like 3 months serious. I would say honestly 2 months seriously, but no. I haven't been live trading. I've just been submitted to the process. 50% consolidation. No stop hunt though. And then 75% expansion. Here. Overall, I don't think there's much here, honestly. So now we've taken buy side again. I expect to see consolidation. I'm letting Monday play out. There's no need for me. There's no rush for me to come in on Monday. I do want to go to NQH 2024. I kind of want to backtest this price action for a little bit, because this is kind of like when I first started journaling and taking these seriously. I think yesterday we were in January. Let me pull up my journal from yesterday. Yeah, we're at 126. Overall, what is structure looking like? We came down, we took this low here. We have sell stops that exist right here. that I don't. Why is that already? Out of the 2 or 3 models you studied, well, I think me personally, I'm trying to do too much, you know. Instead of like trying to stick to a model, I'm trying to like get all of ICT's experience within like my first 2 years. Which there's nothing wrong with that, especially if I'm not live trading. Which that's kind of what I'm sticking to. But I would say silver bullets. I like the 10 a.m. window. I think the 10 a.m. expansion and then maybe 10:50 macro is the best. But I guess I trade a market maker model. That's what I trade. Market maker buy model. Market maker buy and sell model. That's my model, I guess. But that's also subjective because it pretty much is the market. So like I guess you could say I'm a market maker model trader. Yeah, I guess it's my model. Yeah, I don't know why I've never like thought about that for real. But yeah, I would say I trade market maker models. But I don't know why I've never internalized that. Yeah, it is what it is though, but I'm not trying to rush it. It's not like I'm going in there trying to rush it with money. I'm giving it time and submitting to it and just being patient with it as well. Notice how here we have a BPR. Because like realistically, I don't care to make a single dime within the next 4 years. That's my mindset. I graduated high school last year, so my mindset is, hey, bro, you have 4 years. You have 4 years, and go 4 years and try not even make a single amount of money. Because I was in college, I wouldn't be making shit in college. I wouldn't be making a single penny. So that's my approach, my ideology. All right, so here we have. This is all Monday. So we drop it below true day and we take sell side liquidity here at true day and then we end up expanding. But here at market open, we come up, we take buy stops, come back down to sell stops, and then expand. Nice, nice. Market opens right here. And first we take sell stops and then reprice to this low resistance liquidity. And then once we take buy stops, we come back down to this low resistance liquidity. And then we change day delivery. So this is a classic Judas. Maybe SMT there. I'm gonna journal all this that I'm gonna backtest here. So we have classic Judas. We come down, sweep purge sell side, and then we reprice to the low resistance liquidity. We come up. We've now taken buy side. Very fickle PA here. Really, not really much here at all. No displacement, no true displacement in price. Here we have a fair value gap in, fair value gap out, but we failed to take the sell side liquidity pool. We do drop below true day open here and have fair value gap in, fair value gap out. But right after that 10 macro, there's really not an entry though for potential buy side, but we've already taken buy side, so we're not really interested in buy side. And we get displacement lower, and there's really just nothing here. These are kind of conditions that we want to avoid. And then once we take sell side, once we drop down into that higher time frame PDA, the 1 hour fair value gap, we show order pairing within the wick. Then we get displacement right here. Order block traded to there, and fair value gap. And then we see higher prices, and then we reprice this new day opening gap, and then we Dang, we really just rip after that. I'm gonna see what's the deviation of this price leg right here. -2, -2.5. That's the area that we hit. We don't really hit. Oh, -2 is nice there. It encapsulates the wicks there. Oh, oh, oh! I anchored it. I didn't anchor it right. How does that get the high though? I thought I anchored it right. I did not. All right, next day, next day. It's gonna be magic. All right, London. Hourly, we're consolidating here. I want to look at this most recent dealing range here. High to low dealing range. We're in that 75%. We've rebalanced to an inefficiency. I want to see, do we get displacement? Do we claim this as an order block and then reprice to buy side? But I also could see us drop down into a deeper discount into here. And then maybe go from premium back down to, I don't really see this for value gap being a draw, but maybe this mitigation area. So let's see. We could claim this as, let's see if we want to put London low a day. Okay, we do not. Let's see. We have this mitigation area my eyes are looking at. Also with this fair value gap. Oh, that's what it's called. It's called live economic calendar. We have 10 a.m. news. What is it? Tuesday the 30th. Just consumer confidence. Okay, let's see. We also have this 15-minute PD array. I do want to see that because that lines up with the new day opening gap. Let's see if that happens. We have had 15-minute SysD. At market open, we liquidate sell stops. Where's the low resistance? Where's the low resistance? Right here. Let's see if this is the order block. We don't really have an imbalance here. It's kind of just we're about to have 10 a.m. news, so I want to see what this does. Okay, we distribute right to that. Wow, look at that. Distribute right there. So that 15-minute SysD fails. We are rebalancing this imbalance, and we do have that area that we want to draw into. We also have this breaker right here. could be a reversal. 10 a.m. news. Let me just lock in on the NQ. Oh, of course it chooses yes. It was January 30th is where we were. Alright, here we go. Wait, it deleted all my drawings too? Wow. That's why Trading View's an L. So we have this area that we're looking to draw into. That's big. That's a big handle right there. I don't know. I need to see a lot more. So that is an order block. I want to see these highs now. Oh my gosh. The struggles of Trading View are real, bro. Trading View needs to get a better backtesting. They could literally have a whole monopoly. But they do partner with Trading FX Replay. So maybe they do it on purpose so then people try to buy FX Replay. They're smart with it. What's good, Burke? Berkey. Alright, let's just skip this day. Oh, then we had more displacement here at 1220. Oh, here we go. We broke below New Day opening gap. Why was this not? Oh, I guess it was. Then we repriced the New Day opening gap here. Then we displaced below it. I do want to. Oh, clutch. Some spam caller calling me. Alright, that was kind of creepy. True day open. I would probably hold a bearish stance on price here. That mitigation area failed. Oh, I remember this price action. We're within this 4 hour imbalance, and then we generate all these cluster highs, I remember this. I'm familiar with this. $8:30 opens. I think it's the day before FOMC. Oh, this is FOMC. Yeah, so FOMC day. Alright, we have FOMC here. Overall, what does price look like right now? We're within this hourly imbalance right here. We have an imbalance above market price. It looks a little questionable. I want to see which side we manipulate first. I'm looking for this new day opening gap as a target, or maybe somewhere where that we manipulate into. That's what I'm looking for right there. We're alpha 1 hour PD ray. Let's see, we could possibly deliver to this new day opening gap too. And also we have current new day opening gap, new week opening gap to be conscious of. Kind of is a high objective. I want to see this. That's probably more probable. Overall, we have just this massive trend line. So let's see. Do they drop it? I think we manipulate higher first. Okay, they do drop it. Bear flag. Yeah, and now I think we had a bear flag, and then we never took that low. We rebalanced to where this 2-minute imbalance. I wish I could see ES too. $230, we expanded. Alright, fair value gap in, fair value gap out in the new week opening gap. I'm expecting this to get delivered. We don't deliver there. Look at new week opening gap though. And buy side. Perfect fill that. Boom, breakdown. Fair value gap in, fair value gap out. Imbalance. Right there. Sensitive. Next day. Next day. Next day. Hey, appreciate the sub. Hold on, I'm gonna journal this for my FOMC log. Wait, did I already? I think I already backtested this. I think I already have a log for this. Huh, that's funny. I do. I'll be right back. If anyone can count the amount of, alright, I'll be right back, you get a free funded throughout this stream. I'm saying at least 12. Notice how we come back to an area 4-hour fair value. Right there, perfect. And then we likely maybe have a market maker buy model here that could play out. 4-hour fair value. I haven't seen that before. Maybe SMT here. The bad thing about TradingView when I use indicators to backtest is I can't really use ES like I normally do. Okay, we have these. I'm looking at this down close candle though. More so looking at just mean threshold. Should we need to trade into it? Oh, that's 9:30. We 9:30 we open up and we have swept liquidity. We're in mean threshold of that order block. I would expect to see these highs here. And this be a little market maker model. We do have a new day opening gap right below us that we could deliver to. 15-minute fair value gap as well. If we had SMT or something, this would be deep in my conviction. But I want to see these highs. Alright, bro. I swear, my draw on liquidity when I do TradingView is always wrong. But when it's FX replay, it's pretty nice. Did we actually deliver to that? Oh, gorgeous. Yeah, now I'm looking for those for sure. Look at my executions. 100% strike right. 100% strike right on stream. No one's ever seen it before. Look, we delivered to that order block right there. Nice model. Yeah, people would think this is random, but it's new day opening gap. Like I would used to look at mean threshold got didn't get violated there. Oh, this fair value gap didn't hold, but yeah, it did because look at the bodies. But where did price actually go? New day opening gap. New day opening gap. Actually, I kind of like doing these little entries here, but I like it better on FX replay. But I also like using trading view because then I actually see like the stuff that I can use by indicators, like I normally would. Like we're below true day open. Well, now we know that price displaces, and then trading view also like spoils it for you. Like they ruin it. Another time we come back right to new day opening gap. And then we have another market maker buy model here. Measuring gap. There might be a gap here on the 1 minute. But here's breakaway. We consolidate around equilibrium. 75%. We get explosion. Another market maker buy model off this new day opening gap. I think that we're definitely heading to at least this new week opening gap today. I don't know, at least this new day opening gap. That's my draw. That's where we deliver to. Let's see. We have a balanced price range here. Can even refine it to this. Kind of gets respected. Or we can refine it to this. Two PM. Boom. Silver bullets. Damn. Oh, this was NVIDIA earnings. Yeah, this was NVIDIA earnings. I was talking about that. It wasn't. I think I remember NVIDIA like ripping. Yeah, this looks familiar. I remember NVIDIA ripping like 200 points. Yeah. But like, look at where it started from, and look at where the earnings. Well, is this where we stall? Yeah, look. Like I don't know if it's random. Like I feel like new day opening gaps work well with news events and stuff where there's manipulation and there's just like large distribution. The algorithm doesn't know what to use. It uses those new day opening gaps and new week opening gaps. That's what it uses. we have 8 a.m. news. We're just probably coming back down to new day opening gap right there into that volume imbalance. Oh, yeah, I'm looking for this high. %, win rate, back testing on stream. He's insane. Oh my gosh. Beautiful delivery. 9:30. Oh. When 9:30 delivers straight to a new day opening gap, load up them puppies. Just load it up. Hold up. I need to change the song. Sorry. All right, now we're good. Sorry. We back. Look at that delivery. Then 950 macro, we kind of just consolidate. We come back. What do we refer to? Mitigation right there. I mean, let's look at this whole candle. We can just look at the wick. Look at the candle. Offers mitigation. Kind of a little bit tricky there, and then boom. Then we have expansion after we take this low, and after where do we reprice to? New day opening gap. Boom. That is it. This, we didn't have a stop on, but we're still respecting it. I mean, if you took a trade here, put your stop here, you would have got stopped. Low key, I'm gonna just do this. Oh my gosh! Look at the delivery right back to it. It's just undeniable. It's proven, but we gotta fine tune it. Very consolidative here. Well, this is Asia. No kidding. We're consolidating in Asia. But still, like, the very small range in Asia. Pretty small in London so far, honestly. So, this could be a volatile... Wait, what's the news? Powell speaks. Oh, he spoke Sunday. I'm looking for all-time highs. Are we in a silver bullet? If this is 75% of that model, then that looks appetizing. We didn't quite get a standard pullback to that. We'll see. We could see more bearish objectives then. I think we could have another stop hunt. If we have SMT here, I would trust it, but I can't really see that, and we're just delivering right to new day opening gap. I would take it off here. Wow. Why am I getting emotional, bro? That's why I'm not on a live account, bro. But notice how we come down into a deep premium during PM and we deliver right after new day opening gaps. Where we were pricing to? Probably a new day opening gap. And right here, we get displacement. We probably have SMT. I don't think there's any way we don't. And then pull back, order block right there. Kind of wiki in there. Then we break through a new day opening gap. We use that as resistance. We come down to where? Do we have any sell side objectives here other than the new week opening gaps? Down to this down close candle. That was the stop I was looking for. Oh, wait. Oh, 50% of that. And if this is 75% of that model, I mean, I just put the fib over it. I guess this is 75%, but look at that. Wait, where do we stop within here? I know there's a lot on this, but this is 0.5 to 0.75. Oh, that market opened then? Wait, no, that was 9:15. Oh, wait, no, that was 9:30. I think I remember this day. I said that I felt this way in a minute. Institutional or flow entry drill here. Come back down to this new day opening gap. See, like, here you would have think like, oh, rejection block maybe a old like 1 minute gap that we come back down to. But no, we truly come down just to the new day opening gap. Like, there's no denial. I mean, unless there's some significant thing over here. Like, no, we're repricing to new day opening gap. We've come. I want to look at ES here. Oh, let's look at the market right now. Oh. What are we doing? I don't like this. I'm not even gonna look at this. I simply don't know. This is just. We came out. We repriced this imbalance here. This is just accumulation. I'm staying out of this. I do want to see these lows maybe today, but so this can have the market can have this day. This will just be a day where the market can have this day. My mental capital can't. That should be a quote. That should be a quote. The market can have this day. My mental capital can't, or won't, or shouldn't. Where are we at? We're at February 6th, right? Oh yeah, we definitely have SMT at the highs. It's with the overnight 3 a.m. highs. Yeah, so we have SMT here. See, like, if you can see all these things, yeah. SMT at highs, displacement breakdown, boom. Fair value gap, where breaker right there, paired with that, boom. New day opening, new week opening gap, constant encroachment to the tick, to the T of that boy. Well, we originally come down to new day opening gap, then we break through it, then we treat one as resistance there, and then we come back up. No shot. 9:30, new day. Oh my. So use the fact that ES is within the current new day week opening gap as NQ trades into that. Or as we form SMT, ES is a new day opening gap. Where's the low resistance liquidity? Right here. That becomes a nice draw on liquidity there. Breakdown, displacement, fair value gap, boom. That's when it's acceptable to trade before 10 a.m. for me. In my model, probably. Is before 10 a.m. if we have a nice jitter swing, then I can trade that. But if there's no jitter swing, if it's not clear, then bro, don't take it. All right, let me journal this real quick. ES is trading in a new week opening gap in the current new week opening gap as we form in SMT with low resistance signatures at the lows. We break down. We 15-minute SISD. 15-minute SISD. 15-minute SISD. And lower time frame entry. New day opening gaps act as resistance as price heads to the lower objectives. All right, I'm gonna try to make this look as nice as it can, and that's gonna be a little bit hard to do. No. This is gonna be art. Wait, hold up. We kind of use that as resistance. Oh no, I ain't gonna use that as like a. Oh, hey, we get 1 minute chart data. I'm gonna make this bold. Why is it sensitive? Why is it sensitive? Sensitive because we have a inversion right there, balanced price range. We don't expect price to really trade up, and we also have these down to close candles as a distribution block. Market opens right then and there. Let's see if we get any like precision elements here. This is just a retracement. OTE of from the change of state delivery. Where's 950 macro? All the way here, we get a fair value gap entry here. Then we consolidate here. Accumulate, manipulate, distribute. Oh, this could have tripped you up. I mean, technically, right at that 1050 macro, that's where we end up engaging this buy side here. But then, and we get this displacement here. So, yeah, it could have tripped you up. But we have a soft purge on liquidity. Shallow raid. And now here we go off that new day opening gap. And we repriced the high that here. We don't really get any displacement, and the market's not going to reverse. Market cannot reverse from a consolidation. It can only expand. Alright, I think that's good enough for the log there. Wait, was that above true day open? Oh, and it was right above true day open. Oh yeah, that's beautiful. Okay, notice how we displace above true day open here. 8:30 open. Let's look at 8:30 open. 9:30 opens. And now we've liquidated buy side. Notice in the parent dealing range, I don't want to zoom out because then it will give it away. Look, we gotta go blind here, but basically in the parent dealing range, I want to see. I'm bullish there. So I think we could see this fair value gap. These new day opening gaps. Well, that kind of ruined it. I don't know why it does that. But yeah, I'm looking for these lows, low resistance liquidity. Should be an institutional order flow entry drill. Oh my gosh. Yo, my mouse bugging. That's a nice sell model right there. Shouldn't say delivery, fair value gap gets respected there off that order block. Reaccumulation with the inverse, and then we have distribution there. Yeah, like I was saying, I wanted that to be institutional order flow entry drill. We put in equal lows. Wow, we really did we really distribute off that? Yes, gotta be within the new day opening gap. I don't believe it unless yes, it's in a new day opening gap. Oh, it's gotta be that new week opening gap right there. It's gotta be that new week opening gap right there. The blue one. It's gotta be. Maybe not. I mean, I feel like we got expansion before that. Oh, it's gotta be. It's gotta be. No, it's not. I don't know what to say. IRL to Euro, maybe? Yeah, we get a very slow. We never take buy side there. I think we did on ES though. Yeah. She's got to saving them boys, grandma. All right, we'll keep back testing. Overall, all time highs though. I need to get rid of yes. Let's pull up NQ. All time highs, or are we all time highs? That's like this whole year, bro. The whole 2024 is just all time highs, all time highs, all time highs, all time highs. And then we just go lower to just start a new buy model. 945. Volume imbalance right there gets repriced too nicely. Oh, to the tick. Volume imbalance. 15-minute order block. After we swept liquidity at 8:30. And we have liquidity that rests up here. We'll see if we take that. I would assume that we would, but there could be a reason that we don't. Yeah, it looks like we just want to take these highs. Maybe, potentially. No, we get further displacement. And probably just consolidation. Yeah, look at that new day opening gap though. Look at the bodies of that. Like that's a small new day opening gap. But look at the bodies on the 5-minute. Oh, beautifully. Respecting that. That's good to see. But look, 940 engages that. And then we have 950 macro expansion. Let's go to the one. And in this case, true day open acts as resistance here. We come back down. Order block here to liquidate this. Where does market open? Market pushes up, comes down, pushes up, push down. This is a seek and destroy market open profile. Or me personally, I classify this as seek and destroy market open. Seek and destroy Judas. I had a video that I created, but that's just my interpretation. Because we come down, offer buy side, sell side, buy side, and then sell side again into a 15-minute order block, and then displacement. Well, not really displacement, but kind of slow action there. Look at how we reclaim this. Do we? We reclaim the lower one. The imbalanced price range, boom, gets respected right there at 1042. 1050. It's already taken buy side, so we've done what we needed to do here. But yeah, buy side, sell side, buy side, sell side. How could we have traded this though? 950 macro is kind of what I look for. That's a good question. I mean, I guess submit to the higher time frame, honestly. 5-minute volume balance. Very nice. And order block. I found out, I found out that my YouTube streams, for them to get uploaded to YouTube like as a video, which is what I want them to do, so then I can look back on them and I can see them, they have to be under 12 hours. So I'm gonna hop off at like 11 hours and then 50 minutes or something like that, and I'll probably come back on later. I'll probably like take a little break, touch some grass, because I don't do that too much. I just want to start looking at what price did like after the day's over. Honestly, that's my favorite way of backtesting, and that's where I just get at peace with the charts rather than just trying to predict, which I find more peace doing that, so I'm gonna do that. So here we take it sell side and we come back down to this imbalance. Like sure, it's hindsight, but But that hindsight will do you good in the future. Then we have fair value gap in, fair value gap out. You have a balanced price range here on the 5 minute, and then we just get an expansion here. We had 8:30 news. What news do we have? Friday. USBS. I don't even know what that is, honestly. Look at this balanced price range. Oh, if this is console encroachment, that's nice. Not quite, almost. But yeah, we have this inversion, balanced price range. Was there any way to get active before that? 5 minute PD array. 5 minute. Propulsion confirmed. Then we have a fair value gap with an inversion. So sensitive fair value gap right here. And then we have a market structure shift here. Come back, pull back to that imbalance right there. And then we reaccumulate at that 5 minute inversion level, which is a 1 minute inversion as well. What time is this? This is within that 950 macro. Beautiful. And then we just reached buy side. We reached the news highs there. Alright, about to have a new week opening gap. We're at all-time highs. It's kind of where we're at right now too. Kind of in this similar situation. We're just gonna see what happens first, and then where's market open? Market open's down here. Oh. Wait, I did this. I just did this wick here. Negative 1.5. That's where you'd like to see manipulation. Standard deviation projections for manipulation are negative 1.5. For terminus is negative 4. Come down here. We sweep this liquidity. We drop below true day open. Once we do that, at 9:30, price changes its state of delivery here. Technically here. Come back down. We really challenge this wick here. Constant encroachment holds. Then we get above that new week opening gap, and then we reprice right to constant encroachment of that. Displacement. We sweep this low. We gotta have some SMT here. February 12th. It's Monday. Well, Tuesday we get big displacement. Oh, off of CPI, I believe. Oh, wait, ES is a. Why are the wicks? Why are the candles like this? You know. ES is really nice during this. Good expansion. Oh, I remember this kind of. Let's see where CPI distributes from. Some random level. I cheated, bro. I already knew that it was going there. Oh my, dude, the new week opening gaps in the PM session though. I've noticed that they tend to get repriced to a lot. The new day opening gaps, they tend to ping pong between those, especially if they're like this. Supposed to trust back to back. Looks like we have a sell model here. Consolidation around equilibrium. Equilibrium is consequence for that new. Look at how well we distribute within that. I'm raw. Don't mess with me. We're putting that low right at the new week opening gap. That's a protected low. That is a protected low. Where did 930 open? Probably within here. We whipsaw. Double purge Judas here. Double purge quarterly theory S&D or origami Judas swing right here. We come up to buy side, then we deliver sell side, and then that's your Judas. Come back down here. We put in a low. Where do we put in a low? Some random level. Fair I get in, fair I get out. Boom, that's a good buy right there. But where are you taking it off? Recent highs. How many points? hourly imbalance and order blocks right there. Offers fair value. What do we get? 5-minute. Well, first where we open, it looks like we have 8:30 news. We open here, and this is a retracement Judas. A retracement and stop hunt Judas into this BPR. We get displacement. We get the initial push up at 10. Oh, entice people that we're going to go higher. New day opening gap. New day opening gap. Access wall twice. Then fair value gap in. Fair value gap out. There should be a fair value gap probably in the lower time frame. Yeah, right here. Fair value gap in. Fair value gap out. Sell side liquidity taken. That right there is a trade here. We break above new day opening gaps. Active support. Bink. Notice how we generate highs right below that. Boom. New day opening gap right there. I want a deep premium right now. 8:30 distributes lower. I'm also expecting these. Alright. I'm expecting to see these. Alright, we gapped up. So what type of news was this? PPI on a Friday. We have that this week. We have PPI on a Friday. So we have the same type of displacement. Boom. Oh, I didn't even see that. We almost delivered to it. We're consolidating here, so I want to see manipulation into these new day opening gaps. I think I would see another move lower. That was a half day. Oh, my whole account got liquidated. My whole account's gone. My whole account's gone. Look at where. Whew. That is a nice. This is a nice sell model here. Fair value gap in, fair value out. We have a balanced price range. You don't really get a good entry there. it's time to watch another lecture. In my opinion. Hmm. Okay. Long stream today? Yes, sir. I'm planning on doing these for like 12 hours every day. Well, the thing is I want them to be able to upload to YouTube, and for them to be able to upload to YouTube, like as a video, they can't be longer than 12 hours. So like realistically, I would try to go like 16 hours a day or so, around that length, and then I would but then they can't get uploaded to YouTube if they're over 12 hours. Found that out the hard way with my 19-hour stream. But yeah, I'll probably go live like 11 hours every day. Just studying, you know. And I think I'm gonna keep on doing this. I like it. Right now I'm watching a stream from someone from T-Trade's Discord. His name's Kiko. He's pretty good. But hopefully we can learn something out of this.
No worries, brother. I enjoyed.
Bro, have you been sitting in front of it? Yes, sir. I mean, not entirely. I
Good thing to do.
yeah.
Get some more people. So one day, just right. Let me see if I can find a decent day. You wanna really how do you say? You wanna pick between one of two. The two most, I'll say, the best ones to trade, and also the easiest ones to trade, are
Hey, appreciate it.
this pattern, which is the New York reversal. You'll have a run on liquidity, either 8:30 Eastern time or 9:30 Eastern time, and you'll have these swing highs, which are Asia high slash previous high slash London high. I'll stretch that out a bit, and then you get the run up into that liquidity, and then the next one we're going to be focusing on is the London reversal or classic buy day. Let's look like a decent level, like that. This reaccumulation up into close. This profile would look a little bit different. You'd have Asia low here, no, Asia low slash previous day's low. And so after you take out Asia low in this profile, whereas here we're leaving a low resistance liquidity run condition because we have a failure swing, in this profile you're leaving no low resistance liquidity. You're purging the sell stops below Asia low and previous day's low, usually during London. Oops. And then the market trades higher into New York, which in New York you may see this manifest, where you get a retracement down lower and then expansion higher. So using this bit of knowledge, and I think if you check my channel, you should find the templates for this, so you can like there. So these are the templates you want to be focusing on for the profiles. There's your classic buy day, and this is your New York reversal. So using that knowledge, right, we're going to go into this right here. I'm going to delete this quickly. Let's find all-time highs on a daily chart just quickly. Let me clean this up.
Yeah,
So
I've been like that.
here. This is what we're looking for to trade into. And then we're going to go to the hourly chart, and we're going to see right here. So we've got this hourly internal is a potential draw. I think there may have been S&T on that. Let's see, tiny gap right there. So ES trades into a gap, which is seemingly here. That's hourly internal, and we frame our narrative off of that. So we've got this buy side in form of all-time high, and then we've got this lower high. So you've got like a bit of a failure swing type of thing going on here, because you've got this higher high and then the lower high next to it, which means after we trade into internal, you'd like to see an expansion out of it. What you're doing with daily profiles is you're working around internal range to external range normally, but you're identifying if we are moving from internal to external, external to internal, how does that manifest the daily open high low close? And the daily open high low close is essentially going to be your daily profile. So we've identified all-time high as the target.
Yeah, I feel that, but honestly, I'm trying to go to strategy. Oh, got you. Trying to find your go-to strategy? Yeah. I mean, the thing with me is, like, with ICT concepts, it's not just one strategy, you know? The market's not just going to do one thing every single time that just repeats, I mean, all the way it can. Like, I like to... I mean, you can be profitable with whatever system it is. It just takes risk management.
We've got a failure swing here, which formed at 4 a.m. So your intermediate term target would be London highs. And then you're going to go into your 5-minute, and you're just going to look at this chart. So what do we get here? On the lower time frames, let's delete this line. The draw is up here. You've got this high. You've got a lower high right here. So that's your failure swing, this right here. And then we break structure to the downside. And if we take a nice little dealing range of this, let's see if we've got SMT at these lows. That would be the next step. So we're going to pull up ES. Zoom it out a little bit. SMT here, nothing there, which is like not too clean. There's a tiny SMT there, but it's not perfect for the New York reversal. But now what you see is we open, trade up a bit, trade lower throughout the morning, and then at 9 a.m. we set the stage for a reversal. So you're bullish on the day, and we traded lower early in the morning, which means you're expecting that at 9 o'clock or 8:30 we'd reverse and make a run on the buy stops above London high and the all-time high targets. That's how you would use your daily profile in conjunction with the how do you call it? With the internal range to external range ideas, right? We've got the same kind of thing going on here. If I look at the hourly, let's pull up hourly and let's find this. So here's like, okay, this is an hourly order block for one, but we're gonna just take this hourly fair value gap because it's easy to work with and it sort of explains things. So you're just taking out external right here above this buy side, and then the market's looking to put in a retracement into internal and seek the new external range. So that would be up here. Now we're going to go back into our 50-minute and we're going to start framing it lower. So when was this high formed? This high was formed during yesterday's PM session.
Yeah, I would agree. I mean, the longer you're able to stay in the game mentally and with your equity, the bigger of a chance you have to succeed. Like, if you just blow your account within a day or two, you're not going to succeed.
So we're going to call this PM session high. Then we break down lower. This right here forms at 8 p.m. and this here is at 6:45. Let's see 6. So this is Asia high because this is the highest high after our new day open. So we've got Asia high right there. Let me close the window quick because it's raining. You guys might hear that. You've got Asia high right there, and then you see this run up during that London time frame, right? From 2 to 3 essentially is what I go for. This is what I would consider our London high. So now, the reason why I preach trading the New York session is because if you're trading any of the sessions before it, you don't have this information. Our narrative is we're bullish. We're expecting a move into internal range to go back out to external. London high is lower than Asia high, and Asia high is lower than previous day's PM session high, or maybe even previous day's high, if I'm not mistaken. So that's previous day's high as well. And so after we trade into this hourly internal, which we do right here, you're going to be looking for a stop hunt, right? Why are we looking for a stop hunt? Because you want this high resistance to be created. See that? So high resistance is created on here. This is your manipulation. Let's get like a little red box. That's the manipulation of that range. And then you're looking for a run higher into these buy stops. Right here, you've got a low risk buy. Let's do this like that. And then it trades up, breaks above these highs. There's another gap right there, rebalances that, trades higher. So you're using you're using internal range to external range. This is a New York reversal profile, right? Trade lower early morning, 8 to 9, we're setting stage for a reversal, and then we just rip higher all day. You're using the internal range to external to identify these profiles and work with them. And the good thing about these is that they tell you time-based when you're supposed to get involved, right? You're going to find that on a New York reversal, the reversal always happens either 8:30 or 9:30. Well, the manipulation. So after the manipulation happens, let's say at like 8:30, you can expect 9:30 to go higher. Or if it happens at 9:30, you can expect 10 a.m. to go higher. So they're giving you time-based approaches on when the market is likely to do something or leave a level sponsorship with speed towards your target. And then like to put the icing on the cake, let's find, so here's all-time high, right? If you look at this daily candle, we closed strongly above all-time high. If it were to do something like this, where it takes all-time high and then closes below it, you'd expect the next day to go lower because that's just a sweep. But because we close strongly above it, we're expecting the next day to expand higher. So if we go to the 15-minute chart, we close above all-time high right here. We've got that bank holiday, nothing much happens. We retest it, trade higher. We get SMT at the lows here during non-farm payroll on Friday. Let's make this like that. And then off that SMT, we expand higher again. Does that make sense? I always had a doubt if I trade higher time frame, like 4 hour, 1 hour, should I really care about time zones? What do you mean time? Anything that's in New York session. Everything that happens from 9:30 till 4 p.m. Eastern time, like that regular trading hours time frame, that's like the, I'd say the real price action. That's what's really happening in the market. The rest is just sort of minimal input or value or importance. So I think if you're trading the 4 hour, you shouldn't really care much about that because you're smashing a session each candle. But anything below, you definitely want to be focusing on the New York hours. Can talk about, oh wait, sorry. Can you explain how you know which SMTs are to be striking and which are there for a short while on chain validated? Okay, I hate to say this. Like, okay, for instance, hold is if we're in an uptrend and we have SMT on highs like this, but the market is bullish. Like you're not expecting a clear reversal and you get SMT here, that's just a fraud essentially, you know? The same thing on the downside. If you're breaking, because experience. Like how or this one's not gonna hold. It's like there's actually like a lot of experience behind it that I couldn't put on a plate for you to, you know, just write in your notes and make sense of. But I'd always just take that example of if you're in an underlying bullish trend that all of these bullish SMTs are likely to fail. They're going to be short-lived and they're going to get evened out again. Another one that I don't like is these equal low SMTs because to me that's like clean. Looking at going into next week is this right here. If you see a shallow sweep like that, you see how we just pinched one tick below this low? I don't believe this whatsoever. To me, this is no SMT because shallow runs like this, it's all it's doing is creating more sell side interest. So there's a sell side liquidity pool right below here, based on these two equal lows here, because let's say the more inexperienced of traders will see this as support level. When we come down and pinch just below it like that, I don't consider that to be an SMT that's likely to hold, because this is just proving the point that this is a sensitive level and they're going to want to generate more sell stops below this low for their long positions. Now, ES tried to come down and poke it at 10. If it wasn't on farm payroll and the market was running cleanly as it usually would, I think we would see a significant run below these lows to about right there. Maybe this looks even nicer. And then it would expand higher. NASDAQ obviously leading because NASDAQ was stronger. But this little pinch, to me, it means nothing. So as I said as well, for next week, I'm looking at these two lows. I'm looking at this for a draw still. I don't consider this to have taken out any liquidity below there. Now there's massive sell side interest below this range. We've just expanded out of it, so we're looking to come back down. Yes, it's being reported. Yeah, exactly. Like those ticks just below or just above, I'll just count those as equal lows. You don't want to put much faith in that, because this is how they generate willing or unwilling liquidity, right? Let's say the market's trending down like this. They'll punch her up like that, and then they'll break her lower again. And let's say they'll leave the valuation point, like some sort of buy-side imbalance. They'll ignore it, like right here. They'll punch the market higher to leave equal highs, because this generates more buy-side liquidity. And then once they do this, then they're going to run her higher. 1 second, I'll be right back. Got something in my throat. One-shot, one trader. You want an OSOC for this week? And okay, I have to apologize for this because I did say I would call out OSOC trades every week, but this here is your OSOC. I think, wait, actually, I didn't give a retest here, but this right here, that's your one-shot, one kill setup. And I can explain to you why. When you're trading one-shot, one kill, you're looking for the weekly reversal into weekly objective, right? And so this bit of price action, Monday we traded lower, and we made an SMT on previous week's low with ES. So that's like a big deal because we've SMT'd these lows, we're expecting expansion. If you get manipulation on Monday, this right here, what you're getting on Tuesday is reversal. So I'll condition the market in that sense. We also had this, what was this here? Friday consolidation, Monday continuation. Because Thursday we had accumulation, manipulation, distribution, consolidation, or reaccumulation, redistribution. And then you can like condition the market based on what it's done the prior days to figure out your bias for the next days. So this play right here was absolutely gorgeous. This was beautiful. And I did trade Tuesday, but I did like I think a counter trade or some shit, some turtle soup short garbage. I don't know, must have been this here. But right here is your manipulation. If Monday manipulates, here's the original consolidation. Monday manipulates, Tuesday is going to distribute. And if it's distributing, you want to be taking this order block, right? If you mark out this OB from body high to low, we just take the mean threshold of it, you're going to see how beautiful this thing was. So there's that order block. And then if you want to get even lower into your time frames, you would like hold this trade for 1, 2, maybe 3 days essentially, because it's an OSOC, right? We trade into mean threshold of the order block. You've got a short-term low here, SDL. Let me turn off this magnet 1 second. Like that. Then there's a formation of an intermediate term low, and then we form this buy-side imbalance. And this is a cue for you to get onside should this buy-side imbalance be respected, because this here creates a short-term low, intermediate term low since it's rebalanced it, but for the sake of cleanliness, I want you to look at this pattern. Short-term low, intermediate term low, short-term low. What does this mean? This means the market came down, put in a low, put in a lower low, put in a higher low, and then did this. Okay, this right here, if you looked at it, so this is the market structure you're seeing here, but what it looks like when you have candles is like this, right? Let's do that. Let's make you black. Like this. What this, identifying higher low, closed higher, low short-term low. This is the 15-minute chart. If you look at it on the hourly, what we have is a low, a lower low, and then a higher low on the hourly, creating this swing point. And then that swing point is what expands price higher. So this is what you're actually marking out without noticing it on your lower time frame charts. And when you see that signature forming, that's where you get your sort of OSOC setups. And then if I was to swing trade this, obviously, you'd be looking for, check this out, we mark out range low to high right here. Let's put the magnet back on. The order block's opening price is right there at that 19978.25 level. It's in a premium, right? Since we don't want to buy a premium and we don't want to sell a discount, you're using the mean threshold. Why are we using the mean threshold?
Yeah, it is.
So 6.5 down, mean threshold is a discount. So you want to be buying the mean threshold, and if you're trading OSOC, you're looking for the weekly objective, which is obviously all-time high this week around. And then you'd be looking for this here. You're going to put your entry at the mean threshold. You'd put your stop at this low, because this low is protected, because it took out previous week's low, so we're not expecting this to get traded back to, and you'd be targeting all-time high. So 430 point run, that's like what the whole game is behind OSOC. For a 120 point stop, obviously, but it works beautifully and it's a lot of fun. And when you have a good understanding of this and then you trade intraday, that's what's going to really make you a monster, because you don't need to be on the hourly time frame trading it, you know. But if you understand OSOC and you understand how the weekly candle develops, what the weekly objectives are and stuff like that, you can hop into your lower time frames and absolutely murder the market. Can you wait? Let me see what I missed. Can I talk about the monthly profile now that the first week is closed? Honestly, I'm in a bit of a sticky situation myself. I don't know where we're going this month. Anything points higher right now. We just came off of this order block, so the narrative maintains that we want to trade higher, but it seems like it wouldn't be bad to get some sell side delivery, and July would be a decent month for it. So I'm still conflicted. I'm not going to try and
I think in August.
too far ahead.
I think in August.
This weekly internal, and we've created this swing low, low, lower low, higher low. So if you're going off of just that formation and the fact that we closed above this, you can already expect that next week is going to close above here. It's just going to be bullish. So it's a tricky spot to be in. I wouldn't try and predict too far ahead. We wait till Monday comes around, and then we take it day by day, because that's what's very probable to work with. Do I use any indicators? I use these two. I use the economic calendar one. I don't know why it's not working. It'll just put the economic calendar down here, so I don't have to go to FX replay. And then I use one for the times. Just this one. It just shows me 8:30 and midnight. That's the only ones I use. The most useful ones in my opinion. So 8:30 opening price, midnight opening price. I have to just run up real quick because I've missed a lot of things, it seems like. How do you integrate weekly profiles into your decision making? Because as the week progresses, I'm trying to identify what the weekly profile is. And the weekly profile is giving me a conviction and a bias based on a higher time frame premise later. Do you integrate weekly profiles into your decision making? Because as the week progresses, I'm trying to identify what the weekly profile is. And the weekly profile is giving me a conviction and a bias based on a higher time frame premise. Later on in the week. So that means if I know the weekly profile is Tuesday low of the week, I'm going to long every single day until Friday if we may put in a retracement by Friday afternoon, you know? So that gives me rock solid bias for 3 days in a row where I know I can just keep buying because the weekly candle demands that we move higher. It's not because my 1 minute SMT on the low says we're going to move higher, you know? But then you start to lose these smaller time frame confluences and these smaller time frame signatures, and you get really massive runs and a lot of expansion moves rather than trying to scalp against a trend or sort of dipping around. And I can only recommend it, I say it every single time when I get on a call, weekly profiles and daily profiles are game changers. There's a lot of people are always looking for that like next shiny object. I'm telling you, this is the shiny object. This is the most powerful thing you can probably have if you want to formulate strong bias. I haven't missed on bias in ages probably. Identifying where the daily candle is likely to go has become the most easy part of the day. And that means a lot because if you're trading and your entry technique is fine, then you can just absolutely exploit the market with this understanding. So that's the only thing that needs to be corrected on. I think everyone should have a good understanding of daily, weekly profiles, understand OSOC, and understand open high low flows. Session is being recorded. It'll be recorded and uploaded to that weird YouTube channel. How do you know when to exit position? When my take profit hits. When it hits, then I get out. That's it. Is SMT time based, or do we look for SMT at certain time? Okay, SMT is not necessarily time based. It can form anytime, but if I see an SMT that forms at specific times of day, I'll put way more importance on it. So for me, everything that happens starting 9:30 forward is 10 times more significant than what's happened in the day. So SMTs that form during the regular trading hours are much more important to me. I put a lot more value on them, and they bear much more strength in the daily movement, so to say. And another one that I'm very, very, let's say, fond of is that 9:50 to 10:10 time window, right? Any SMTs that we get during that time window is a cue for me to get onside and take my model, because you're looking at something that happens pre 10 a.m. candle opening, and you're expecting large ranges off of that candle. And so when you can position yourself in the manipulation of that with that SMT that forms, you got yourself a pretty decent day going. And yes, at key levels, of course. Can you talk about the monthly? Okay, that's done. Yeah, the SMT at the previous week's low is what? Like, as soon as we made that SMT on Monday and Tuesday traded higher, you could have just been bullish every single day. You could have just bought every single day without thinking twice about it. I think that would have been the best way to go about it. If there are multiple fair value gaps, I take the one at 0.5. Always the one at 0.5. So if we're looking at, let me see if I can find. Okay. We take, for instance, this leg, swing low to high. I don't care if it comes deeper, but I'm always taking the one closest to the middle. So this would be the buy-side imbalance that I take.
Whoa.
In any situation, I'm always taking the one near the middle. It sort of worked as an inversion level, which is very interesting looking down hindsight. But I don't care about the ones below that. I'm not trying to look for a breakaway gap and miss my trade because I'm being greedy. I'll always take the one at 0.5. And this is the one that you're expecting to hold or fold, right? If this one doesn't hold, then your chances are you might be offside. But if it rips from there, then you're on a good note. AC riding the dick. Can I do a top-down analysis on MMXM? What does that mean? Yeah, you want me to explain the entire thing? Or what are we talking about? I don't trade the Forex markets or any other markets except for futures. I can look at Euro, but I'm not fond of giving it. I was looking for higher prices on dollar if it could take out these lows and then move up. Right now I'm just seeing there's a gap right here. If it does, given Euro, you're probably going to want to be looking for lower prices. It's a disgusting range. I don't know why the fuck. The SMT on it, still looking for. And then we've got April sell side resting there. So this is what I would be looking for going forward. And if that's the case, if we get another up candle here, I'd want to see, do we break down below this low? This low is the high of this candle. But I want to see, do we respect it or do we close strong through it and expand through it? And if it does expand through it, then we'd look at the consequent encroachment of this gap next, which this area is technically quite balanced because we've had buy side delivery, sell side delivery, and then new buy side delivery here inside this wick. Yeah, I did these in December. It's been a while, but I'm starting to do them more recently now. So I don't trade gold now. Touching your point on weekly profile, was TGIF invalidated because of double candle Thursday Friday? Okay, I'll tell you why TGIF was invalidated. And this is, I'll be honest with you, I was looking for it myself. I was looking for TGIF myself, but then I did some research, and the reason it was invalidated is because we had that missing day. If you look at this here's Wednesday, and this here's Friday. So Thursday wasn't counted, and so in order to make up for the short week, I think they just had to push her higher one more time, which is why we didn't get that TGIF. I was looking for it myself. It seemed plausible at this stage, but I would have also.
I don't like looking for TGIF, honestly. I think TGIF gets people so caught up and so tripped up because like it's really about, are we respecting higher time PDA rate? And even then, like, I mean, let's look at the chart. Whole last week. This is not the chart I want to be on. I want to be on this one. Yeah. I got it up here. If we look at last week, why do we not have TGIF? Well, we had bullish signatures the whole week. and Friday. Actually, Friday after we took buy side liquidity. Yeah, we just simply didn't want to take buy side liquidity. We just didn't want to retrace lower. We formed SMT. So honestly, TGIF isn't really even my thought until there's a possible bear setup. Then I maybe I'll look like 20-30% of the range. That's me personally.
Because non-farm payroll swept the sell side first. We knew that bad things were coming. Danny is studying Osaka. Very nice. My account size is very small. I only have 1K buffer. Can you explain how you trade in small time frame? How would I trade in small time frame? Like with a small account, what's the question? I mean, I would generally just look for small runs. I wouldn't try and catch a lines portion of the day. Like for instance, okay, if you see, let me see if I can find something here. Let me see. I still didn't. Not much too clean here. But like if you're looking for a trade, there was that lunch. There's the lunch run we had. There's the lunch run. So like if you're looking for this, for instance, just buy side above here. These are relative, or these are equal highs really. You've got an SMT at these lows. If I was trading a lower time frame here, notice this volume imbalance. Draw that out in time. I'd look for something like this. Look for a scalp. Maybe go long at the volume imbalance high. Put your stop on that low, and look for the highs above here. Maybe even get out at 2R. But just like these small directional runs. The higher time frame is bullish, and the SMT at the lows means that we're looking for a new expansion higher. This would be a nice trade, I think. Right off that volume imbalance. Alternatively, you could use this little volume imbalance right here. And if you wanted to trade it a bit more aggressively, let's say you're using this volume imbalance, you'd go long inside of it, and you'd put your stop on this previous volume imbalance as low, and you'd only look for 2R. So you're not trying to get this target, you're only trying to get involved in the move towards that target. You could also target this premium sell side imbalance as a decent draw. That would also be a nice little scalp that you can take. The thing with scalping is that you got to be quick and you got to be content. Because a lot of people like to overstay their welcome. They'll be in a quote-unquote scalp trade for 45 minutes and it gets sour. Use the daily profile to show an example of a failed setup and why it failed using the daily profile. I don't have one off the top of my head, and it might make things difficult, but actually, okay, I can find one. I know where one is. But it's like, it didn't really fail, it just sort of failed in its delivery, which is, you're there. Look at this. This here was supposed to be a New York reversal, but you see how we got this absolute mess during the New York session? If the market sets the reversal at 0.5 of the range on a New York reversal day, then it's likely to consolidate and continue the move in the PM session. Right there is 1 p.m. That's when we leave this range. So this was a New York reversal profile, but if you look at this, we opened at 9:30, expanded, and it failed to run out the highs, and then it just went into this choppiness and took out everyone that was waiting to get onside for the longs. Eventually it did hit the target, but I would consider this failed in the sense that it didn't do what it was supposed to do when it was supposed to do it. That makes sense. Here we've got another example. When was this? No, not here either. Maybe it was the day after. No, never mind. They went up pretty well. Yeah, so
what day was that?
Shitty little day. Not much luck in this day. Do I have bullish S&T on the weekend between yes and no? Yes, we do. You use Valga Frontier or do you use order blocks? I use order blocks mostly. I don't use any gap. I don't use.
Friday the 14th.
A general view means after retracement you're bearish on DXY basically. I'm not bearish on DXY. I'm bullish regardless. What I'm wanting to see is, do we retrace to that sell side imbalance at, what was that level? Do we retrace to the sell side imbalance at 105.628? And if we do we respect it or do we break above it? So I have no bias off of here. My level was tagged and now I'm just seeing when this retracement happens, where does she decide to move from here? Does she decide to break up higher or does she decide to move lower? And that would essentially formulate my bias, you know. How long did it take to get to this level of market understanding? 7,000 years. No, actually 6,089. Wasn't that bad. Sorry. TGIF will probably play out on Monday. Funny enough, maybe, yeah. That sounds weird, but maybe. Only because we've had 3 days of expansion, and we'd expect a retracement or a consolidation on Monday. So if we're getting a retracement, maybe we'd get the retracement back into the range. Xaviso, it's a very big topic if I go around MMXM, but what I can do for you is I can... I have an MMXM for Dummies guide that I'm working on right now. I can send you some of the slides from it. Just a second. Fucking cat wants to get into my bag. I can send you some of the slides for it, and that should help you with your understanding a little bit. I'll put it in this chat in like any second. I just can't open it because it's in here. Just started learning turtle soup. Perfect. So that's like literally that perfect turtle soup trade that you took. You had the SMT on the lows, buy that low, and up to the highs. And obviously that low forms inside the old imbalance, which is beautiful. I like it. I have a YouTube channel, but I don't do YouTube videos. I'd like to remind you all again, the only reason we have the channel is to put the streams there. I'm not going to be doing any education videos or YouTube videos or stuff like that. That's not my thing. how do you frame your ideas using the approach of X happens, Y happens? It's essentially working with price cycles. So let's see. You have 4 segments of price. You've got consolidation, then you've got expansion, then you have retracement, and then you have reversal. So consolidation is the origin of the move. Expansion is what defines the dealing range, like this. Retracement is a retracement into the dealing range, and the reversal is a continuation of the initial expansion, which you can measure with your standard deviations when we get to that level, right? So I'm looking at price in this sort of manner. Let's mark you out red like this. I'm looking at price in this manner. So let's say, if we look at it right here, we've got consolidation right there. We've got this accumulation range. Then you've got an expansion outside of the range right there. But then instead of putting in a retracement, we put in a reversal. So if we put in a reversal, wait, let's make you blue so you guys understand. Consolidation into expansion, then we get a reversal up here. And now from this reversal, we've got our dealing range. So if I take swing low to high right here, you'd look for a discount of that range for retracement back into. If I go into the 5-minute maybe, let's say this is your dealing range. From there to this high, retracement into discount, came close right there, and then expansion back out of it. So then if we look at the 15-minute chart again, we can consider that in this leg, we got a retracement down into here, right? After we made this high, we came back down into there, and then we made a new expansion higher. So then we're expanding up again. And so if you look at this on the daily chart, then again, let's say, actually on the hourly chart, let's just look at it like this. Right here we've got, and this is how I've been conditioning the market since ever essentially. You've got a consolidation right here, and then you get an expansion, and an expansion always goes out of the consolidation the way it came. So we expanded into here from the upside, we expanded up. So we're going to expand up again. That's your expansion move. Then you get a reversal out of the move, which is this here. And now you've got one of two choices. From a reversal, we can either consolidate and then continue the move, or retrace. Now we didn't get a retracement here, we got new consolidation, which is this sort of ugly little duckling here. And now you've got one of two choices. From a reversal, we can either consolidate and then continue the move, or retrace.
From a reversal.
Move, then you get a reversal out of the move, which is this here. And now you've got one of two choices. From a reversal, we can either consolidate and then continue the move, or retrace. Now we didn't get a retracement. Here we got new consolidation, which is this sort of ugly little duckling that we have down here. So consolidation, and then from a consolidation we can only get a continuation. So we get re-expansion into the lows down here, and then we can frame this again. We have SMT at the lows down here. So from here we form a reversal, which is out of the move, which is this here. And now you've got one of two choices. From a reversal we can either consolidate and then continue the move, or retrace. Now we didn't get a retracement here, we got new consolidation, which is this sort of ugly little duckling that we have down here. So consolidation, and then from a consolidation we can only get a continuation. So we get re-expansion into the lows down here, and then we can frame this again. We have SMT at the lows down here. So from here we form a reversal. I'm going to make this orange real quick so we don't get too confused. Reversal, which means this is our new dealing range. We're looking for a discount, so the retracement happens into the discount of this dealing range, and then we get a new reversal for higher highs. So from here up to here, that's our new expansion. And you're just working the market like this, right? You're looking consolidation, manipulate, distribute, consolidate, distribution, reversal, retracement, reversal, and you keep working your way around it in this manner. You've got the same sort of thing happening here. We've got this expansion lower, then we've got this minor consolidation right here. I'll mark that green.
Then expansion.
Then we expand.
Then we reverse. Then we retrace. Then we expand.
Out of the consolidation. That's our manipulation down there. And then we make new highs, which means this is the expansion higher. So what does this create? Your dealing range, right? If you've got this low to new high, that's your dealing range. You're going to take the high and the low, retracement into discount, which is this bit of price action was all retracement, and then you get a new expansion out of there into new highs. That's your re-expansion. We can even go so far as to cut it off here and make a new example of this right here, which you've got a small consolidation, and then you get a, well, that's a minor expansion out, back lower, and then re-expansion higher, like so. So you're using the price cycles actively to condition how the market is likely to move, and you can really do this non-stop. And the hourly is beautiful for it because you're getting a good idea of what the daily candle wants to do. I know you told me don't trade London, but if you were to, you have 4 segments of price. You've got consolidation, then you've got expansion, then you have retracement, and then you have reversal. So consolidation.
I'm doing this on my chart.
Consolidation is the origin of the move. Expansion is what defines the dealing range, like this. Retracement is a retracement into the dealing range, and the reversal is a continuation of the initial expansion, which you can measure with your standard deviations when we get to that level. Is a retracement into the dealing range, and the reversal is a continuation of the initial expansion, which you can measure with your standard deviations when we get to that level, right? So I'm looking at price in this sort of manner. Let's mark you out red like this. I'm looking at price in this manner. So let's say, if we look at it right here, we've got consolidation right there. We've got this accumulation range. Then you've got an expansion outside of the range right there. But then instead of putting in a retracement, we put in a reversal. So if we put in a reversal, wait, let's make you blue so you guys understand. Consolidation into expansion, then we get a reversal up here. And now from this reversal, we've got our dealing range. So if I take swing low to high right here, you'd look for a discount of that range for retracement back into. If I go into the 5-minute maybe, let's say this is your dealing range. From there to this high, retracement into discount, came close right there, and then expansion back out of it. So then if we look at the 15-minute chart again, we can consider that in this leg, we got a retracement down into here, right? After we made this high, we came back down into there, and then we made a new expansion higher. So then we're expanding up again. And so if you look at this on the daily chart then again, let's say, actually on the hourly chart, let's just look at it like this. Right here we've got, and this is how I've been conditioning the market since ever essentially. You've got a consolidation right here, and then you get an expansion, and an expansion always goes out of the consolidation the way it came. So we expanded into here from the upside, we expanded up. So we're going to expand up again. That's your expansion move. Then you get a reversal out of the move, which is this here. And now you've got one of two choices. From a reversal, we can either consolidate and then continue the move, or we retrace. Now we didn't get a retracement here, we got new consolidation, which is this sort of ugly little duckling that we have down here. So consolidation, and then from consolidation we can only get a continuation. So we get re-expansion into the lows down here. And then we can frame this again. We have SMT at the lows down here. So from here we form a reversal. I'm going to make this orange real quick so we don't get too confused. Reversal, which means this is our new dealing range. We're looking for a discount. So the retracement happens into the discount of this dealing range, and then we get a new reversal for higher highs. So from here up to here, that's our new expansion. And you're just working the market like this, right? You're looking consolidation, manipulate, distribute, consolidate, distribution, reversal, retracement, reversal, and you keep working your way around it in this manner. You've got the same sort of thing happening here. We've got this expansion lower, then we've got this minor consolidation right here. I'll mark that green. Then we expand out of the consolidation. That's your manipulation down there. And then we make new highs, which means this is the expansion higher. So what does this create? Your dealing range, right? If you've got this low to new high, that's your dealing range. You're going to take the high and the low, retracement into discount, which is this bit of price action was all retracement, and then you get a new expansion out of there into new highs. That's your re-expansion. We can even go so far as to cut it off here and make a new example of this right here, which you've got a small consolidation, and then you get that's a minor expansion out, back lower, and then re-expansion higher, like so. So using the price cycles actively to condition how the market is likely to move, and you can really do this non-stop. And the hourly is beautiful for it because you're getting a good idea of what the daily candle wants to do. I know you told me don't trade London, but if you were to with this approach work, it's a model of greater length super channel below. And then trade continuation, fast swoops, inflation of 8.560. This usually happens in consolidation. Yeah, you can trade it. The only problem is, as you said, it happens in consolidation profile, which means that if it's a consolidation profile, you may have to be cautious. If it's a buy day, which on a buy day you'd see Asia high and low taken as well, then you're in a good spot. An even easier model that I could give you is you're looking for consolidation profile, you may have to be cautious. If it's a buy day, which on a buy day you'd see Asia high and low taken as well, then you're in a good spot. An even easier model that I could give you is you're looking for those Asia lows essentially, or those Asia highs, and then you're looking for a change in the state of delivery after manipulation leg forms on the 5-minute, and you're just gonna target the opposing range. That would be a really nice model. Or you'd see Asia high and low taken as well. Then you're in a good spot. An even easier model that I could give you is you're looking for those Asia lows essentially, or those Asia highs, and then you're looking for a change in the state of delivery after manipulation forms on the 5-minute, and you're just gonna target the opposing range. And that would be a really nice model. That's something I used to trade on Forex way back, but I don't touch those shitty instruments anymore. After reaction off a high probability order block.
Whoa.
Whoa. Not where do you look later. If we expand away from a high probability order block, I'm looking for lower time frame order blocks to get involved. So I'm looking for order blocks on the 5 or the 15-minute to buy inside of the trend. I'm not waiting for a deep discount because chances are that I won't get it. We have daylight savings shift. We add 1 hour. It's all the same. Don't worry about it. We're running perfectly right now. You don't need to change anything. As long as your time is set to New York, you'll be fine. The link for the YouTube is somewhere in this chat, and you can also find it in my reviews channel. I've got it posted there. How would you know when an MXM is activated? Okay, your every market maker model begins in a consolidation, and you can essentially because this is the origin of the move, this consolidation, because what it does is it creates buy side liquidity and sell side liquidity. As such, when do you know that this is active? When you get an expansion away from the middle. So the market's in a range inside here, like this. And then once you get an expansion away from equilibrium, that means we're in a buy model. You'd expect a retest of the original consolidation, and we've taken out the buy stops above this high. Let me mark that up. I wish I could go into this topic, but it's very, very deep, and I don't have all too much time today. So you're returning to the original consolidation, expanding higher, another stage of accumulation, new highs, like this. Smart money reversal, breaks down, like that, trades lower, and probes the sell side liquidity that we left at the original consolidation low. So you're going to want to look for the expansion away from consolidation from the level of equilibrium. You're going to look for the level of equilibrium of a consolidation. See if I can find that on an actual chart. I'll look for it in a second, but you've got this consolidation, expansion away from the middle. That means we're likely to break out into one direction or the other. And then this right here would be your higher time frame POI, where we look to reverse off of to trade back down into the sell stops below this range. If I could give you a hint, if you want to improve your trading massively, you ignore all of this. You ignore all of this until we get this POI, because trying to trade this side of the curve is very difficult. It's difficult because you don't know, well, okay, you can know where it's likely to go to, and you can know if it's likely to hold, but you're trading with less information, and you're trading a side of the curve that you're not sure if it's, the high probability setups are there essentially. After you get that reversal up here at the highs, you know exactly where the drawn liquidity is. It's the sell stops below here. You've got all of these inversion levels from this side of the curve to support you, and if you're just trading this part, you're really looking at this, and this is difficult. It's difficult because you don't have the structure. Whereas if you're looking at this, you have all of the structure to support your idea. You know exactly where you're looking to go. You have your POI reached already and respected, so you know that this is valid, and you can follow the trend, essentially. Just delete all of these. Keep the charts clean. Have another look. Usually 12:30 p.m. my time is the open, so if there's daylight saving shift to add 1 hour and mark 1:30 p.m. London open. It's the same time. Just keep it on New York. And it can't be 12:30 because London open is at 3 a.m. EST. So it should be on the... Actually, Garrett, I'm not even using a VPN because I'm in Germany. I'm fucking going crazy right now. Is it fair to say that London should create the pivot? Yes, it is very fair to say that. That's exactly the thing. Decent little sell model that originates. See? Fun part, right? And so, if you're looking at this in an MMXM sort of lens, you've got that accumulation, manipulation, distribution. In this case, we run out buy stops above, break below this, and then we retest the original consolidation here and break lower, and you'd expect to move higher after. Let me pull something up for that. Let's make it quick. Where are we? There. There you go. Let's get this here, put it in this chat, and let's get the other one, put it in this chat. Where is it? There you go. You can use this, and I'll be putting all of this together when I have the rest of the there you go. The other one. Put it in this chat. Where is it? There you go. You can use this, and I'll be putting all of this together when I have the rest of the pages done. Do you pay attention to regular trading hours? Yeah. Yes, sometimes. Sometimes I do. Did I trade non-farm payroll Friday? No, I did not. And if I would have traded it, I would have likely been wrong because I was looking for lower prices. I had to leave. I had things to do Friday, so I was completely gone. I didn't.
Check GU. I would avoid touching GU. I'm not gonna lie. I would kind of avoid touching Euro and GU, honestly, because Euro I wanted to see expansion. I mean, actually, it wouldn't be bad to touch it tomorrow, but I don't ever trade Forex, and I want to see quick, snappy expansion away from this mitigation, which it still isn't invalid. But I would want to see snappy expansion tomorrow because we just had immediate rebalance into this mitigation. This should cause bullish sentiment, and if we have a bearish dollar, but overall, what we're just within a consolidation, and I don't trade Forex, but if we're looking for price action signatures, actually, let's see what is mean threshold of this. Oh, you gotta be careful. Because dollar could potentially reverse here. This could just be a retracement. Overall, I'm kind of lost on dollar. I'm just gonna use this as a case study, and I guess we'll see what happens when it's done. But we have come back down to this breaker mean threshold, and that's pretty much my last line of defense here on dollar. So if we want dollar expansion, we'll see a euro decline. But I would like to see euro take this high here. We'll see though. I kind of want to like actually analyze it.
Since we're at all-time highs, what would give you confirmation when it goes from high time to low? It's very, very difficult. I don't want to fight this trend at all. But if I was looking for lower prices, I'd need a daily change in state of delivery. Meaning what? I'd need us to run out buy stops on the daily chart and close below that up-closed candle to create an order block on the daily. Then I'd be willing to look for sell-side delivery a bit longer term.
Yeah, that's true.
You'll find a lot of market maker sell models on the 15, on the hourly, on the 4 hour. That's all part of the higher time frame uptrend. But long-term type of things, it's very sketchy right now. If it were up to me, I just want to press buy until the year ends. I don't want to stop that because it's an election year and
not until August.
6,000 on ES before the year ends. Pretty sure of that, and it's gonna go ape shit from here on out essentially because we're in the middle of the year. So I'm expecting a lot of movement to manifest. How you have achieved this high quality precision tech scale in 1 minute time frame? Yes, too noisy to trade. I think the 1 minute can be noisy. I don't think that it is noisy. And the problem is that people think that you look at the 1 minute and this is your only chart and you got to navigate this. But that's not what's happening. When I trade the 1 minute, what people don't see is that I've got, oh my god, where are my charts? Did they change the side? And then I've got, they updated. I'm actually, if you get too caught up in this time frame and you try to trade this, you're going to get completely destroyed. You're going to get chopped up. And that's why the 1 minute has such a bad rep, because people who suck at trading, they try to trade it, and then they're like, oh, I can't just trade the 1 minute without, looking at higher time frames, so it must be really, really bad. But those guys are just nerds. So if you want to trade this, you can trade it. It's a lot of fun. It's difficult. It's exciting, and it's very, very good if you want to get strong risk reward, like sort of things going on. If you're looking for setups in difficult days, you can use the 1 minute, but you can never let go of watching your higher time frames because that's your map. Other than that, you're really stepping in the dark. Would you say that solitude is a good approach to improve one's psychology? I have to be honest with you. I know what solitude, like quote unquote, means, but I'm also sort of tripping. Solitude is like, how do you say? When you're like just alone. Does that sound right? Solitude is like being alone, being. Who asked the question again? In my solitude. Slammed. Is that right? Does that sound right? So solitude is like loneliness, being alone, being on yourself. Are you asking me if that's a good approach to trading? That's a definition. Okay. I'd say yes and no. I'll say yes because I think if you want to improve your trading, keep it private. But I don't think that withdrawing from people in society is necessarily beneficial for your trading, because the phase you're in now, where you're studying, is where you think that you need to spend all of your time with the charts and no time with anyone else. And I've done that. I've been there. So it's very, very good if you want to be studying. But when the time comes where you actually want to trade and like get results, you want to be living normally. You want to spend the least amount of time as you can in front of the charts and the most amount of time as you can
That's
doing any
facts.
other thing. Like I could give you an example. Last week was a trading week, quote unquote, for me. I managed to trade one day out of the what was it, 4 days that I was willing to trade, and then
That's kind of that like studying. Kind of want to be alone and then just study, study, study. That's kind of what I'm doing right now. Pretty much just documenting it. And then like when you actually want to trade, when I get to the point when I want to trade, I probably won't be studying as much. I'll probably be spending more time doing other things, you know. But for now, we're grinding until we can
and 2 days
hopefully
I missed
work
completely.
until I can work my way up.
And Friday I watched and then left because I had other plans to take care of. But what happens is that when I'm trading, I'm more focused. I'm in better mood. I have better confidence and the capital needed because I'm not forcing a lot of trades. So I'm really selective with my setups and filling my time with real life shit. And that'll inevitably be a really good addition for your trading because if all you do is sit around and trade, the scale's going to even out and you're going to stay around break even because you're losing as much as you're winning and you're trading a lot. So it's not really giving you an edge and it's just taking up mental capital and stressing you out while you're trying to perform. So I think keep a circle, but keep what you do private. Don't allow any outside pressure or opinions, and just stick to it. Stick with it. Thoughts on the month of July? It just started. That's all I can say. The month started like last week. I have no fucking clue, man. Okay. Yeah, we can maybe less substitutes. Market. There's a head towards at my ask for that. Tea is much more healthy. My YouTube watch list. Why do you want my YouTube watch list? Video games. Yeah, it's a lot. I used to trade this, but it's too little movement for me nowadays. But this is your 6 a.m. open high low close. You get nice little models around there. Let's go into the 1 minute here, just to prove a point for the dinguses. Check this out. There's your 6 a.m. opening price. You're looking for a run on liquidity. Run out these sell stops over here. Then you're looking for a stop hunt at that POI. There's your stop hunt. We trade back up here. There's a little fair value gap. You can buy that. You're looking for what? Let's say you're looking for the buy stops above this high. And you can trade the 6 a.m. open, low, high, close if you like. The 10 a.m. is the best one. That's giving you the largest ranges. But this is like a decent one if you're nimble and you know what you're doing. I enjoy this sometimes, but I don't trade this anymore because it's just too little movement intraday to be worrying about it. Hello in Dubai with 18 and with Mimai, who is my G. Mimic Nasdaq. I only trade is after. I only trade during 9:30 to 11. That's my kill zone. That's my window. If I don't see my setup form right here, I don't even trade this. I don't look at this, and I don't look at this. This is the only thing I care about. Do I trade Mondays? Okay, technically I don't, but now I do again. I do again only because lately Mondays have been not too horrible, and since I'm using the right ideas with the price cycles and understanding when Monday is likely to consolidate and when Monday is likely to get a decent run, I do trade some Mondays. And non-farm payroll Monday is always a Monday that I'll trade. That's always been the case. If you ever consume content over trading, it will fuck you miserably. Just backtest law. What do you mean? Oh, over consume content. Yeah. 100%. 1000%. The more you study, the less you're accomplishing at some point. Like you should study for sure in the beginning, but at some point you just like some of these guys on Twitter, I respect them, sure, but these guys are already consistent and they're making money and they're still watching all of the videos on ICT's shit and taking all the notes. At some point, you're pushing it, you know. And for most people, that's just going to be a burden rather than a help. Do you consider each time we have a change in state delivery that the higher low of the OB is protected? Yes. I would apply it in the 1 minute, but with a grain of salt. The 1 minute is difficult because you need to know what you're doing and you need to know that, okay, this one is likely to hold not because it's a change in state of delivery, but because it happened after we took out this level, so to say. Like it has to be a higher time frame level. But generally speaking, a change in state of delivery creates a protected low because in order for an order block to create, we need to buy sell stops or sell to buy stops. So it's institutional buying or selling. And after that, that will to hold not because it's a change in state of delivery, but because it happened after we took out no. I would apply it in the 1 minute, but with a grain of salt. The 1 minute is difficult because you need to know what you're doing and you need to know that, okay, this one is likely to hold not because it's a change in state of delivery, but because it happened after we took out this level, so to say. Like it has to be a higher time frame level. But generally speaking, a change in state of delivery creates a protected low because in order for an order block to create, we need to buy sell stops or sell to buy stops. So it's institutional buying or selling. And after that, that lower high should stay protected as that's where the money is on top of to take the market lower or higher. Like for instance, if we're looking at, let's see, we had this OB which was there. This right here, this down move, that's your order block. This is institutional buying. It's buying the sell stops below this low, right? There's sell side liquidity here. It buys those sell stops and it trades higher. So this low should stay protected. Same idea applies when you have an SMT. This low should stay protected because it made an SMT. On the other asset that made a higher low, that remains. Do I use macro strategy? Yes. Do you find that you can read price way more clearly without all the information from overnight? No. I think if I had to look at the chart like this, it would make things a bit more difficult. You could get used to it and you could find success with it trading only regular trading hours, but I don't have nearly enough experience, look at the CE right here, to be doing that. For me, what happens in London and Asia is really important because it gives me a narrative on what the day is likely to do, you know, how the day is likely to move, what the daily profile is going to be, and also what levels we're going to be looking to tag, essentially. So like, for instance, if we didn't tag the lows from overnight during non-farm payroll this day, and I would have looked at this and seen this regular trading hour gap fill, you could expect maybe more upside. But what if it just keeps breaking down lower because it's looking for the sell side from the electronic trading hours right here, assuming non-farm payroll didn't tag it, you know what I mean? So there's like those aspects to it, which is why I like to keep the electronic trading hours for my analysis, and I'll switch into RTH during the morning session and just see how we move around this area. Do we use it as a support for price? Is it resisting price and not bearish? Is it, you know, after pricing in a discount right here, how is this order block being respected? Because that's the OB that formed inside of there. Those sorts of things. Hey, Kiko, I don't know your name, sorry. My name is Kiko. Have you ended through SSTM thing or related days teachings or anything? No, all of it is bullshit. All of it is just a bunch of bullshit. I wouldn't waste my time with it. Actually, feel free to do whatever you like, anyone here, but I think it's a bunch of bullshit and I think it's a waste of time. Stick with what's simple, stick with what's logical, and don't get too caught up in all of these crazy concepts that people throw around to garner attention for their ego. It's all just a bunch of crap. All you need is open, high, low, close, and some understanding of when the market is likely to expand. So like, if you're looking at the daily candle, let's see if we go to the 4-hour chart, put on electronic trading hours, here's a whole model for you. If you look at the daily chart right here, and you look at this candle, you notice this is the biggest candle, and this candle forms at 10 a.m. So, first question, am I bullish on the day? If the answer is yes, cool. Then, second question, 10 a.m. opens. Do we trade lower first or higher? Do we trade lower? Yes. So then I can buy. That's it. That's a model. Done deal. Right? So all this overcomplicating shit about time cycles and this and that. What Day's done with with his quarterly theory is that he's just happened to overlap his funny little time-based bullshit levels with something completely normal in price, which is how a fucking candle forms. Just open, low, high, close. Every candle has a manipulation. Every candle has an expansion, and every candle has that wick to close. So it's just that. Can you be profitable with only weekly and daily profile from AM Trades PDF? Yes. If you have an entry model, then yes. You're going to the Euros? Man, I don't give a fuck about all of that shit. I don't give two fucking craps about any of that shit. What the hell? I don't got time to be watching no fucking soccer. Especially if Germany's losing 2-1 to Spain, you know what I mean? I saw the results yesterday. I was cooked. Absolutely cooked. I don't have time to watch that sort of stuff. That's why I'm here right now. Stuff. Udgon, fucking get off my app. Let's see. Actually, let's do this. Let's get rid of the middle line. Level. That's the model. So you're looking for a dealing range to be created. You're looking for a fair value gap. Market trades into the fair value gap. You buy the candle that puts in the retracement near 0.5 of the dealing range because we expect expansions at the equilibrium of the range. That's it. That's the model. You trade 950 and 1050 macros or just price action? I like the 950 one. The 950 one is important for me because 950 into 1010 is telling me what that 4-hour open, high, low, close might want to look like. So I'm focused on that bit of price action specifically. If I see SMTs form there, if I see PD arrays form there, if I see levels respected or disrespected, it gives me a clue. The 1050 is sort of like if I'm desperate and I want to have that last late session pull, then I'll maybe look at 1050 to 1110, but mostly for a continuation. So 1050, I'd expect a retracement back into the expansion that we set up at 10, and then 1110 we're looking to move back out of that retracement into new highs, as an example. That's what you would look for there. You too, man. Have a great weekend. I need advice on mastering the 2022 model. I feel like I entered too many false setups. How to find the best ones in the many traps. I only enter the 15-minute clue about supporting the direction, but I still can't enter false trades. I think that SMT checklist out of the setup. Do I really need bias to trade 22 model? You need bias, and you need SMT. I'll tell you why. The 2022 model is this here. This is your 2022 model. Oh, not 2000-minute chart. What you're doing is you're buying the fair value gap that forms at the 0 to 1 of a manipulation leg, or the low risk buy, essentially. Let's make this a bit more sustainable. And so if you don't have SMT to support your cause, you're literally buying the bottom in a downtrend, which is dangerous. You don't want to be doing that. And the next thing is, if you're buying the bottom of a market maker buy model, you need to know if the weekly candle is looking to close like this or not. Because if the weekly candle is looking to close bearish, you're not going to be finding much effectiveness with this model, because a big part of this model is understanding weekly candle wants upside expansion, so I much. If you don't have SMT to support your cause, you're literally buying the bottom in a downtrend, which is dangerous. You don't want to be doing that. And the next thing is, if you're buying the bottom of a market maker buy model, you need to know if the weekly candle is looking to close like this or not. Because if the weekly candle is looking to close bearish, you're not going to be finding much effectiveness with this model, because a big part of this model is understanding weekly candle one's upside expansion, so I can buy the bottoms in a downtrend because they're all just retracements in order to trade higher after. So there it's safe to trade this model. And then you want to confirm that the reversal is in by using SMT. So you definitely need a higher time frame bias, and you also need SMT because otherwise you're going to be buying bottoms nonstop and hoping that it's going to work out. And you need to understand narrative. You need to understand when this model forms. ICT says 8:30 to 11. 8:30 you want to be looking backwards. Where's sell side liquidity or buy side liquidity that hasn't been tapped yet? Do we get a run on it? Yes. So then does this model form? I could probably find it for you on our chart today. Let's see. Let's look at the 5-minute chart. So if we're looking at this, we had SMT at these lows. So we'll presume that the lows were purged. Sell side liquidity purged over here pre 8:30. We're expecting a weekly bullish expansion. So now if this is our manipulation, we're looking for a fair value gap inside that range. Right there is a nice little one in the 5-minute chart. That would be your, it's not very clean, but this would be your 2022 model after we get a shift in market structure. Now this low purged all of this, so you're looking at this high for a shift in market structure. Since it doesn't retrace back to this after taking out this high, I'd go with this one, I suppose, which is no longer the low risk buy because it's a bit higher up, but shift in market structure by breaking out above the high to low that took out these lows, and then market retraces, you buy this and you go higher. Now what if this right here is the buy side objective and the week is supposed to close bearish? You'd be buying the top essentially. You'd be going long right here with your stop maybe there, looking for this high, and what's actually happening is the market's going to keep breaking down lower. You know what I mean? Or if you do the same thing but in inverse, you think that this is your key level and you sell this fair value gap right there that forms, you put your stop above this high and you're looking for this low, you just get stopped out. So understanding where the weekly candle is likely to expand to is a big part of it. What was your biggest winning trade, and can you explain how you manage your emotions and psychology state while in the trade? Biggest winning trade, probably 1250 was the biggest winning trade, but I don't think about emotions. Like, okay, I'll tell them what happened, I journal it in my notes, and then I go play
Another 10 hour, yeah, every day. Bro, I got kind of depressed because I wanted my stream to upload to YouTube the other day, but it never did because it was over 12 hours. So if you stream for over 12 hours, it won't get uploaded as a video. At least that's what I'm pretty sure. And I'm testing that theory today. I'm gonna go like 11 and a half hours. And I'm gonna go like one more hour, and then I'm gonna take a break, and then I'm probably gonna go live later today too. Honestly, and then later today, I just want to backtest, like probably no videos, but I might want to watch a Twitter space or listen to one, and then after that, go to bed and do the same thing tomorrow. I really like doing these. Honestly, I think they're cool. I mean, they're kind of unnecessary, but I mean, I think it's cool. I mean, it's a way for me to grow my channel while still studying, you know, and that's probably the best way to do it. And like, if no one watches them, that's cool, honestly.
Less. To me, it's very, very simple. I don't have any problems with that anymore. So, if the trade's running in my direction, I don't get excited. I don't feel that I need to take something off and make money, because I'm not here to make money. I'm here to trade well, and the money comes as the byproduct. And I also don't get any fear or any nerve-wracking emotions if it's going against me, right? If I'm taking my setup, then I've already accepted that it's gonna fail 40% of the time based on my statistics. So just you let that happen and you just live with it and you move on. More often than not, traders fail on their own, let's say, on their own command rather than the market circumstances. I know a lot of guys who could be consistent, but all they do is fumble with their trades and fuck it up for themselves because they think they can change what's inevitable, and you can't. The market's going to stop you out. Sometimes you're going to lose trades, you're going to win some trades, sometimes you're going to not get filled, sometimes you're going to get filled, and it's just going to chop around, and just live with it. Like, there's nothing you can do about it. Just keep pressing buy or sell on your model and don't think too much about it, because the most damage you can do, you do yourself. The market's not going to do much damage to you if you have risk management setup. My trading setup, check this out. I'll set it up properly again because on this one I've got like,
yeah, for real.
Usually it's 4 layouts. I've got hourly, 15, 4 hour, and then the 15 again on ES. These three. So I'm looking at the daily. Shit. Anyways, I'll also look at these three to see what they are doing. What is it? This is annoying. It shows me exactly, and I can see saying not to be wrong is probably the most common mistake every trader makes, especially in the server. What is one common mistake you find traders doing in the server? Trying not to be wrong is probably the most common mistake every trader makes, especially in the server. Most of you trade, but not because you're extremely passionate about trading or because you love this craft and you want to get good at it. Most of you trade because you want to make money, because that's the image you have of trading, and therefore you equate making money to being a good trader. So when you don't make money, you think you're a bad trader. Therefore, you try everything to prevent losing money. You'll try your hardest to never put on a losing trade, and what you'll inevitably invite is good at, but not because you're extremely passionate about trading or because you love this craft and you want to get good at it. Most of you trade because you want to make money, because that's the image you have of trading, and therefore you equate making money to being a good trader. So when you don't make money, you think you're a bad trader. Therefore, you try everything to prevent losing money. You'll try your hardest to never put on a losing trade, and what you'll inevitably invite is that you only get losing trades. That's what I'd probably say. MMX, I base it usually on the 1 minute. I try to find one on
Are you sleeping? Yeah, I sleep.
the 1 minute, which means I'm keying off of an hourly PD array or a 50-minute PD array. Could you go in depth while we seek fair value? Yes. Okay, I'll give it to you like this. How do I? Oh man, I can make this look so cool, but let me see if I can find like a decent chart. This is a fun topic. Let's see. Yes. Actually, let's look at the hourly. Fair valuation. I'll give it to you like this. Make it its twin. Right. To close. Like this. Move. This wick, and we've delivered buy side on the way up inside of this wick. But the range from this here to there is not efficiently delivered. What does not efficiently delivered mean? Not efficiently delivered means the market was only offered to buyers, right? So buyers took part in this market because we've had this up move, but there was not sell side delivery. And so what usually happens is that the market seeks to balance this range, because if you think about it this way, think of an algorithm whose mission is to offer price at all price levels for all willing market participants, okay? I'll repeat that. Buyers took part in this market because we've had this up move, but there was not sell side delivery. And so what usually happens is that the market seeks to balance this range, because if you think about it this way, think of an algorithm whose mission is to offer price at all price levels for all willing market participants. Okay, I'll repeat that. An algorithm that's looking to offer price at fair value for all market participants. So if that were the case, we offered price to buyers and sellers equally down here and up here inside of these wicks. But here we didn't. So the market will intend to come back down and even this area out. Because if you think about it this way, this here is balanced. I want you to try and, this is a topic that's like very abstract almost in that sense, but I want you to think that after we have this down and up, this here doesn't exist anymore. As in, this bit of price is not being seen at all anymore. It doesn't matter to the algorithm in the sense that this has been balanced. Whereas this here is like an error. It's missing delivery of sell side here. So this is something that's like unfinished business that needs to be taken care of and repriced. Once this range is repriced, only then can the market continue delivering the initial trend. And now that this range is repriced, it becomes balanced. So this doesn't need to be revisited. We can move away from it. And where this starts to get a lot of fun is when you start to apply it to your intraday charts. Let me see if I can find a nice example. Okay, I can show it to you probably on the 1 minute chart. Let's see, let's find ourselves a nice little wick that overlaps a gap. I think we had an example on the hourly even, like not too long ago, but let's see. Yes, looking hideous as always. Like if you look at this here, for instance, this range to me is all balanced price. This range is balanced, right? There is sell side below here, but it's only going to get tagged if we're looking to sweep it to go higher. But this range is balanced because we've delivered sell side and buy side equally. And then we left this range. Now what about this range? From here to there. This is all balanced. We've delivered buy side and we've delivered sell side back into it. But right here, we've got what ICT considers is fair value gap. Now in this range, as we've just outlined, the market seeks to reprice this. This is inefficient. It needs to fill this area because price was offered to buyers and sellers equally at each price point within here and within here, but not here. So it'll come into it and try to offer price. Now, let me see, did we get a run back below this or did we just expand from there? No, we did not. But later on, you'd find that a lot of these levels get revisited for efficient delivery. And you can use this to your advantage when you understand this concept, because if you think about what an order block is. Wait, if I do this often enough, then it should take me back to where.
I trade ICT concepts.
Where I was before I deleted my little app.
But I would say 930 Judas, and then I try to trade Silver Bullet.
Let's pray that it does. Perfect. Okay. After, let's put you there. Let's put you there. Nice. Okay, what is this candle here? Oops. There we go. My God, there's so many questions. Guys, I'm leaving in like 28-minute block. Why do I know that this is an order block? Because we had a run on liquidity. Let's presume there's a sell side right there. And then we traded higher on this next candle and closed above it. If I were to zoom in onto a lower time frame and look what happened inside here, this is what I would see. I would see market trades like that, like this, puts in the low, closes like that. So now, if we look at this right here, this is balanced because we've had buy side and sell side delivery. This right here, this is balanced. We've had buy side delivery, sell side delivery. This swing high, also balanced. We've had buy side delivery and sell side delivery. And then we've got this little segment right here, from there to there actually. This is all balanced, right? Market was delivering buy side and sell side, buy side again, so all of this is balanced. What about those little spaces in between, like this right here? This is not efficiently delivered, right? Because we only delivered sell side. This is not efficiently delivered, and neither is this. ICT talks about this in the sense of a paint roller analogy. If you're using a paint roller and you're like painting the wall, let's say you stroke the wall once like this, then you do the other side like that, and then you do this here, and you start to see these little gaps. You see how there's like a little bit of lighter green here and a little bit of lighter green there. So in order to fix that, you've got to stroke it on the way up again, no homo. And then this bit here that's also not balanced, you've got to take it on the way down again. So this is how you're essentially brushing up and down the market and balancing the range. So if this range is all not balanced, this next up candle, what is it going to do? It's going to go ahead and it's going to trade like this, and it's going to balance this range. Now we've had sell side delivery in these little green boxes, and now we've had buy side delivery there too. So what does all of this become? I'll leave that question. An order block. Yes, but what is it? Boar? BPR, yes, right? It's a bounce range. It's a bounce range because we've delivered sell side on this candle and equal buy side delivery on the next one. So now, if this whole range is balanced, there is no need or necessity for the algorithm, quote unquote, to reprice this area. It's balanced, right? Oops, let me make that, what is that color? There we go. Now what if we trade like this? What if the candle closes like this? Then from there to there, this range is balanced once again. This range isn't. So now the market may want to trade into here, but if this range has been balanced, by the fact that we've delivered sell side and buy side right after, it won't want to trade into this or below it. There's no necessity to. Because if there was a necessity to, it would mean this range would not be balanced. Order block formation is what creates a balanced price range. No necessity. Once again, this range isn't. So now the market may want to trade into here, but if this range has been balanced, by the fact that we've delivered sell side and buy side right after, it won't want to trade into this or below it. There's no necessity to. Because if there was a necessity to, it would mean this range would not be balanced. Order block formation is what creates a balanced price range, right? Balanced because we've delivered sell side and buy side efficiently. So let's say this range now, from this next candle's close, is now unbalanced. Market would seek to do what? Fill out the space and then trade higher. And now that it filled out the space, this range also becomes balanced. So there's no desire to reprice this area as well. And then you can keep dragging that on and along, right? Now from this high to where we close on this candle, we've got a new range where only buy side delivery is commenced. So the market will seek to trade back lower, balance this out, and trade higher again. This is the premise under which we operate. Efficient market delivery. An efficient market does not leave unpainted spots on the wall with the paintbrush. This would be immediate rebalance, right? No, immediate rebalance is, yeah, okay, I'll tell you what an immediate rebalance is. An immediate rebalance is, we have 1, 2, 3, 4, 5, 6, 7, 8. Okay, this is an immediate rebalance. Candle 1 puts in a high. Candle 2 has its low here. If candle 3 were to open right here, like this would make a fair value gap because candle 1 high and candle 2 low are not touching. An immediate rebalance is when there's too much buy side delivery on candle 1 and candle 2 immediately closes the gap. You see that? So what would that look like? It would look like, let's see. It would look like this. Like that, right? Make this like a bit, oops, do that. So you see how we've got candle 1 here, and then there's this soon to become fair value gap because this candle is such a strong up move, which means on this next candle that forms, what the market's going to do is it opens up here. If it were to put in the low here, una momenta, this would create a fair value gap, right? Because now we've got this high and this low not touching. So in order to prevent that, on this third candle that's looking to create a fair value gap, it'll immediately close out the range. It'll balance this. And now this creates a balanced price range because what? We've had buy side delivery here on this move up, and then this next candle opened and immediately canceled out the space. So when the next candle opens right here, this is why I put so much weight on Milo close, because that's all you need. When this next candle opens right here, it doesn't need to go back there. There's nothing here to do because this candle already rebalanced the what was going to be a fair value gap. So the next candle can immediately trade higher. That's an immediate rebalance. Bro, use the paint roller analogy. Don't make me come up with the grass cutting analogy. Will there be a recording? Let's see. Yes, it is still recording. There will be a recording. It will be uploaded to a YouTube account. Let me just drink a bit of water. And there's like a lot of questions. I'd like to ask no one put any more questions in chat until I check everything that's here, because I'd like to leave like 20 minutes. Expect Asia to might consolidate. I wouldn't really focus because the gap is there. Because of how 4 if we oh, you mean accent's not giving away bullshit talking, posing to this right here was a market review for apps so off. It's a beauty. There's a nice one. This right here was an absolute charm to trade. I traded this as well. Can I enter stage? I want to do ICT market review for Friday 05/2024 mentorship. No, you cannot. Go fuck yourself. Does that mean no SMT means no trade? Yes. To me, okay, for me it does. I think SMT is the most important tool because everything you have is just you have a narrative, you have a bias, you have an idea where market wants to go. SMT is the market tipping its hand to you that it now wants to begin that move you've been waiting for. And if it doesn't form the SMT, then it may not want to begin that move that you're waiting for, so to say. Or at a higher time, well, back to already exists. And once you're done with that, you look at your results. You see what the win rate is, you see what the profit, what time it pulls, keep on file. You can put a certain like if you want to close and trade. I can't go inside accurate trade in someone else's eyes, so if you get a losing trade and stuff, all that's doing is it's testing you, essentially testing your gangster, right? It's basically life throwing a curveball at you and seeing how will he react to this. How's he going to take this? And if he takes it the wrong way, he doesn't deserve this, therefore we're going to punish him by not giving it to him. So when you realize that, what happens is that every time you have a mishap in your trading, or you screw up, or you lose a trade, or things like that, all you're going to do is you're going to associate that to, wait a minute, I'm just being tested. So therefore, all you need to do is rewire your brain to brush that off positively rather than take it in negatively. And later on down the road, you're just going to start being more of a better trader because you're not letting your mindset get to you in that sense, and you're just going to keep going with your model, and it's all statistics at the end of the day. So it doesn't really matter. And yeah, focusing on the progress is a big part. A lot of people focus on the trade money goal that they're looking to make rather than focusing on the trade that they're trying to put on, right? Like a lot of people are trading minis in here and the pockets are not deep enough for minis. That's just a bottom line, right? But you want to see a big trade where you make 500, 1,000, 1,500 on one trade so that you can sort of validate yourself by showing, oh yeah, I'm cashing out, I'm getting big money.
True.
And that's the wrong mindset.
Progress, slow progress is better than fast progress. Slow motion better than no motion.
See? I care to share how profitable you are. New here, and at the end of the day, that's a measuring stick in trading. Doesn't need to be in crazy terms. I've achieved a few payouts. That's my level of profitability. I wouldn't put myself in the conversation where I'd say consistent. I consider consistent to be, I can consistently make money out of the market to the point where I do no longer need to work a job anymore. I'm not near that yet. But I'm saying I'm good on the way. And I'd like to challenge you on that. I take no offense, obviously. No need to take offense. I think that the measuring stick in trading is not how profitable someone can be, because I know gamblers who make a lot of money. I'd say the measuring stick in a trader is how well they understand the things that they are learning to a point where they can convey it to others in a simple manner. Like T, for instance, is an incredible educator, and I know as well how he trades, and I've seen his trades, and it's on par with that level of understanding, right? Because he can convey things that are extremely difficult in a simple manner, and therefore you know that his trading capabilities are of that standard and of that level, that he performs very, very well. No problems, man. Have a good weekend. Sasha. Let's see. Will there be a recording? Yes, it's all recorded and it's going to be uploaded to my YouTube channel. Once again, videos you can see content you can study at the top. Everything you need to do this as a business, as a job. So that really core content and a model is all you'd ever need, in my opinion. When you have a good understanding of that, you'll do just fine. And then the rest of it is just, as I said, self-study. You read tape, you think about why things happen the way they do, you get like more insights, things like that, and bit by bit you start to build up a bit more of a knowledge base that you can like fall back on. Yeah, you spend most of your time, you spend a lot of your time, when you're watching the charts is where you do your most learning. Like you can study as much as you want and you can take notes and look at PDFs and look at ICT presentation and core content live, and if it's going to be profitable or if it's going to be a loss. Identify flows like this, value gap, way gaps, breakaway. Expect that the breaker will hold price and you won't be seeing the market trade back into this balance. Consolidation expansion again, I can show you that here. Open. Right here you see the same thing. Expansion, you get these 1, 2, 3, 4, 5, 6 candles where nothing happens. Advice, how do we apply 8:30 a.m. opening to our daily buys? Because the price as an added confluence. Problem. Some of you guys really want to avoid the word. All of them 1, 10, 11, 12. She's near my level. because I'm not gonna miss my trade over 2 ticks just because I'm trying to get the perfect limit. A larger bar. Smart. If let's see, like this. Oh, Nasdaq still wins because ES is just a shitcoin. So I bottom line just advise to trade this asset. Nasdaq.
All right. I'm gonna go over these. Actually, let's look at the charts. Let's look at the charts. Oh my lord! Look how nice that is right now. Look how nice that is. Absolutely disgusting. New day, new week opening gap though. Repriced to perfectly, and then we seek buy side after that, and then we seek the 25% of this doing range. It says 75, but it should be 25. And then we're kind of just meandering around this right here, and then I think we'll seek buy side again today, maybe in the PM. I don't know. I don't have too much conviction with it though. What do we see here though? New day opening gap, expansion, fair value gap, order block right there. We expand to buy side, then we come back down to 75%. There's 5-minute imbalance here. Yeah, 5-minute imbalance right here. We fulfill that. Constantly encroachment that holds. We then get us change of state delivery. These 3 down close candles now represent an order block right here. And I assume that we're likely going to seek buy side here. Do we have a 15-minute? Alright, 15-minute. This just looks like a retracement here to this down close candle. And price. I would use this one, but this one has a big body, so I'm going to use this as the order block. I expect to see continuation here, but again, like the chips on the table aren't very accurate. I mean, fair value gap in, fair value gap out should be bounce price range, and then I'm looking for this buy side, and then we have these stacked highs here too. So I want to see expansion here. So I'm just gonna put this on, and then we'll come back to it later when I go live later again. And I want to see buy side here, and other than that, we'll put it right here so we had it. Then we'll see if this fails or not, and then we will come to terms to see what actually happened. And that's kind of just like my little tape read for the PM session. I actually don't mind it. It's at 230 silver bullets. Let's see if the market has enough time to trade to that. I assume that it might. Overall, very choppy morning, and then 11 a.m. we get better delivery in that 10:50 macro. So 9:50 macro did absolutely nothing. So then 10:50 macro kind of stepped up the game. Yeah, I'll for sure be. I wanna finish these notes, and then I have some notes to complete, and then I'll go live later, because I don't want to go over 12 hours because then my stream will delete. Did I finish these notes? Oh no, I did not finish those ICT notes. Oh wait, this was the other one. All right, yeah. I'm gonna finish this up, and I'm gonna do like a mental log. I'm gonna post that to YouTube. Well, there's always gonna be a left side of the curve. All right, just finish up with them. All right, let's look at price action here. Trade entry just EU and GU both have sell models right now. What is dollar doing? Dollar's respecting that mean threshold of that mitigation. All right. I might end stream. Here. It's been a great. Wait, oh yeah, I was gonna do that mental log. I was gonna do a mental log. All right, we'll go. We'll do one of these. Hold on, I'll be right back. I gotta use the bathroom again. I almost fumbled it because my mic was muted. I said, let's see if I fumble this, and I already fumbled it because my mic's muted. Well, I mental log, which should be like, yo, that's crazy. I just realized I was me for a second. How we doing? If you guys don't know who I am, my name is Caleb, and I've been trading for about a year now. Wait, how long have I been trading? If we go, let's see, senior year of high school, which was 2022. We'll say September of 2022. What's that? That's like a year? Nah, there's no way. I have not. What's good? Welcome to my channel. If you don't know who I am, my name is Caleb. You guys might see me upcoming because I will be live streaming for a lot because I've been trading for about a year and a half, maybe. I don't even know because when I used to trade, I didn't take things seriously, and my whole intent is to take things more serious and to actually get in it because you can be trading for a year, 2 years, 3 years, but if you're not actually putting in the work, then you're not actually trading. And that's like a lot of things in life. If you're not trying, then I wouldn't say that you've started because you start when you actually try. You start whenever you first start to try and actually put in effort. That's when you have first started. And that's kind of like my whole goal in my channel is I just want to try and I want to put in valid effort because I know I'm not where I want to be at right now, but that does not mean I cannot try every single day. That's not mean that I can't get up and I can't still put a valid effort into trying to become that. And I want to kind of just document my journey. That's what I've been doing. I've just been documenting my journey. And one of those ways I want to document is I want to document how I'm doing mentally because I feel like that's one of a big aspect of trading because if you're not there mentally, then you're not likely going to be there with your trading as well. So my approach to trading is I've traded I trade ICT concepts, and whether you like them or not, that's how I trade, and I feel like that doesn't matter. I have been trading ICT concepts for around like 4 to 5 months, and I would say I've known about them more than that. But like I said earlier, I would always say that you start when you actually take things seriously. And since I've actually journaled, since I've actually started backtesting, I would say I've been trading them for around 4 or 3 or even 3 months. So I would say I've been only trading for around 3 months. So all that a year and a half stuff, it doesn't even matter because I would say I've only been trading for 3 months because that's when I've actually started to take it seriously, and I'm trying to take it more serious now. And my whole goal, and this is kind of like my outline, and it's going to be like my first mental log, is to honestly give myself 3 to 4 years because I graduated high school last year, and I have a bunch of friends that are going to college. I have a bunch of people that I know that are in college or in other things. They're going to they're going to community college and going to other schools like that. And I have decided that if I weren't to be going to college, I'd be doing this. And if I were to be going to college, then I'd be spending 4 years of my life around that to not even get a paycheck. So I'm gonna do that same thing of where I'm at to submit to time and submit to the process and submit to the things that things are gonna take. And I know that, hey, I haven't put in work. I know that recently I haven't put in work. I haven't put in work, but that does not mean that I just ultimately get to have it right now. And that's something that I'm just submitting to because I want to be there. Trust me, I want to be there, but I got to put in the work. I got to put in the effort. And that's why I want to do these mental logs to kind of keep on track of where I'm at. No matter what, every single day, get up and be disciplined with it. I kind of did videos like this, but my old videos are so corny. I'll still have them up because I won't delete them because they're just part of me. They're things that I've done. They're choices that I've made. And that's what I always will keep up every video that I post, regardless of whether I like it or not, regardless of whether it's a good or bad video. It was a part of me. And it was a part of my thought process throughout this whole thing. So like I might fully try to abandon this, but I'm gonna keep on going with this. I'm keep on doing mental vlog. This mental checks. This was kind of just the first one, kind of just introduction to them. But yeah, we'll see. We'll see if I stay consistent with this. As always, I'll be live. I'm live every single day, just back testing, studying, and hopefully I'll see you guys there. If not, it's chill. It's chill. It's cool. I wish you all the best of luck, and hopefully I inspire you to maybe do something like this. And that's kind of like my goal, is to inspire others to take action and to embrace the reality of trading, because a lot like people will see, oh, Jim and Nick flexing their Rolex, and they'll see Jim and Nick having a Lamborghini, and then they'll think that they'll just get there all of a sudden. And I just want to have my story out there to just be a testament to what I've done, and maybe that can inspire you to maybe do something. Maybe that can inspire you to maybe document your journey. Maybe that can inspire you to backtest. Maybe that can inspire you to stick to your model. Maybe that can inspire you to do whatever you want to do within trading. But yeah, this is just the first one of many, and I appreciate you guys, and I'll see you guys in the next one. I'm following you from Jordan. Hey, I appreciate it, bro. Jordan, is that from Africa? Jordan, Africa? I'm not gonna lie. There's a majority of people that are from Africa that watch me. That just seems insane to me. So Asia. Oh, my bad. Sorry if that offended you. If it did, I don't know what to say. But if it actually offended you, I'm sorry. We can make up sometime. Oh, I realized that my All right, if we look at the market right now, it's it's kind of as anticipated, and that little. Let me go back to live. I'll do a little like quick what I could maybe potentially see, and then we reclaim this for value gap here. We could get a push up to buy side here, but I'm just gonna stay away from this, and I'm just gonna let Monday set us up for Tuesday and the rest of the week. So we'll see what happens, and we'll see what goes on. Kind of trying to stay away from this, but yeah, I'll be live later today. Or don't count on it for sure, but I probably will be. I'm gonna take a little break here. Been live for 11 hours. 11. It doesn't feel like that. The reason why I'm gonna do like 11-hour streams and then maybe a stream a little later. That's just more centered on just backtesting, but mainly the majority of that AM will probably be just studying, and then the PM will just be like backtesting more. But yeah, I've messed with these streams. They're kind of cool, and I'll be live later. Hopefully, I'll see you guys then. I'll do a market review, and then we'll do maybe just some backtesting of sorts. And yeah, we'll see what happens from there. But anyways, I appreciate you guys, and I'll see you guys in the next one. I appreciate the love. Bro, I got more energy, bro.